come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
England joins nations from Austria to Greece imposing tougher coronavirus restrictions this week. The UK Prime Minister Boris Johnson announced a partial lockdown with pubs, restaurants and non-essential shops to close from Thursday. Meanwhile, a Brexit deal could be secured by mid-November. Bloomberg understands that officials are getting close to breaking the 8-month deadlock over the key sticking point of fishing rights. Well, let's get more with our UK government reporter, Emily Ashton. Emily, thank you so much for joining us. Lots of unhappiness amongst Boris Johnson's MPs. How big a rebellion is he actually facing?
Yes, well, obviously Boris Johnson didn't want to impose the second national lockdown and had said so for weeks, if not months. But the new projections from his scientific committee left him with no choice, he says, because projections show that deaths will continue to rise throughout December and beyond if there's no action taken. So he's going to go to the chamber, the House of Commons this afternoon, and say, look, this second wave is going to produce more deaths if we don't act now. But there is a rump of Conservative MPs that are very anti-lockdown, and there is a big vote on Wednesday, and you will see a number of them vote against it, including people like Sir Graham Brady, who is a very influential Conservative MP, the chair of the 1922 Backbench Committee, who's very concerned about the fundamental rights of people, so they're not going to be able to see their family for a month at least, for example. But I think overall that vote will be able to get through. I think maybe a few Conservative MPs will abstain, but Boris Johnson has the support of the opposition groups, Labour, and he is likely to get this lockdown through.
Emily, thank you so much. And we'll have, of course, plenty more also on Brexit. It does seem like we're a little bit closer to finding an agreement on fisheries. Emily Ashton there, UK government reporter, joining us today. Still with us, Jane Foley from Rabobank. Jane, I don't know what changes your pound, perspective in the shorter term. Does this lockdown make it much more difficult for the Bank of England to set policy on Thursday?
Well, it does make it more difficult. I mean, certainly if we look into Q4 now, if we look ahead, we don't see something that's pretty attractive. And that, of course, goes for all of Europe. If you like, some of the data that we're having today, that the PMIs for October already out of date. You could say the same for last week's GDP data, already out of date, because, of course, since those data, were recorded, the news about Q4 is become a lot worse. Now, for the Bank of England, I think the topic is, will negative interest rates become more likely or not? Now, nobody really wants to go through with negative interest rates. There are risks to negative interest rates, but I think at some point it could be that the economy, if it were to get so sour, it becomes more of a realistic proposition. Now, I don't think that we're there yet, but certainly I think the market will be listening to the rhetoric from the Bank of England this week, from the MPC, to try and gauge whether or not that particular policy has become perhaps a little bit more likely than it was just a couple of weeks ago.
Jane, what does this mean for pound going forward? We also seem to understand, although again it's through sources, and I guess it could always be the reverse, that we're getting towards some kind of deal, especially on fisheries, which mean that we could have an agreement between the UK and the EU on Brexit.
Well, that's exactly right. And to be honest, I think if it wasn't for that news this morning, I think sterling will be a lot lower. I mean, already it's significantly lower against the dollar, but that, of course, is partly a function of dollar strength. If we look at it against the euro, what we have for euro dollar is sterling weakening a bit this morning, of course, on the back of the lockdown news. But euro sterling still at the bottom of the range. And I think that is because there is this hope that by the middle of November, we could have a deal. And of course, the news that we have, the headlines from Bloomberg News today, suggesting that there may have been a little bit of concession made on fisheries, just feeding that optimism. But I use the word optimism perhaps a little bit too lightly, because I do think that there is still going to be a lot of political clouds over sterling over the next 6 months or so. I think if we do get a deal, it's going to be fairly a narrow deal, perhaps not the comprehensive one that people had hoped for a year or so ago. So any scope, I think, for a leaf rally on sterling on that deal is probably going to be limited or short-lived. And then, of course, we've got the possibility of still border disruptions in January. And then as we move into next year, I think we're still going to have a lot of question marks, if you like, about UK politics. We know that Boris Johnson's popularity is low. We've seen recent polls suggesting that if there were an election now, Labour would beat the Tories. So there's going to be questions over perhaps even the future of Boris Johnson and whether or not he can really stay in command over the next year.
Jane, thank you so much. We'll have plenty more, of course, with Jane a little bit later. We'll talk a little bit about the fate of Boris Johnson, Jane Foley of Rabobank, and we'll also talk about China and renminbi. Coming up, Europe's biggest discount carrier says losses are set to worsen this winter. Ryanair's chief executive tells us new coronavirus curbs reflect a failure of government policy. Our interview with Michael O'Leary later this hour. This is Bloomberg.
time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
So we'll have the conversations with the Bank of England in the latter part of this year. And then, we will address our policy around returning capital to shareholders at our year-end results coming up shortly at the beginning of 2021.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Francine Lacroix here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Nexi is closer to its next takeover target. The payments provider has entered into exclusive merger talks with Denmark's Nets. It hopes to reach an agreement for an all-out share deal. It follows Nexi's purchase of SIA for over €4.5 billion. Shares in the firm have nearly doubled since the company's IPO last April. And Ryanair is bracing for deeper losses this winter as a new wave of lockdowns threatens its plan to bring back flights. Europe's biggest discount carrier will only offer 40% of its usual capacity and says that could drop even further. CEO Michael O'Leary criticised the new restrictions, calling them a failure of government policy. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. A lot going on. We have to look at the markets. Of course, it's 24 hours away until the U.S. starts, voting, and so that could really move the markets. Risk assets are kind of a bit all over the place at the moment. It's pretty volatile when it comes to the markets. Coming up, China's economic recovery is going from strength to strength. That's the view of Bloomberg Economics. And next up, we'll focus on the only major economy set to grow GDP this year. That's coming up next. We'll also look at renminbi. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time: is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. A lot going on. Of course, it's tomorrow that the U.S. votes. A lot going on because then we get on to BOE. There's lockdowns in Europe, so we have to look at the market move. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Democratic presidential nominee Joe Biden is warning President Trump against declaring victory before the results are clear. It follows a report in Axios that the president has told associates he plans to claim a win if results show him ahead, even if the outcome isn't really known. Anger is rising across Europe as governments impose new lockdown rules. Protests have erupted in Madrid and other Spanish cities after officials blocked travel from other regions. Austria, Greece and Portugal are following the lead of France and Germany, expanding shutdowns for November. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, China's October PMI fell slightly, while consumer spending helped to lift services output, suggesting the economic recovery remains on track. Now, the manufacturing index is slightly beating consensus. So the more export-oriented Caixin factory index defied expectations by rising, though the pace of expansion in new export orders also slowed. Well, still with us is Jane Foley from Rabobank. Jane, first of all, if you look at your assumption of China, and this is one of the questions that we were asking the IMF, China's better than the rest of the world, but then there's such an export-driven economy that if everyone else is in lockdown and consumer spending goes down elsewhere, can China really sustain it?
Well, China is, of course, trying to stimulate domestic demand. They say that that is going to be a name. But I think you're quite right in pointing this out. Now, what we had, of course, in the third quarter, and we saw this very much so in the US GDP data, but also in European data too, is this big increase in GDP as consumption increased, as retail sales began to recover as well. And that, of course, to help Chinese exporters. But of course, if we go into Q4 again, the story does look a little bit different. That said, China is arguably in a better position than many other countries because of the lack of the virus there, because of this perception that Asia generally, perhaps led by China, is doing better in terms of coping with the virus, allowing a bit more economic freedom in their economies because of the reduced COVID numbers. So it will get some support from there. But yes, I think you're right. I think the optimism with respect to China does have to be tempered because of the more economic restrictions that we're now seeing across Europe.
Jane, when you look at renminbi, what does renminbi do from here?
Well, again, this is quite interesting. I mean, the market consensus is really beginning to gather some pace, which is China is doing better than the rest of the world. Its growth is I think it's the IMF, is the only, as predicted, China will grow, the only major economy that will grow significantly next year, for instance. All of these expectations are really helping the market gather optimism about the Chinese renminbi. But again, I come back to the point where I think it's perhaps a little bit too hasty to assume that there will be less friction if we do have a Biden presidency between the US and China. I think that there will be a lot of deep-rooted suspicions. I do think that Biden or a Biden presidency could be better at drawing alliances with other economies, with other countries against China. And I think perhaps some of the market optimism that we're seeing about the medium-term outlook for the renminbi could be just a little bit too misplaced right now.
Thank you so much, Jane Foley, there with the very latest, of course, on renminbi and, well, all the big currencies that we're watching out for this week. Head of FX strategy there at Rabobank. Now, if you look at the markets and if you have a look at exactly what we're getting out of the UK, we did have some data points out of Europe. This is for the month of October, so I would just take it with a bit of caution because it was before these extra restrictions and extra lockdowns that took place. UK October manufacturing PMI 53.7, preliminary was 53.3. This is for the UK. Also, we did have a glitch on the Stocks Europe 600, and now that was fixed. So the Europe Stock 600 extending gain to around 1% in terms of that gain. So we'll have plenty more, of course, on the markets throughout the day. Now, as the pandemic sweeps the globe and wildfires ravage the West, the only thing that seems to spread faster are conspiracy theories. Pizzagate, the Great Awakening, and mass pedophilia rings. These are just some of the themes associated with what's been known as QAnon, a belief that's been piercing its way through politics since 2017. Now, the idea has amassed a large following ranging from politicians to celebrities and believes there is a deep state working against Donald Trump. So what's being done about these groups and how are they impacting this year's election? Well, Bloomberg's Emily Chang reports.
Mr. President.
Just about 1 year after President Trump's 2016 victory, a hint was dropped on the pseudo-anonymous discussion board known as 4chan that Hillary Clinton's arrest was imminent. Following this unfounded claim, more and more posts appeared by a user named Q Clearance Anonymous that continued to push cryptic content across the platform, ultimately promising to deliver the next big revelation that would bring down the Democratic Party. Since those posts back in 2017, QAnon has continued to evolve into a widespread belief that there are actors in the so-called deep state trying to take down President Trump. The president has repeatedly retweeted QAnon supporters, but has denied knowing much about them.
I don't know really anything about it other than they do supposedly like me.
I just don't know about QAnon.
You do know.
I don't know. No, I don't know. What I do hear about it is they are very strongly against pedophilia, and I agree with that.
Conspiracy theories, a term that became common in the 19th century, have run rampant in the digital age, like fire meeting fuel. But what's so bad about a theory? Well, Facebook, Twitter, and YouTube have all banded together to try and limit QAnon content and other baseless theories that could end up inciting real-world violence. In 2019, the FBI warned conspiracy theories by domestic extremists very likely will emerge, spread, and evolve in the modern information marketplace, occasionally driving both groups and individual extremists to carry out criminal or violent acts. QAnon is just one of the extreme ideologies that have driven some to take the beliefs a step further.
This message right in the truck's window reading, "Release the OIG report," a possible reference to the Hillary Clinton email investigation.
Prosecutors allege that the train engineer admitted to police that he intentionally derailed and crashed it, saying that he was suspicious of the Mercy, believing it had an alternate purpose related to COVID-19 or a government takeover.
Multiple casualties were being told, and police again asking people to stay away from this area.
In an effort to combat misinformation ahead of the election, online platforms continue to remove posts associated with QAnon. But when the lines are blurred between social media and news media, the question remains, when is it moderation and when is it censorship? Emily Chang, Bloomberg, San Francisco.
Coming up, Europe's biggest discount carrier says losses are set to worsen this winter. Ryanair's chief executive tells us new coronavirus curbs reflect a failure of government policy. Our interview with Michael O'Leary is up next, and this is Bloomberg.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
Retail, I think, is strong. We see a lot of people ordering online or going to the grocery store and buying and eating at home. We just don't know what restaurants are going to do this year in the state of Florida, which is the largest consumer of the crab.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, a lot to get through, but first, let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. A new report says UK companies are on average borrowing about 5 times more than usual this year. Consultancy EY says bank lending has already climbed to over £43 billion for the first 8 months of the year. That's up from under £9 billion for 2019. EY says many are unlikely to start reducing the debt until 2022. Now, Westpac has seen plunging profit this year. That's after the Australian lender was hit with a record fine for breaching anti-money laundering laws. It also faced swelling bad loan charges brought on by the coronavirus pandemic. The firm says 2020 was a particularly challenging year. The result is disappointing. And Stonepeak is buying Astound, the 6th largest US cable broadband provider. Private equity firm TPG is selling the company, which serves over 1 million customers, for $8.1 billion. The deal values Astound at around $8,000 per broadband subscriber. Internet providers have done well during the pandemic as more people are staying at home. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, Europe's biggest discount airline says losses are set to worsen this winter. That's as new wave of coronavirus lockdowns frustrates Ryanair's attempts to bring back flights. Well, the chief executive, Michael O'Leary, spoke to Manus Cranney and Anne-Marie Hordern earlier today.
We've reduced our winter schedule to just 40% of prior year. We're kind of guiding for about 38 million passengers for the full year up to the end of March. We think we may have to work that number back slightly. We're running pretty much skeleton schedules for the next month or two. Forward bookings into November were already terrible. So we're not sure these lockdowns will have that much effect on it, although the risk would be to the downside. But they're a continuation of, the failed policies of EU governments for the last 12 months. The WHO themselves have said that lockdowns, are a failure. They should be avoided wherever possible. And they're only useful if you use the time of the lockdown to get your testing system in place, your test and tracing system in place to avoid a second lockdown. And here we have the UK government, the Irish government locking us down again. But if there was a month to be locked down, the month of November would be the best month.
Amory and I spent some time there with Siemens Healthineers. Rapid testing, 15-minute rapid tests. Is that not where we should be seeing our governments spend more of their time and money so that we can move around? Is that not ground zero to get us off the ground?
Absolutely. I mean, I'm not even sure these 15-minute tests, I'm not sure how reliable the 15-minute, the antigen tests will be. But there's no doubt that governments should have used the first lockdown to massively boost their test and trace capacity. Now, Johnson in the UK promised a world-leading test and tracing, but like all of Johnson's promises, including Brexit, they've been in shambles. But, the UK should be testing 5 million people a week, 6 million, tenth of the population. In Ireland, we're testing 100,000 people a day. We should be testing 1 million people a week. And that's the way you chase down the virus. That's the way you get on top of this, not yo-yoing into lockdown, out of lockdown, into lockdown again. This is political mismanagement on a grand scale. And what's missing is that effective, wide-scale testing, where you test typically 10% or 20% of the population each week. That's the way to get rid of these lockdowns.
You strike me this morning with slightly more positive rhetoric. You're going to get through the eye of the storm. What's the double down trade for O'Leary in 2021? What is your big opportunity in this crisis, if there is one at all?
I think the opportunity here is to reprice the aircraft order for the next 5 or 6 years. We're in advanced discussions with Boeing on orders, on order pricing, on compensation. None of those can be concluded until the Boeing MAX goes back into service. And there's been an enormous opportunity, which I think we have worked assiduously at in the last 3 months, which has been to refine the cost base in almost every area of Ryanair. Going forward, as we recover from COVID-19, we will have lower, more productive labour costs, lower airport costs, bigger growth incentives going forward. We'll be able to pass on all those savings to our customers in the form of lower airfares. And I have no doubt in my mind that customers all over Europe, the first thing they will want to do as the lockdowns end and the virus is discovered is go travel again across Europe. Short haul, I think, in Europe will rebound very strongly, and I believe you'll see Ryanair make enormous market share gains in that recovery.
Well, that was the Ryanair Chief Executive Michael O'Leary speaking to us a little bit earlier today. Now let's get some analysis from Siddharth Philippes, our transport reporter in Europe. Sid, great to have you on Bloomberg Surveillance. What exactly right now is the biggest challenge for Ryanair?
Morning, Francine. So the biggest challenge really for Ryanair at this point is trying to figure out when demand is really going to come back. And essentially, they've managed to keep their costs in check, which is why the stock is trading quite higher today compared to the other airlines such as IAG and EasyJet, which are sliding on the new government restrictions in the UK.
So what is Michael O'Leary's outlook, Sid, for the coming months?
So Michael O'Leary is talking about how demand will be lower in the winter season, which is typically the slowest part of the year for airlines. And Ryanair is saying that their losses in the second half would be worse than the 197 million euro loss in the first half, announced this morning.
So, Sid, Ryanair is also challenging rival airline bailouts. So, though some of them actually refute that's a bailout at all, kind of like it could be a loan or something like that. But what's the latest on this?
Yeah, sure. So, Ryanair has been challenging bailouts, including the ones to Lufthansa, Air France, and other carriers in Europe. Their contention is that it distorts the market and it skews the demand for travel, especially when demand returns, and it will allow other airlines to offer flights below cost. That argument's been refuted by other airlines that are saying that they just need the money to survive. Ryanair has filed legal challenges at the European Commission against these bailouts, and it looks to see what really happens from here and whether the EC and the European courts actually allow this to continue or not and crack down on bailouts or not.
Siddharth, thank you so much. Siddharth Philip there joining us from the transport team. Now, coming up, much more. Tomorrow's U.S. election. We'll bring you all the analysis and markets coverage. That's coming up shortly. And this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
A market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm an owl.
You're
I'm not
owl.
a dove. I'm not a hawk. Monetary policy cannot and should not be the only game in town. We are not here to close spreads. This is not the function or the mission of the ECB. We will use any and all flexibility that we have to make sure that our monetary policy is properly transmitted to all jurisdictions. Action had to be taken. An ambitious and coordinated fiscal stance remains critical. Certainly under current circumstances, it is very likely that the full envelope of PEP will be used. This recovery is still today uneven, incomplete and uncertain. We will be looking at everything. Now, in the meantime, we're not going to just stand still.
Well, that was a look back at Christine Lagarde's first year as ECB president. Now let's take a look at what you should be watching out for this week. Of course, it's all about the U.S. election. Later today, we get the latest also U.S. manufacturing PMI data. Tomorrow, of course, is election day in the U.S. On Wednesday, America formally withdraws from the Paris Agreement on climate change. And finally, Thursday is a big day for central banks. The Bank of England is expected to increase bond purchases. The Fed will likely hold steady as well. So we'll have plenty of news to talk about all week. Now, after global equity markets rounded out their worst week since March, investors are gearing up for another volatile stretch. Between the U.S. election and tighter restrictions in Europe, macro risks are certainly dominating. Well, with the very latest is our Danny Berger. Hi, Danny. How are investors actually preparing for the election tomorrow?
Hi, Francine. Yeah, look, this is the situation we find ourselves in 1 day away from the election. Equities are moving higher today, so there's no sense of panic in terms of the day before the voting begins in the U.S., at least on the day of the election. But sources I've been speaking with say that desks really are just hesitant to put any money into the machine right now, that for most investors, they can afford to stay on the sidelines for what could be a very volatile event tomorrow and the ensuing days, and what could be a very expensive day if they are positioned wrongly heading into it. And part of the expensiveness also comes down to the price of hedges at the moment. And we've seen really that play out in markets. Bonds, gold didn't really move too much over the past week as equities sold off. So investors likely cutting and running and not changing their position when it comes to some of those haven assets. In fact, gold, though it's up today, fell last week. Perhaps some yen got a few bids last week, but investors I've been speaking to say that flow is mostly from Japan. So again, you just have investors really waiting on the sideline, not wanting to position around what they think the markets will play out in a Biden or Trump White House. They're not really ready to jump in and make that bet yet, with such a binary outcome possibly taking place.
Danny, for those who are left still playing in the market, what are they actually doing in buying?
So according to Masanari Takada of Nomura, who is left are most likely retail players and some of the swift trading short-term, more quant-oriented strategies. So he says because of that, their buying and selling right now was a lot more noisy than what you'd expect if you had a lot more real money in the market. So not to read too much into what we're seeing during this time when they're leading, at least in the short term. But one consistency in Europe, in the U.S., and in Asian trading sessions over the past few days is that momentum has been getting wrecked. It's these high flyers, bigger names. That's what's been selling off in the market. That could be indicative of retail traders taking profits on some of the more high flyers heading into the election. Also, Takada from Nomura does say that he's seen hedge funds back off to cutting their longs in Europe and the U.S., as well as a lot of CTAs. So those are the trend following quants. They have tended to be selling S&P 500 and NASDAQ 100 futures in these first couple days, or last days rather, heading into the election, Francine.
Danny, thanks so much. Our Danny Berger there with the very latest on positioning on the markets and, of course, what we're all watching for. Now, the markets, there was a bit of a blip earlier on in the trading session with the stocks Europe 600 actually opening with a bit of a delay. But now everything's fine. And if you look at volatility in the markets, let's get that board up so I show you exactly what I'm looking at. Stocks are actually rebounding. Oil pairing some of the retreat that we saw a bit earlier on. And then the other one we need to watch out for is gold. Gold advancing. And then quite a lot to do with pound. Now, pound is on the weaker side, but as Jane Foley was telling us, pound is weaker, but not as much because we're expecting some kind of Brexit deal. Bloomberg surveillance continues in the next hour. Tom Keane joins me out of New York. We'll focus on the election, we'll focus on Brexit, and we'll focus on markets. This is Bloomberg.
You can get a warm burger, soba noodles, even a bowl of
for re-rise. In a city like Tokyo, vending machines seem to be everywhere. There are literally millions in Japan, and it's a big business, selling $44 billion of goods in 2016. With COVID-19, those sales are slowing down, which means getting rid of unprofitable machines. Vending machine sales were already falling even before COVID, with competition from convenience stores that are open 24/7 and have way more options. But there is hope for some of them. About an hour away from central Tokyo is the Retro Vending Machine Park. Here you'll find 50 or so machines side by side selling some quirky items. Turning vending machines into tourist attractions may not be a solution for bigger business, though, since it requires labor and efficient distribution. Saito says it takes 5 people a day to restock his machines, just in time for lunch.
There are unconventional tools, asset purchases, forward guidance that expand what monetary policy can do, but there are some limits. It's important for fiscal policy to fill in that gap.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
U.S. Election Day is tomorrow. President Trump and Joe Biden chase support in key swing states as early voting hits a record. England prepares for a month-long lockdown to combat coronavirus as a partial shutdown begins in Germany today. Italy may be next to reimpose restrictions. Plus, Ryanair says the risks are skewed to the downside as Chief Executive Michael O'Leary calls a new lockdown political mismanagement on a grand scale. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, the focus on the markets. So first of all, there was quite a lot of volatility this morning. Now things are stabilizing a bit. We also had the Fed later. We have the Bank of England on Thursday, but really all eyes on the election tomorrow. And this is not only for the White House, but of course the Senate race as well.
Well, the Senate race as well is a huge mystery. I would suggest over the weekend, yes, that focus got greater. There were some really interesting twists and turns over the weekend, Francine. In the markets, I would say more than anything, the new higher yield regime gets my attention with the 10-year yield out to 0.87%. The dynamics, Monday, Tuesday, maybe it's going to be around the election, but then there's the then what later in the week, Francine, that'll be interesting.
Right. Well, depending on whether it's a contested election or not, that's what I keep on hearing on the markets, that, of course, if it's contested, then we could see a lot of volatility in all sorts of asset classes. And, Tom, of course, it's Brexit, right? There is a bit of news on Brexit, and coupled with, news on extra restrictions in the UK economy, it's kind of giving us a more neutral pound going forward. Now, let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. The presidential campaign is now in its final full day. A series of polls show Democrat Joe Biden leading President Trump nationally and in battleground states. Still, some of those states remain extremely close. Both candidates will campaign today in Pennsylvania. The state is vital to Biden's chances, and it's become almost a must-win state for the president as well. The White House slammed infectious diseases chief Anthony Fauci after he ramped up criticism of the way the coronavirus pandemic was handled. Fauci told the Washington Post the U.S. is, quote, in for a whole lot of hurt from the virus this winter. The White House says it's unacceptable for Fauci to play politics with the issue just days before the election. A new survey of economists say the Federal Reserve won't increase the pace of asset purchases this year or next. More of these polled by Bloomberg said even if the Fed did boost bond buying, it wouldn't meaningfully boost the U.S. economy. Fed policymakers meet Wednesday and Thursday. And Brexit negotiators are moving closer to breaking the impasse over one of the biggest obstacles to a trade deal. A compromise is emerging on the issue of what access boats from the EU will have to British fishing waters. The potential solution would allow Britain to claim it has won back control of its seas. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Equities, bonds, currencies, commodities with a lift to the market, a nice lift in the hour. Futures up 40, but after what we've seen the last number of days, you just have to see where we go on the mood of this election. The VIX with a 40 level comes in sharply, 37.09 on the VIX. As I mentioned, a high yield, a new regime of higher yield, 0.87% on the 10-year. The real yield improves dramatically from that negative 1.00% up to a very solid negative 0.84%. Dollar strength, Kitchuk's just publishing, questioning the future of dollar strength. Francine, I need to know Turkish lira with an 840 print this morning. Not a surprise. It gets my attention.
I was going to say, we have to look at Turkish lira, Tom, because you've been way up front on this and very focused on it. Now, this is what I'm looking at. Look, oil declining as much as 6% before pairing some of the worst slide. I think that's significant, Tom, because it does mean that there's some anxious out there that the world economy will stall. And I would point to, China GDP figures. Sure, they're good, but remember, they export so much to the rest of the world. Then if we go into lockdown and spend less, it could also impact China. Overall, the market is, of course, looking at the U.S. election. It's a crucial week spanning the U.S. election, but also the Federal Reserve policy meeting. We could have extra restrictions on European economies. And of course, we have Bank of England on Thursday. I'm looking at pound retreating as England heads into a tighter lockdown. And then if you look at treasuries, they're pretty much steady, gold advanced. And then I just wanted to show VIX for good measure onto the U.S. election. Now, after a long year of campaigning, more than $14 billion spent in the most expensive election in history, Election Day, yes, in America, is upon us. It's tomorrow. Here's what we heard on the campaign trail this past weekend.
I think it's terrible when we can't know the results of an election the night of the election in a modern-day age of computer. I think it's a terrible thing, and I happen to think it was a terrible decision for our country made by the Supreme Court. I think it was a terrible decision for our country, and I think it's a very dangerous decision.
The president's allies today have been talking quite a bit about maybe declaring victory on Tuesday night, even if the votes aren't final, if he seems to be up ahead. What's your response?
My response is the president's not going to steal this election.
Let's give him an extra 3 days, and let's take all the time you want. People want to know, and bad things happen in places like Pennsylvania and Nevada. We love Nevada, but you have a governor there. Bad things can happen. That little intervening, let's take plenty of time. No, that's a terrible ruling for our country. I don't care. It's a terrible ruling. It's a shame.
The good news is on Tuesday, you can choose change. You can elect Joe Biden. You can elect Kamala Harris. You can choose a better America. And you don't have to wait until Tuesday to cast your ballot, Michigan.
Well, that was President Trump, Joe Biden, and former President Obama over the weekend. So let's get more on U.S. politics. Joining us now is Amy Pope, Chatham House Associate Fellow of U.S. and America's Program, former U.S. Deputy Homeland Security Advisor to President Obama as well. Amy, great to speak to you 24 hours away from the U.S. election, but actually already I think over 90 million people have started voting in the U.S. How likely is it that this election will be inconclusive or contested and that we'll see civil unrest?
It's extremely likely. I mean, right now, the president has already said that he plans to contest the outcome in Pennsylvania. He has his lawyers geared up and ready to go. And as we just heard, he's actively encouraging people to protest, to cause violence, to wreak some havoc. And so in many ways, really, the president is stoking the anxiety rather than calming people and giving people a sense of the democratic process and the importance of a smooth election.
But overall, Amy, if Joe Biden wins by a significant margin, can President Trump still contest the election?
He could. I mean, it depends really on a couple of things. First of all, if it's one state that has enough electoral votes that could really make a difference, that will be a key place for the president to bring litigation. If there are a couple of states that might be in play, that's another strategy he might take. I mean, I think it's unwise if Joe Biden were to win by a landslide, his path forward is pretty limited because you'd have to have courts that would say it's worth pursuing the claim. But there's a lot on the line here. I expect the president to be very aggressive if he's not the winner here and to look for any options that he might have to contest the outcome.
Amy, I want to use your federal expertise here. We usually talk up Chatham House international relations and voting, but I want to rip up the script as we can with the gentle lady from the Ninth Circuit Court working with Justice Wardlaw out on the West Coast. Some serious work in her youth out of Duke Law on immigration and on the criminality along our southern border. Amy Pope, when it goes from the Texas Supreme Court over the weekend to a given federal judge under this time pressure, what actually happens?
So what we'll see here, I mean, there are fundamental questions that are at play, which is absolutely the right to vote and whether or not it was fair, if it's free, if there's any undue pressure. So right now, the courts have the opportunity to review it. I would be very surprised if the federal court took action that's inconsistent. In general, the states have the right to set the way in which their elections function. This is, again, a tension between the state and federal system. But if a state has come up with rules, it's the secretaries of state who govern those rules. And if they've put in place a way for people to vote, the federal courts are going to be really reluctant to disenfranchise the voters.
Yeah, but Amy, is this one federal judge? Is it 3 out of 9 judges on the Ninth Circuit or whatever circuit it is? Or is it just assumption by the federal district judges that it's going to end up at the Supreme Court? What's the machinery here on a Monday evening with all this emotion?
So the federal district court, which is one judge, would consider it in the first instance. It could very quickly be escalated. This is Texas, so it's the Fifth Circuit. It could be escalated to a panel of judges. And of course, it always could be escalated to the Supreme Court, where we'd have the 9 justices. Of course, the President Trump's latest nominee having just been confirmed. So there, Texas is one example, but I'm expecting a lot of these court battles to be playing out over the next couple of days, especially in places like Pennsylvania.
Amy, what exactly are the states that you're looking at? So if President Trump actually loses Florida, is that game over for him?
I think it's very difficult for him to find a way forward if he loses Florida. I mean, the other ones are the ones that we've been talking about for the last 2 years: Michigan, Pennsylvania, Wisconsin. Pennsylvania is particularly interesting because it's already had some issues with the ballots for mail-in voters. Allegheny County, for example, which is where Pittsburgh is located, a number of their ballots did not go out to people on time, about 30,000, I think. And there have been, really interesting questions that leave room for either side to contest the outcome of it. And it's a really important ballot-rich, electoral college-rich state, and so there's likely to be a lot of conflict there.
Okay, but come on, you're from Pittsburgh. You know Pennsylvania, Amy Pope, like the back of your hand. I mean, spanning from Pittsburgh to Philadelphia, Trip Gabriel in the New York Times this weekend saying how important Erie, Pennsylvania is, folks. This is up on Lake Erie. It's a very industrial, Cleveland-like town in industrial decline. In Erie, Pennsylvania, who counts the votes?
That's a good question. I mean, in Erie, Pennsylvania, you still have the county board of supervisors who are going to be counting votes. In every county, that's the way it's going to work. But interestingly, I mean, I was really shocked to see this over the weekend. The Pittsburgh Post-Gazette, Pittsburgh has historically been a strongly blue-collar Democrat town, and the Pittsburgh Post-Gazette endorsed Donald Trump. I mean, I just about fell out of my chair.
I did fall out of my chair, not with an opinion, but folks, this was a shock. Continue.
It's a shock. Yeah. So, I mean, it really shows that there's a changing demographic and political bent within the state. I mean, historically, we've said Pittsburgh and Philadelphia can be counted on to vote for the Democratic candidate, with the middle of the country really going red, really going for the Republicans. But this endorsement suggests that maybe even that is changing, and there are real questions about which way Pennsylvania will go.
Amy, thank you so much. Amy Pope there, Chatham House Associate Fellow of U.S. and the Americas Program and former U.S. Deputy Homeland Security Advisor to President Obama. Of course, we'll have plenty more on the U.S. election throughout the day, and we'll also have a look at what the impact on the markets is. You can also join us on Bloomberg TV for the 2020 presidential election. Special coverage begins tomorrow at 7 p.m. in New York, midnight in London. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua in London. Tom Keene is in New York. Tom, a lot going on. Markets, of course, remain on edge ahead of a crucial week. Later today, we get the latest U.S. manufacturing data. On Tuesday, it's finally election day in the U.S. Thursday, big day for central banks with policy decisions from the Bank of England and the Fed. And then on Friday, it's U.S. jobs report for the month of October. Well, let's get straight to Janet Henry, HSBC Global Chief Economist, to take stock of also what we've heard from China. Janet, always great to speak to you. So thank you so much for coming on. When you see a lot of the data in October, could it be, in the US, in Europe, so be it UK, France, or Germany, do we need to take it with a pinch of salt because everything will change because of the extra restrictions and lockdowns?
Yes, a lot of it we know is looking through the rearview mirror, and in Europe, without a doubt, it's still, we've yet to see the impact of the renewed restrictions that are being put in place on a daily basis across Europe. But I think we can take some encouragement out of, the better data that has come through in Asia, the PMIs, even the better news on the infections in the likes of Australia and New Zealand. And in the US, there's so much uncertainty, not just about what's happening with the election, with the infections, and indeed whatever government's reaction to the infections, that the US, I think the jury's still out there. There's still some attention that can be paid to the data for October.
Janet, given we're in, election week, and we really don't know also what will happen to the Senate, so we don't know what happens to stimulus, and we certainly don't know what happens to a possible lockdown in different states, depending on who's president. How does it, how difficult is it for you to forecast a path forward for the U.S. economy?
Well, it's quite tricky. And obviously, markets themselves, I think at the moment, as long as there's a clear result, they're likely to welcome that rather than something that might be protracted over a period of weeks or months before we get an election. So at the moment, I suppose we broadly incorporated into our forecast a degree of fiscal stimulus just because of what was already going through Congress. But that's already the fact that we haven't had it pre-election, and we may not even get it pre-inauguration, means that increasingly the risks are already to our downside as we enter 2021. You know, I think Europe's more advanced. It's already looking like a number of economies may have a negative Q4 GDP. The US doesn't seem to be in that position. There's so far so much more momentum in the economy, both on the manufacturing and service sector and consumer spending side. But absolutely, once we know the result, there will be revisions to most forecasts when we have a better idea of what's going on going into 2021.
Janet Henry, Tom Keene in New York. Good morning to you. Folks, I'm going to mention this a number of times here on the election. Zero Hedge with a great Bloomberg chart this weekend showing the 9 days before the election of 2016. Janet Henry, it's real simple. We rolled over all the fear before the election in 2016 and then a relative moonshot. What does your crystal ball look like out into January, out into June of next year? Do you assume stimulus and a better global GDP?
Yes, we've got more stimulus virtually everywhere, and both on monetary and fiscal stimulus. And by the middle of next year, we do think that things are going to be improving. But we've always made the point that the easiest part of the recovery is now already over. We had the Q2 shutdown, we had the Q3 bounce back. Even in a world where we didn't necessarily get a second wave, it was always going to get harder, and we were always going to need very accommodative monetary policy and more fiscal stimulus. Now the public health situation in the advanced economies, particularly in Europe, means that it's going to have to be bigger. And in the US, hopefully there'll be a bit more urgency to reach agreement on a fiscal stimulus as we enter 2021, irrespective of the outcome of the election.
I mean, I find it fascinating, and, you know, up we go in fiscal stimulus. How does fiscal stimulus filter into an economy? Is it through C, obviously, consumption, or can business actually pick up from stimulus?
I think it can feed through in a number of different ways. And as economists always like to talk about, its multiplier effects. And I think this is what the market is kind of focusing on at the moment. It's kind of, if we get a Biden presidency, there's going to be bigger infrastructure spending, but we still don't know the timing. If there's a Trump presidency, there's going to be more in the way of tax cuts, which might support consumption. Now, even as we go into, if we do get a full-blown a Biden clean sweep, we would start 2021 with an urgency on relief measures that will provide some relief for companies and a lot of help for consumers and state and local governments. But for the global economy, it might be the next wave of fiscal spending, which might take until much later in 2021, where you get the real infrastructure spending that might be much more supportive for global growth.
Janet Henry with us with HSBC, and of course all the themes wrapped around what we're going to see on stimulus, whether it's in lockdown United Kingdom or in election-focused America. In our next hour, we are thrilled to bring you Dennis Gartman, of course, his affiliation with the University of Akron and always his affiliation with North Carolina State. Dennis Gartman, yes, I'll ask about gold. Don't email in. I'll ask Gartman about gold. I'll ask about going from the lower left to the upper right, and we shall drop something on our foot that hurts. Dennis Gartman in the next hour on America and the election in London. It's gorgeous. This is Bloomberg. Good morning.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio. I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. There's one more sign of high demand for that record-setting Ant Group IPO this week. Bloomberg has learned that institutional investors are buying Ant's Hong Kong shares on the grey market at a 50% premium to the listing price. Retail buyers will be able to trade through a similar channel a day before Ant's debut on Thursday. Oil plunged to a 5-month low. Crude has been hit by falling demand and growing supply. A continued increase in Libyan oil production coincided with a wave of new virus lockdown measures in Europe. Stonepeak Infrastructure Partners has agreed to buy the 6th largest American cable and broadband provider for $8.1 billion. Private equity firm TPG is selling the business called Astound. The firm built it up through a series of acquisitions starting in 2016. And that's your Bloomberg Business Flash. Tom, Francine.
Ritika, thank you so much. So tomorrow it's the U.S. election. Of course, more than 90 million people in the U.S. have already voted, so we need to look at implication for that. Volatility was a little bit high today, and then somehow it stabilized. The focus, of course, is also on what we saw for these restrictions and lockdowns in Europe. I'm looking at pound retreating as England is heading into a tighter lockdown. We also have possibly some positive news out of Brexit, and oil declining as much as 6%, but then pairing the worst of its light on.
Very good. Yields. Well, it's a new higher regime. Let's reset it with a 0.86% 10-year yield after a nice surge on Friday. Curve steepening out to 71 basis points. Coming up after 12 noon, the 1 o'clock hour, David Feynman, very vocal about his United States postal system. Stay with us. A day before the election, this is Bloomberg.
Just the African American community in general, we have a history of having to support each other, right? And so there are opportunities that are presented that we don't often qualify for. So oftentimes we have to turn to our neighbor and turn to people within our community to assist us, to help us.
The Oakland African American Resiliency Relief Program was created to support and fund Black-owned businesses in the city of Oakland. The reason we started this fund due to the systemic racism behind the PPP funds, also how our Black-owned businesses have been marginalized for so long.
I'm standing here right now because we did get the resiliency fund. I only had enough to kind of just pay payroll for a couple of more months, but I said no new initiatives. Now that we have some new initiatives, we have other revenue streams coming in, and that's what's helping to keep things up.
My understanding is that the government is working on both governments are working on the details in the next couple of weeks. So we could I hope that optimistically we can look at, say, December, that we can start operating there.
We explore the trends, investments and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Good morning, everyone. Bloomberg surveillance, of course, an eventful 2 days for all of Bloomberg worldwide. Francine Lacroix in London. I'm Tom Keene in New York. So much other news as well, including the serious lockdown in the United Kingdom and all the ramifications of that. Janet Henry with us, with HSBC here with futures up 40, Dow futures up 360 as well. Janet, I want your thoughts on austerity in this battle over the stimulus to come. Have we broken ourselves free of austerity?
I think we have for now. I can't think of anyone in the world who is advocating austerity. If we get it anywhere, it's more likely to be in the emerging economies because markets have enforced it. But there is no Western leader at the moment that is suggesting cuts in spending now or any time in the next couple of years. There are only so many ways we can deal with debt. And eventually, I'm sure in the Western world, it will be increases in taxation. But austerity in the form of spending cuts, no, I don't think that's on the cards anyway.
I mean, I know you and David Bloom are like a bad episode of The Crown, so I don't want to get into the nitty-gritty here. But David has been resilient dollar. David has been incredibly correct about resilient dollar. Does it finally break? Does HSBC communally say, finally we get weak dollar, as everybody's almost hoping and praying for?
We've actually got a pretty stable dollar, which is still fairly strong.
Agreed.
We're certainly not in the camp that suggests that the dollar is in terminal decline. And I think, we've seen a lot of optimism regarding Europe, and that's important. You can only be negative on the dollar if you think that there's an alternative out there. And there was a lot of good news on Europe, particularly with the recovery fund and the immediate response to the crisis, the central bank working with governments to backstop them effectively. But now the realization that we still haven't got the recovery fund through and that Europe may be going back into basically recession in the final quarter of the year is starting to make people question actually on what kind of firm footing is Europe currently on at the moment. So no, broadly speaking, we're still more positive than most on the outlook for the US dollar.
But Janet, so when you look at Europe, is it the restrictions and the lockdowns that could actually, what does it mean for furlough programs? What kind of European economy will we see in the next 12 months? And are we going to see extra stimulus? Or is it going to be, once again, the ECB having to step in?
Well, I think, we need to remember, as much as we say it's the pandemic that causes the recessions in the economy, it is the measures themselves, the restrictive measures. So the bigger the restrictions, the broader the restrictions on activity, then the deeper the contraction in GDP. So the measures that are being put in place, the relief measures that are still in place in Europe and that, have now been extended in the UK with the furloughing scheme, that is a life support to ensure that the economy is in a position to recover, but we also know there are consequences of that. So, you mentioned 12 months, 12 to 24 months, we're thinking about what is the degree of scarring? How much permanent loss of unemployment is there? How much is investment prevented from coming through? What does that all mean for productivity? And if the longer it takes to get out of this situation, the bigger the damage to the financial sector. So all of that will impact on long-term growth. So the mix of the policy stimulus is crucially important to the long-term outlook, as well as softening the blow from these restrictive measures over the course of the next few months and possibly beyond. And the ECB...
Janet, so we're hearing that we could be nearing a Brexit. Yep. No, go ahead.
No, I was going to say, and on the ECB, a year ago, they were basically telling us that they were largely spent in terms of what was in their toolkit. And like other central banks, they spent most of the last few months saying there's plenty more they can do. And we heard from Lagarde last week that they're going to recalibrate all measures. But it is about backstopping governments with these fiscal measures. So we are in a world that central banks, but increasingly governments, are having to address the weakness in demand that's come through.
Janet, I wanted to also ask you about pound, given that we could be close to a Brexit deal, unclear, but it seems that the signs are that they've agreed something on fisheries. But there's also these extra, restrictions or lockdown light, but actually pretty heavy lockdown in certain places in the UK. So how does that weigh up on what the Bank of England decides on Thursday?
Well, I think there is better news on Brexit. It's not quite what the Bank of England had hoped, which is that a broad, comprehensive trade deal is going to be far from that. But it is still looking like a bare bones trade deal rather than a complete no deal end to the transition period. And I think that has supported the currency. But as you say, it's much more for now about the near term outlook. And as the Bank of England meets on Thursday, nearly all of the data has been a downside surprise. We are now going into a nationwide lockdown in England, and that means that the Bank of England, they probably won't have even incorporated these latest lockdowns. They'll lower their growth, lower their inflation. It seems unequivocal that even the chief economist and chief optimist, Andy Haldane, will most likely vote with the rest of the committee 9-0 vote for more QE, looking for 100 billion. But of course, we'll all be focusing on what is the discussion on negative interest rates.
Janet, thanks so much. Janet Henry, their HSBC Global Chief Economist. Now let's get straight to the Bloomberg First Word News with the very latest. In New York City is Ritika Gupta. Hi, Ritika.
Hi, Francine. President Trump enters the final day of the campaign, hoping for another poll-defying victory. Surveys show the president trailing Joe Biden nationally and in a number of battleground states. Still, the numbers have been tightening in some of those races. Both candidates will be campaigning today in Pennsylvania, where polls show Biden with a slight advantage. Over the weekend, pre-election day voting surpassed 2/3 of all the ballots cast in the 2016 presidential election. Almost 92 million Americans have voted thus far. A majority of states are reporting record early turnout. In the UK, one of Prime Minister Boris Johnson's top ministers says a month-long lockdown for England may have to be extended. Cabinet Officer Minister Michael Gove says the lockdown will be reviewed on December the 2nd, and if the coronavirus data isn't good, the lockdown could continue. Scientists warn that the National Health Service may be overwhelmed by the latest outbreak. And former National Security Advisor agency whistleblower Edward Snowden is applying for Russian citizenship. Snowden and his wife are expecting a baby. He cited the child as motivation to become dual US-Russian citizens. Russian President Vladimir Putin agreed Snowden asylum in 2013 after he revealed highly classified NSA surveillance programs. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Okay, it's an eventful Monday morning. Lots going on. You need a reason to stay with us. Here it is. Without question, our interview of the day at the 6:30 hour. Joining us will be Mohammed Yunus. He is the poller's poller. Mohammed Yunus of Gallup. I can't wait for this interview. We will extend it as long as we can. This day before the presidential election, Mohammed Yunus of Gallup. Stay with us for all our coverage. David Weston, Balance of Power, 12 noon. This is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
Good morning, everyone. Bloomberg surveillance from London, from New York. A most eventful week here, an historic week for America, and of course, the United Kingdom with some substantial lockdown. Francine Lacroix in London. I'm Tom Keene in New York. Right now, to give us broad perspective on this moment for America, Martin Schenker, our Chief Content Officer, joins us. He pulls in all of our reporting across the huge Bloomberg platform, and that includes Washington, where he will set up Fortress Schenker coming up tomorrow night. Marty, when you go down to Washington, what will you look for from our team?
Well, we have to be extremely careful, and it's not just our team. We've sort of canvassed the rest of the news organizations out there, and everybody is going to be extraordinarily cautious about calling any race before we're pretty clear on who has won what.
Okay, who has won what? We've got 93 million, according to the Washington Post. Michael Barr and I are using 92 million this morning. Marty, let's say we get out to 95 million pre-vote, another 50, 60 million vote. How do you call an election Tuesday night at 9 p.m., whatever state, with these mail-in dynamics? I just don't get it.
Well, I mean, Tom, we've written about this. Florida really has tons of experience counting early votes, and they get ahead of it. They're allowed by law to count those votes as they come in. So it's not like they have to count millions of ballots on Election Day. So, for instance, for Florida, we probably will have a pretty good idea how the state went early Tuesday evening, relatively early.
But Marty, overall, what's the, I know it's difficult to say, but how likely is it that we're going to have a contested election unless there's a big gap? If there's a big gap between the candidates, then can President Trump still contest it? And if he contests it, how much social unrest are we going to see?
Well, that's a big concern, right? And Axios reported over the weekend that Donald Trump is contemplating declaring victory before the results are even certified. He denied that, and there were incidents throughout the U.S. of Trump supporters protesting in their cars. So this actually, Francine, your point is well taken. If there is a wide gap, and it could break that way. I mean, Joe Biden could win the battleground states and new ones like Georgia and North Carolina, and it's essentially game over. There's no path for Donald Trump if Joe Biden takes Georgia and North Carolina. So it could be over, no matter what Donald Trump says or does, and a new president will enter the White House on January 20th.
Marty, I know there was also a story in Axios about who Joe Biden, if he became president, could likely put in his cabinet. What do we know about that?
Well, there's lots of speculation, and we've speculated about it at Bloomberg News about Lionel Brainerd being Treasury Secretary. But until I don't think his folks have put in a lot of time and attention to what that cabinet's going to look like. They're concentrated on winning this election, and then they'll move into a cabinet. So all of it is really just speculation at this point. I wouldn't put too much stock in it.
Marty, how do you, with your decades of experience, link elections into future market performance?
Well, I think markets want, a certain degree of confidence in where things are going. That's why in this particular election, the Senate is key. If the Democrats are able to take the Senate, and we may not know that until January, then markets can have a pretty good chance to be confident in the policies that Joe Biden will pursue and pass. If it's a divided Congress, if the Senate stays Republican, then the uncertainty increases and the markets will reflect that.
Well, I mean, Marty, you know this, and Craig Gordon's thrilled about it as the election starts Tuesday night at some point for 2022. I would suggest, Marty, I've never seen an interim election of such importance more than 2 years out than 2022. How do we run a campaign, or how do we cover a campaign starting Wednesday, looking out to November of 2022?
Tom, it's a great point.
It's my only good one of the week, so go with it.
There's a cliche, now comes the hard part, and whoever wins this election, there are enormous problems to be faced in this country leading up to the next election 2 years, and whoever wins and how they handle it is going to be key.
Marty Schenker, thank you so much. And some of the things that we've heard in our different conversations of not only politicians looking at the import now, but looking out 2 years, and particularly the primary elections that you'll see into that election of November 2022. Futures up 42, Dow futures up 385. The VIX comes in, not a point, 37.33. Our election coverage, look for that Tuesday, November 3rd. That would be tomorrow at 7 p.m. David Weston leading our coverage there. Kevin Cirilli, of course, and many, many others helping out as well. And that election coverage, folks, will go well into the morning. I will start early in Europe on my Wednesday as well. In the next hour, looking at the view from the left, Matthew Bennett. He is Senior Vice President, Public Affairs, Third Way. This is Bloomberg. Good morning.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time: is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Tenants like JCPenney and Renault chief traveling to France for fear that Japan could have him extradited. And that's your latest Bloomberg Business Flash. Tom Francine.
Rudiger, thanks so much. Now, England joins nations from Austria to Greece imposing tougher coronavirus restrictions this week. Now, the UK Prime Minister Boris Johnson announced a partial lockdown with pubs, restaurants and non-essential shops to close from Thursday. Meanwhile, Bloomberg understands that officials are also getting close to breaking the 8-month Brexit deadlock over the key sticking points of fishing rights. Well, joining us now is Bloomberg opinion columnist Therese Raphael. Therese, thank you so much. And again, congratulations on all of your great columns that really bring angles that we don't often look at. Overall, we keep on hearing that there could be a rebellion within the Tories because of this second lockdown. Sure, schools remain open, but actually it's a pretty strict restrictions that Boris Johnson is putting in place. Does he need a Brexit deal to make up for that, or are those things completely unrelated?
I think they are related because, up to now there had been an assumption within the government that even if there was no Brexit deal, they could put the blame on the European Union, and that the cost of having no deal would be, small compared to the overall cost of the coronavirus, and people wouldn't notice. I think with the second lockdown, the calculations have to change a little bit. Latest polls show that Britons are unlikely to just put the blame on the EU, as Downing Street might hope. And I think there's probably more pressure now to sort of get something done and over the line than there was before we had the second wave. So I do think they're related. And Johnson does need a victory that he can come and sell to Parliament. Of course, it can't be at any cost, and he will be scrutinized quite heavily. But, maybe it helps him that Nigel Farage has renamed his Brexit party, or seeking to rename it Reform UK. Maybe it means that the Brexit battles are well and truly over, and we are now in the sort of a different era where they debate lockdown rather than how hard or soft a Brexit it is.
But Therese, why is the Prime Minister, up against so much conservative or angst from the Conservative Party about this second lockdown?
I think part of it is because of the messaging. So we had weeks where we first heard that the government's scientific advisors were advising him to go into a circuit breaker lockdown in October. He rejected that. Then we had the opposition leader, Keir Starmer, saying that the country needed a circuit breaker. And Johnson didn't just reject that. He really ridiculed Starmer, said he wanted to turn out the lights on the country, said he wouldn't do that. And so I think the way that the messaging has just flip-flopped has left a lot of conservatives thinking that this government is making it up on the fly, and that they're handing victories unnecessarily to the Labour Party. And then there's, of course, concern over the economy and the very deep and real costs of lockdown, and the question of whether this government has an exit strategy, which is, I think, the thing we're going to hear them ask over and over again in Parliament today.
Therese, even in the United States, where there's what I'll call more conservative areas, the push come to shove for politicians is hospitalizations. As an outsider, I've been thunderstruck how in the United Kingdom, politicians are not talking about hospitalization ratios. Are they bad?
Well, I think they're talking about them increasingly now as hospitalization rates go up. So, I mean, in terms of the percentage of intensive care beds that are occupied, they've been fairly stable over time, but there are increased rates of hospitalization. They've been, they've gone up quite substantially, and that is one of the things that has really given Boris Johnson pause, not in the increased rates of infection. So I think we are hearing that, and ultimately the reason we're going into lockdown in England is because of the NHS, because of fears that it will be overwhelmed. Even the surge capacity. So it's driving policy here.
Okay, thank you. That's really important. But do we have transparency in the United Kingdom over countable beds, countable ventilators, percents, et cetera, or is it a mystery held by the NHS?
I mean, I think they're pretty good at publishing statistics on ICU bed occupancies and surge capacity. What we don't know, and I think this is, again, the thing that we're going to get, we're going to hear from conservatives quite a lot, is what is the government's modeling? On what basis has it decided, for example, that, church services can't take place or weddings can't take place? We talked about the 10 p.m. curfew that's now gone by the wayside. What was the evidence for that? It clearly didn't work. So I think, in some areas the government has been very transparent about data, in other areas less so. The government talks about more nurses, but staffing in the NHS is still very low, and that's been a problem.
Therese, thank you so much. A nice update there on a lockdown. For those of you looking at this movable feast, nation to nation has been an extraordinary few weeks. You really wonder where it will be. I see the language. Mr. Gove, I noted, saying fervent hope. Hope is always a challenge in medicine. We hope you need a data check. Futures up 53. They advanced. 3317 is the level on SPX. Dow up almost 500 points, 26,862, and the VIX now in a full stick, 36.84. We'll have to watch the VIX carefully here as well. Turkish lira out to 8. It's moving so fast, I don't even know my numbers, let alone where the decimal point goes. 8.40 on Turkish lira. 3 standard deviations, I just calculated at 8.54, so maybe that's a point of tension. Always good at tensions in the market. Dennis Gartman in our next hour. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen
And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
This morning, markets, they attempt to find a bid, a shift in yields higher, inflation expectations too, but does anyone care? Well, they're called draconian new measures. In the United Kingdom, there is, quote, fervent hope to end a new national lockdown. Meanwhile, in South Dakota, 421 are hospitalized. In Sioux Falls football, Lincoln beats Washington on the final play of the game. And this Monday, well, it is the final play for Biden and Trump. Trump and Biden, 92 million plus have already voted. A battle over should mail-in votes be counted, a battle over the future of the nation. And yes, everyone does care. Good morning, everyone. Bloomberg surveillance from New York, from London as well. Francine Lacroix and Tom Keene, thrilled you're with us as we begin an exciting 48 hours. David Weston leading our very international coverage here on election night. Kevin Cirilli, I think, got 2 hours sleep off an Eagles-Cowboys trouncing, I should say, Francine. But Francine, just to be blunt, this is exciting.
Well, it is exciting, Tom. This is what, a lot of journalists, market participants, and even voters live for, right? It's a big deal because it could also sway the markets. I would say what the markets at the moment are worried about is that there's not a clear election, that it will be, days, if not longer, to understand exactly who the winner is. And so there will be maybe added volatility as we go on to that election. It's also could be a contested election, and that would have market implications. So we're trying to figure out, Tom, if there's a margin by which the president doesn't contest it if he loses, or whether if he loses and that doesn't get contested. Yeah. So there's a million possibilities, and certainly we'll be ready with whatever happens.
I don't mean to be keeper of the zeitgeist, but clearly in the last 12 hours, folks, there's a feeling that in the popular vote, which Mrs. Clinton won last time around, there's a greater expansion of the popular vote in polling towards Joe Biden, and that Donald Trump lags there. Maybe a little more than he did, but that's not the swing states, and that's not the electoral vote. So, Francine,
it's the electoral college.
Yeah, the electoral college is where the action is at, and that doesn't even begin to discuss the idea of a Biden presidency, a Republican Senate, a Republican presidency, a Republican Senate. There's a lot up in the air here right now. I think we need a Monday briefing with our first read news in New York City. Here's Ritika Gupta.
Always.
Morning, Tom, Francine. Yes, the presidential campaign is now in its final full day. A series of polls show Democrat Joe Biden leading President Trump nationally and in some of those battleground states. Still, some of those states do remain extremely close. Both candidates will campaign today in Pennsylvania. The state is vital to Biden's chances, and it's become almost a must-win state for the president. The White House slammed infectious diseases chief Anthony Fauci after he ramped up criticism of the way the coronavirus pandemic was handled. Fauci told the Washington Post the U.S. is, quote, in for a whole lot of hurt from the virus this winter. The White House says it's unacceptable for Fauci to play politics with the issue just days before the election. Brexit negotiators are moving closer to breaking the impasse over one of the biggest obstacles to a trade deal. A compromise is emerging on the issue of what access boats from the EU will have to British fishing waters. The potential solution would allow Britain to claim it has won back control of its seas. And hedge fund billionaire Ray Dalio thinks the Chinese yuan is on track to becoming a reserve currency like the US dollar. Dalio spoke to Bloomberg at the Hong Kong FinTech Week.
You're starting to see the development of capital markets in China that are open to foreign investors. You're starting to see, you will see the internationalization of the renminbi. You will see opening capital markets. You'll see the development of the financial center. I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects.
And we'll hear more from Ray Dalio later in the hour. Global news 24 hours a day on air, and a Bloomberg Quick Take powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika, thanks so much. Let me look at the data right now, and it's real simple. We've got a lift off of the carnage of the last couple days. The uncertainty that we've seen in the markets, very much like the uncertainty into the election of 2016. Futures up 48, Dow futures up 435. The VIX in a stick. We had a 36 handle moments ago, 37.10. Dollar strength, and it's very important here, 94 level on DXY. That's a big deal. 104.73 on yen. I would note Turkish lira moments ago out to new weakness. I'll have to check that chart in a moment. 8.41. I did 3 standard deviations, a volcanic move on weaker lira, and you got to go out to 8.54 to get that ugly statistic. We are nowhere near there yet. Francine, other than that, I would note, excuse me, a 33 handle on West Texas Intermediate early in the Asia morning. Right now, West Texas 34.85. Right.
Yes, I was going to actually spend a bit of time, Tom, looking at WTI and Brent falling since mid-October and definitely, declining at some point in WTI as much as 6%, and then it paired the worst of the slide. So crude prices, paired losses, which were really sparked by concern that tougher lockdowns will dent economic growth. So those concerns could also impact, for example, China GDP longer term. You're right to say that treasuries were pretty much steady. Gold advanced. Remember, this week is a crucial week, not only the U.S. elections, but of course, a Federal Reserve policy meeting. We also have Bank of England on Thursday. And then I want to look at pound because of the extra restrictions on the UK economy. But we also hear from our sources that we could be closer to a Brexit deal. So you can see pound actually moving, but by not as much as it could be. Currently at 129.19 against the dollar.
Joining us right now, Dennis Gartman. On this day before the election, it's wonderful to speak to Mr. Gartman. Of course, never retired from the Gartman letter, the daily grind that he did for years. And a given 10 pages of the Gartman letter, the last 3 or 4 pages in the back were on the political state of this nation. Dennis, I'd really like to focus on the backside of the acclaimed Gartman letter right now. It is an historic election. It is like 1800. It's like 1824. We somehow survive these, don't we?
We will survive. My wife and I argue every night about who's going to win the election. She's an overt Trump supporter. I am a very quiet, nascent Trump supporter. We argue each night as to who's going to win. Right now, I think that the game has changed a little bit in the last couple hours, actually the last couple days, especially in the senatorial races. Looks like Joni Ernst is going to win in Iowa. Tom Tillis probably is going to win in North Carolina. At least the numbers are in his favor. Looks like Lindsey Graham is going to carry South Carolina. It's going to be very difficult for the Democrats to carry the Senate, which a week ago, almost everybody was talking about the fact that the Democrats could sweep the Senate and have a majority. That looks like it's gone by the wayside. And the president is doing a little bit better. So there's a greater sense of, for lack of a better term, really at this point. Yes, this is a very, very important election. Probably
Is the same gridlock that we've had for 4 years or a newer, different gridlock good for markets?
Well, I'm a great fan of gridlock. As I like to say, the government can't do anything. And if they can't do anything, they can't hurt me when they're gridlocked. But we do need to see some sort of infrastructure spending. We'll probably get that after the election is finalized, after the details of the various votes from the various states, the Electoral College are finalized. We'll get some infrastructure spending. But I'm still a great fan of gridlock. I hope that we have a gridlocked government, a Republican Senate, a Democratic House, and we'll see who wins the presidency at this point. But I think gridlock is a greater propensity, or greater likelihood than we had just a half ago.
But Dennis, why gridlock? I mean, if you have gridlock, it means that you can't really get stimulus spending, or at least that could be curtailed. I mean, why is gridlock, in your opinion, a good idea when you're facing one of the biggest crises, certainly in healthcare, that's translating into the economy of our lifetime?
Francine, we'll get spending, an infrastructure, a relief program of some sort after the election is finalized. Whether we have gridlock or not, that's almost a given. We can't go. Neither side wins if we do nothing. Both sides lose if we do nothing. And so some sort of spending program shall come out. It depends on how large it will be. $1 trillion here, $1 trillion there, as we used to say. So pretty soon you're talking about real money. That will happen. The great question over healthcare, that's up for. But still, I'm a great fan. I'll go to my deathbed saying I'm a fan of gridlock because you can't do anything to harm me. Okay. Spending, will we get some tax relief? Yes.
But Dennis. Yeah, I don't mean to interrupt, but then why don't we have a stimulus now? I mean, it's in both parties' interest to get a stimulus. We have an election tomorrow and no stimulus, and people need stimulus.
I just think it's because the election, nobody wanted to give the other team a vote of confidence. And once the election is behind us, they'll sit down and realize that both teams are going to lose. So nobody wanted to give the other team a win. Both sides wanted to give the other team a loss. Now that that's over, finalized, we'll get spending.
Dennis, reaffirm gold. And are you buying gold in Turkish lira, or is it gold in dollars?
I still like the gold market, not nearly as much as I did 2.5 months ago. I reduced my gold position dramatically. But I think over the course of the next year, 2 years, 3 years, gold will be 5, 10, 15% higher than it is right now, simply because the monetary authorities, whether it's here in the States, Canada, Europe, Japan, China, Russia, all are going to be stimulative, all are going to be expansion. No choice but to be so, and that shall send the gold price not dramatically higher, but quietly and consistently higher, moving from the lower left to the upper right.
There we go. That's what I needed to hear. Dennis Gartman, thank you so much. Chairman of the University of Akron's Endowment Investment Fund. He wrote a newsletter of acclaim here for a number of years. Mr. Gartman joins us from his Virginia. Coming up on Bloomberg Surveillance, well, there's lots to talk about. I don't know what to promote here. David Weston's important balance of power here, 2 days to the election. How about Michael Shaul of Marketfield Asset Management, a very thoughtful voice on the market. What will the market be doing the first Wednesday of November? Stay with us. Futures up large, 47. This is Bloomberg.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Everybody knows the COVID epidemic is certainly a
major thing in the whole world, also certainly in China. And so this has served as an accelerator for our business.
I think it's terrible when we can't know the results of an election the night of the election in a modern-day age of computer. I think it's a terrible thing, and I happen to think it was a terrible decision for our country made by the Supreme Court. I think it was a terrible decision for our country, and I think it's a very dangerous decision.
The president's allies today have been talking quite a bit about maybe declaring victory on Tuesday night, even if the votes aren't final, if he seems to be up ahead. What's your response?
My response is the president's not going to steal this election.
Let's give him an extra 3 days, and let's take all the time you want. You know, people want to know, and you know, bad things happen in places like Pennsylvania and Nevada. We love Nevada, but you have a governor there. Bad things can happen. That little intervening, let's take plenty of time. No, that's a terrible ruling for our country. I don't care. It's a terrible ruling. It's a shame.
The good news is on Tuesday, you can choose change. You can elect Joe Biden. You can elect Kamala Harris. You can choose a better America. And you don't have to wait until Tuesday to cast your ballot, Michigan.
A wonderful sense of the weekend there from our team, piecing together some of the moments seen across the entire weekend here in America. We welcome all of you worldwide and across this nation. Bloomberg Surveillance, Francine Lacroix and Tom Keene, and very importantly, a team that has tried to put together an eclectic set of voices with perspective. When you are 23 years old and you go down in flames, not as your fault, but you're a 23-year-old kid helping people help themselves, things are supposed to go well. They didn't for Matthew Bennett. He was involved very tangentially with the Dukakis tank photo of Another Time and Place. He vaulted out of that train wreck to a prestigious career in law and in Democratic politics, of course, helping Clinton and Gore. And we're thrilled that Matthew Bennett could join us today, Senior Vice President with Third Way, and truly one of the co-founders of a group looking particularly at gun safety and violence in America. Matthew, good morning to you. I really want to just rip up the script here, Matthew, and say that once again we see a primal call of East Coast media, East Coast elites, maybe the people in the selected urban areas around the country in battle against a more rural, conservative America who says, we don't buy it. How does Mr. Biden in the closing hours get the marginal voter skeptical?
Well, I'm not sure I agree with the premise. I mean, I think if you look at the things that voters have been telling us through polling and through their votes in 2018, they're disgusted with the direction the country has taken, not just on the East Coast, not just in the suburbs and in the cities, but all over the place. And what I think the Biden campaign has done very successfully from the very beginning is prosecute the case against President Trump, that he has failed. He has failed the country profoundly, and most profoundly around coronavirus. And so I think that's going to resonate much more broadly than just the East Coast.
I'll take your point. There's no question about it. When you look at the polling of the national vote, I think we can state, folks, as a virtual fact that Mr. Biden's doing better than Secretary Clinton did 4 years ago. But in those battleground states, as Dennis Gartman just mentioned, it has tightened up. Describe your view of how those states have tightened up.
Yeah, I mean, what you've seen in the places like Michigan and Wisconsin, Pennsylvania is somewhat of a tightening, but you've had Biden carrying a lead consistently throughout this election. And generally what you see with polling, first of all, the polling, I think, is much better this time than it was in 2016. The pollsters kind of learned their lesson about what they got wrong. But generally, a poll can be wrong, or a couple of polls can be wrong, but generally not all of the polls can be wrong. And there hasn't been a poll showing Trump ahead in those states really since the general election began. And that probably means that on the whole, they're accurate, even if one or two are off a little bit. But look, those are just snapshots in time, and we're going to find out soon enough whether they're right.
Give me a sense, Matthew, and good morning from London. Give me a sense of all those early votes. So over 90 million. I think we're counting about 93 million according to press reports. Who are those people? Is it people that didn't vote in 2016? Is it, is a lot new voters? Is it Republicans? Is it Democrats? Do we have any way of knowing?
Right. Going into this, the expectation was that the early vote would be very heavily Democrats who had voted before, because the Democratic Party and Biden have been telling people vote early, vote by mail, avoid any possible disruptions on Election Day or fear of coronavirus. And that was the expectation. But what we found is a huge surge in new and first-time voters. In North Carolina, more than 1 million people have voted that did not vote in 2016. In part, that's because North Carolina has grown a lot since 2016. There have been people that have come into the state. It's true in places like Texas also. But nobody expected this enormous surge in first-time voters. And most pundits would tell you they think that's going to benefit Biden, that there's not a whole bunch of people who are coming out to vote for the first time who are going to be voting for the incumbent. And so that could be a very significant dynamic in this huge early vote.
Matthew, what exactly are the states that you're watching out for? I know we've talked about Pennsylvania, Michigan, there's Texas, Florida, but is there one that will really give us an indication early on of which way this is going?
Well, the problem for people staying up tomorrow night is that the three major battlegrounds we've discussed, Wisconsin, Michigan, and Pennsylvania, all have rules that say that the vote by mail, which has been huge, as we noted, can't be processed until tomorrow morning at the earliest. And so it's going to take them a very long time to count the vote in those three states because of those state rules. But in places like Texas and Florida and Georgia and North Carolina, they can process, and they have been processing those absentee ballots. They haven't counted them, but they've looked to see if the signatures are appropriate and those kinds of things, and the stuff that takes a really long time. So when the polls close in Florida, Texas, Georgia, North Carolina, pretty quickly we'll have an idea of who won in those places. And if Biden wins in any of them, then it's a pretty good sign that he's going to win the election.
I got a million more questions. We'll do it again. Matthew Bennett, thank you so much with Third Way this morning, this day before the election. Futures up 49, Dow futures up 444. And the VIX 37.09. We see an improving tape this morning. Yields come in just a little bit. Don't want to oversell that 0.86%. And unraveling again in Turkish lira, really off the radar, but nevertheless there it is, 8.42. European yields are mixed as well. Our election coverage, 2020, the presidential election special. We look for that at 7 p.m. Tomorrow night with David Weston. This is Bloomberg. Good morning.
There isn't anything about trading that is more central to your success than accepting the risk. So wrote Mark Douglas in Trading in the Zone. But how do traders accept the risk? They apply good risk management. They never lose more than a very small percentage of their capital on a single trade. They protect what they have, concentrate on capital preservation and don't get hung up on making money, and they never let their ego, emotions, fear or greed get the better of them.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. There's one more sign of high demand for that record-setting Ant Group IPO this week. Bloomberg has learned that institutional investors are buying Ant's Hong Kong shares on the grey market at a 50% premium to the listing price. Retail buyers will be able to trade through a similar channel a day before Ant's debut on Thursday. Oil plunged to a 5-month low. Crude has been hit by falling demand and growing supply. A continued increase in Libyan oil production coincided with a wave of new virus lockdown measures in Europe. And that's your latest Bloomberg Business Flash. Tom, Francine.
Ritika, thank you so much. It's a busy week, to say the least. We have the U.S. elections, then we have the Fed, we also have the Bank of England, so let's have a look at what the markets are focusing on. Now, we could see increased volatility. This is coming through a lot of notes that I'm reading from banks in saying, look, watch out for the election, watch out also for a possible contestation from either side, really, but maybe more on the incumbent. U.S. futures climbing, oil sliding to a 5-month low, and then I'm also looking at pound because there's an extra lockdown in the UK, but also because, Tom, there's, of course, news that we could have a Brexit deal.
Yeah, very good. Futures up 52. Coming up, without question, my interview of the day, this day before the election. Mohammed Yunus will join us from the Gallup polling organization. This is Bloomberg. Stay with us.
So we'll have the conversations with the Bank of England in the latter part of this year, and then, yeah, we will address our policy around returning capital to shareholders at our year-end results coming up shortly at the beginning of 2021.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. Futures lift up 48 points right now. This is, without question, my interview of the day. Mohammed Yunus is with Gallup. For those of you of a younger issue, it's real simple. They invented polling. It goes back to a seismic change when FDR beat Alf Landon 1,000,000 years ago. They came out of the Midwest with statistical acuity, and they have owned the high ground on polling, which is now, of course, a frenzy of the statistical nation. Mohammed Yunus joins us, their editor-in-chief. Mohammed, I want to go right to the negatives, and that it appears that Mr. Biden is doing better than Secretary Clinton did. Is it because he's least liked than Hillary Clinton was least liked?
That's a great question. Favorability is absolutely critical. What we find this year is that with likely voters, Biden has a 52% favorability rating. Secretary Clinton, at the same moment with those same demographic likely voters, was at 43%. So he beats her just by 9 points there. Compared to President Trump, he's at 43% favorability with likely voters. That's a slight improvement from where we were in 2016 with President Trump, where he only had a 39% favorability rating. But Tom, you nailed it. As we move into these cycles, really since President Obama, we are now facing a series of elections where candidates tend to have a lower favorability rating than they did in generations past, where favorability ratings tended to be very high. The other really interesting statistic just on that point is that when you ask Democrats who plan to vote for Biden, whether they're voting for President Biden or voting so that President Trump is removed from power, that breaks down to about a 52 to 48 breakdown. People voting for Biden that support him versus people that want to see the president removed. That's common, though, because when an incumbent is in office, it's always about whether or not you want the incumbent to continue.
The gentleman from Iowa, the late George Gallup, I'm sure would roll over in his grave if he looked at Real Clear Politics or any of the other compendiums of what he wrought. Mohammed, you've got to look at it as well. One of the salient things here is Gallup has walked away from doing battleground state polling. Why have you walked away from that? Is it because you can't trust the polls in the individual state races?
That's such a great question, Tom. Actually, Dr. Gallup's obsession with presidential predictions for the elections was simply an attempt to get people to focus on whether or not his sampling methods were accurate. And he said this later in his life, that it was really sort of a public experiment, a dichotomous outcome where people cared. His real passion was that leaders could make better decisions if they have accurate, reliable data and know what their people are thinking. We continue to be committed to the gold standard. We haven't done state polls in quite a while. It is very challenging to replicate two polls in the same state just because the sampling is really tough to do. That being said, we continue to poll on a national level, and we've seen some record-breaking numbers in this cycle compared going all the way back to the 60s and even 50s. So, for example, enthusiasm is very high this year. When you ask Americans whether or not they're more or less enthusiastic for this election than others, 69% of Americans overall say they are very enthusiastic to participate in this election. We haven't seen that number really since 2008 when Barack Obama was elected president. When you look at Republicans and Democrats on that, there's a 9-point difference between Democrats, 75% enthusiasm, and Republicans at 66%. So there's a 9-point gap. It's interesting, though, to note that in 2008, that gap, now 9 points in favor of Democrats, was actually 15 points in favor of Democrats. So we don't see the gap that we saw just before President Obama was elected, but certainly a gap in enthusiasm. The other thing that is really unique this time is asking whether or not people are fearful about the election outcome if their candidate doesn't win. Today in America, 64% of registered voters say they're fearful about the outcome if their candidate doesn't win. Republicans, Democrats, basically the same, but that's a rate higher than we've seen in the past.
Mohammed, what do you mean by the outcome? They're worried about social unrest, or they're worried about policies being put in place by the team that they don't support?
So essentially, they're worried about what will happen in the country if their candidate is not elected president. I think this gets to a lot of the talk about unrest after the election, concern about the finality of the outcome. We see a significant level of apprehension among Americans about this outcome. We haven't seen this metric in the 60s really ever. In 1996, 35% of Americans had that same level of concern. Today, it's 64%. And it is bipartisan. We also know that the most important topic on the minds of Americans going into this election is COVID. The president gets a 40% approval rating on how he's handled the crisis. His approval rating overall is 46%. Usually, an incumbent wants to be closer to that 50% mark. This will be a really interesting election because it will truly test whether or not somebody right there in the mid-40s can win re-election, because we have not seen that historically in the past.
Mohammed, talk to me about the 93 million votes that have already happened, the early voting, which I think is about 65 or 67% of the total votes in 2016. Do you have any insight into what those early votes are?
Absolutely. So you can actually track. Some states allow a reporting of whether or not the vote was from a registered Democrat or Republican. So in those states, you can see. One thing that's really interesting is that we did see a very strong Democrat-leaning interest to vote earlier on in the cycle. That's actually waned a little bit. Republicans have become more involved in the early voting process, at least according to our polls. So we really see sort of an evening out there. The key with the vote, of course, is Americans are voting differently than they ever have in the past in this election. That only raises the apprehension, as in your previous segment, of how quickly these votes can really be counted. In some states, they can't be counted until tomorrow. But we are definitely seeing the votes in terms of volume coming in early, matching up really with our traditional metric, which is the thought given to the election. When we see people's thought given to the election being higher, historically, we've seen a higher turnout in vote.
Mohammed, over the weekend, any number of ways to cut this. I thought the coverage, folks, from everyone, including Bloomberg, was just superb. Mohammed, over the weekend, really a focus on the Latino vote. What is a Gallup take on it with the Latino mood, the character, the distinction here versus 4 years ago?
Well, President Trump has really, and the Republican Party have really made a big deal about the Latino vote. A lot of claims that Latinos were sort of warming to the Republican Party, the GOP. We've tested that several times in the past few months with our approval rating. We haven't seen that necessarily. The Latino vote is one of the most diverse, of course, in the United States. It's one of the most difficult to make generalizations about. It looks very different in Florida than, for example, where I grew up in Southern California and Los Angeles. I think ultimately it is, again, going to be about turnout. The appointment of the Supreme Court justice, of course, was a really important move for the Catholic vote, as many GOP analysts have pointed out. It doesn't seem that that's become sort of a major issue on the minds of folks going to vote, because there's just so much more happening in the economy, in the country, and in politics. So I would shy away from making any kind of presumptions about where the Latino vote will be. I think it'll be a state-by-state reality. Right.
Mohammed, wonderful. Mohammed Yunus, thank you so much. Editor-in-Chief for Gallup as well. Our election coverage tomorrow night beginning at 7 p.m. David Weston leading that coverage. With our news in New York City, here's Ritika Gupta.
Thanks, Tom. Over the weekend, pre-election day voting surpassed 2/3 of all the ballots cast in the 2016 presidential election. Almost 92 million Americans have voted so far. A majority of states are reporting record early turnout. In the UK, one of Prime Minister Boris Johnson's top ministers say a month-long lockdown for England may have to be extended. Cabinet Officer Minister Michael Gove says the lockdown will be reviewed on December the 2nd, and if the coronavirus data isn't good, the lockdown could continue. Scientists warn that the National Health Service may be overwhelmed by the latest outbreak. Former National Security Agency whistleblower Edward Snowden is applying for Russian citizenship. Snowden and his wife are expecting a baby. He cited the child as motivation to become dual US-Russian citizens. Russian President Vladimir Putin granted Snowden asylum in 2013 after he revealed highly classified NSA surveillance programs. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. Now, coming up next, Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. We track COVID-19 one day before the U.S. election. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, as we continue to track COVID-19, of course, Bloomberg has developed this unique partnership with the leading authority on the disease, and Johns Hopkins has been at the forefront of the international response. And every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. Lauren, I have a million questions about people that are symptomatic and spreading the disease, about the treatments that work and not. But if you look at the national lockdowns in Europe and in certain states in the US, are we just biding time until we get a vaccine? Is this the only true way of getting a handle on this pandemic?
I think the vaccine is going to be probably upfront as one of the most important tools that we can have. The key to the vaccine, though, is making sure that people take it and trust it, and possibly may need to take it multiple times, like a flu vaccine, depending on the type of vaccine that ultimately becomes developed and used. So I think the vaccine is absolutely the number one priority right now. But I also think that we'll learn a lot more in the next year or so about the virus, because we'll see the seasonality of it. We'll see how people become reinfected, or if they become reinfected regularly, and how their immunity wanes. And that'll tell us a lot about how we're going to manage this virus moving forward.
Lauren, I want to talk to you about what I observed on Instagram this weekend. I really don't look at Instagram, folks, but people in the house do as well. And come on, everybody's partying it up, and I get it with family, you can bend the rules. But I see a massive amount of society basically doing what Camus said late in the book. The truth is, everyone is bored. How bored are we, and what does it mean for adults like you?
I think people are bored, and I think people are tired of the restrictions. That being said, I think now is not the time to let that boredom get the best of you, and to let your guard down. We're entering into winter. We're entering into flu season, respiratory virus season, and we're going to have to be indoors a lot more. And as you can see from the lockdowns that Francine just mentioned, cases are rising, and people are having to go back into these restrictions. I saw the same thing, and it was really concerning and a little bit demoralizing for all of us who are working so hard to try and protect people from the pandemic, from the virus, and everyone's exhausted. And so I think it's important to note that when people behave this way, they're not just making decisions about themselves, they're making decisions about their community members, about their friends and their colleagues, and about the healthcare workers who ultimately are going to have to treat and manage these surging cases.
Lauren, how do you explain these surging cases? We spoke to one specialist who was saying about 70% of people could actually be asymptomatic. If we don't test those people, then are we going to be in lockdown forever?
Yeah, I think the other side of that coin that we were talking about at the beginning is testing, right? So understanding what our denominator is so important. And I think in the U.S., we just haven't really gotten a strong hold on testing, a systematic approach across the country, even still. We do have better testing than we did in the beginning of the pandemic, but we need testing to understand how we manage exposure and how we manage quarantine and isolation. And so, part of the surging cases are really that behavior, that sort of lax behavior, but part of it is understanding those asymptomatic infections, or pre-symptomatic infections. So people who have either mild illness or haven't gotten sick yet. And so how to mitigate those people's behavior so that they don't go on to create, clusters of cases and possibly larger scale outbreaks in communities that may otherwise have the virus under control. So the testing piece of that is absolutely key, because there are elements of pre-symptomatic and asymptomatic infection that can't really be controlled any other way, especially if people don't know that they are infected.
Lauren, thank you so much. Lauren Sauer there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg terminal for the latest information. You can also tune in every day for our exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up later today, David Feynman, former USPS chair. That's at 1:30 p.m. in New York. That's 6:30 p.m. in London. And this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe. This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Now, a lot to talk about on the markets, and the Bridgewater Associates founder and co-chief investment officer Ray Dalio said the yuan will become a reserve currency faster than current expectations. Well, he spoke exclusively with Bloomberg's David Ingles at the Hong Kong FinTech Week.
That move puts money into the system, devalues the currency, and causes stocks, gold, and other reflation assets to go up. So that's what we're seeing. And so when you look at history of those, there were three major currency empires. The Dutch and the Dutch guilder, followed by the British and the British pound, and the U.S. and the U.S. dollar. And they have to do with which are the largest trading countries, because they bring their money around the world. And there's that cycle. And that cycle now is having China is now the largest trading country. And you're starting to see the development of capital markets in China that are open to foreign investors. You're starting to see, you will see the internationalization of the renminbi. You will see opening capital markets. You'll see the development of the financial center. That is all part of that pattern that's happened over and over again. I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. So if we were to take the next 5 years, the question is, what is the storehold of wealth in the meantime? And that's why you're seeing the movement into other financial assets.
One thing that constantly comes up, with the world looking to start increasing their exposure to China, I mean, it's an issue with some, it's not an issue with everybody, is the debt issue. And obviously part of that progress, there has been, a decent amount of debt that's been built up. Do you think, Ray, China has a debt problem?
The basic rule of a debt problem is it in your own currency or not? If it's in your own currency, there are lots of ways of dealing with it. You can restructure it, you can monetize it. If you take a debt, typical write-down of debt is something like 30 or 40%. If you take that debt, you put it on the government's balance sheet, and you write it down at 2% a year, it's not a problem. You renegotiate the interest rate. If you can control it in your own currency, it's all manageable. Japan is a good example of that. So, no, I don't believe that it has an unmanageable debt situation.
Do you think the policymaking structure, one-party system, to a large extent, the low risk that policy does not change every couple of years, do you think that sets China or gives China an advantage over the United States?
It certainly has a lot of benefits, right? It has the benefit of first of all, they can hire quality leadership. It's not a random popularity contest. And then it's run, I would say, like a company's run. You know, it is a big corporation has the leadership and that process being run. And so it does lend itself. Let's say handling COVID, for example, was, I think, exemplified the ability to have order, have behaviors. People are not fighting with each other, and it becomes as disorderly as democracies. In conflict periods or stressful periods, there are those advantages. But like Plato pointed out, there are these cycles, you know, and over a long period of time, no system lasts forever.
You mentioned earlier that the world is structurally underweight China. How do you make that work, and how do you make that work without overstepping, obviously, into parts of the market that perhaps in China that aren't as mature yet?
When I look at China and the opening up of the markets, I do know that I have to have a significant portion of my portfolio there, just like I have to have a significant portion in the United States and so on. But the interest rate differentials are favorable. The growth rate differentials are favorable. A big element is going to be order, internal order. So far, that's pretty favorable. So when I look at it, it's that element of diversification and then make the comparison. I'd much rather own, for example, Chinese bonds than to own U.S. bonds. The currency, I think you're going to have favorable capital flows as they open up. So for those reasons, tactically as well as diversification-wise, I would do that. But it's not just in China and the United States. There's a whole world out there. In the Asia-Pacific region.
Well, that was Bridgewater Associates founder and co-chief investment officer speaking exclusively with Bloomberg's David Inglis. Now, the market's focused, of course, on what's happening in China. We did have some better than expected figures, but we also need to mention that, first of all, it's a big week for central banks. It's not all about the U.S. election. There's the Fed and there's the Bank of England. So a crucial week for equity markets. Oil declining at some point as much as 6% before pairing worst of the slide.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
It looks like we're heading towards a double dip.
The consumer is very nervous.
We could be in for, a prolonged correction.
The duration of any sell-off is as important as the magnitude of that sell-off.
What we need is central bank keeping stability in financial markets.
Policy in the United States on the fiscal side continues to come up short.
We don't have safe havens anymore.
I find it difficult to build a portfolio that I think will be truly robust to every possible outcome.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Monday morning, equity futures with a bid. Tom Keene, 24 hours to go.
24 hours to go. Very, very exciting. Of course, we'll have coverage here on surveillance and, of course, on all John's properties and across all of Bloomberg as well in the next 24 hours. But, John, let's be honest. We're not going to know where we are Tuesday night. Let's call it less than likely. Maybe somebody can disagree with me on that. We're going to go into Wednesday, and John, we may go into November to get to a successful outcome.
That's the issue. That's the risk for this market and has been for the last couple of months, that maybe we don't get a result on Wednesday morning. The other issue this market is grappling with at the moment, Tom, is the breakdown of traditional correlations. Last week was brutal for the equity market. You got no comfort from the bond market, and I think that's the story through the week as well.
Same as well. Bonds really don't move today, 8.86% on yield. It's a higher yield set off of the weekend, off Friday and into the weekend, I should say. But right now, John's correct, a less than correlated market. John, I would note the absolute stasis in strong dollar. The single digit on my screen is DXY, that blended big company index against the dollar, 94.03. That's a strong dollar.
We've got to talk about that euro, that weaker euro over last week as well. Lisa, the economic data in Europe set to get worse. We had manufacturing PMIs tomorrow, services tomorrow rather, manufacturing today. And the outlook for this continent at the moment, Lisa, lockdowns in France, lockdowns in Germany, and the United Kingdom now with England joining the party, and it ain't much of a party this coming Wednesday.
No, it's brutal. And the Financial Times did a survey of economists, and they showed that they actually are now predicting a contraction in the fourth quarter for most Eurozone economies after previously predicting that there would be an expansion. We'll get a read in the United States as well. 9:45 a.m. you get U.S. October manufacturing PMIs, followed by the ISM figures at 10 a.m. But really, it is a convictionless set of data trying to mine the future, looking at the past at a time of a very fast-moving virus. Meanwhile, it really is all about the election. Today, Joe Biden is holding events in Cleveland and Pennsylvania, a key state, to Tom's point, that will not probably be decided for several days at least. And also, President Trump holding 5 rallies in 4 key states, North Carolina, Pennsylvania, Michigan, and Wisconsin. Very interesting to see how he tries to rally the troops. Remember, a lot of the early voting tended to lean toward Joe Biden, this according to a number of polls, whereas the day of voting, people are expecting more Republicans to turn out. A key aspect here, but really, this feels like a convictionless market in a pivotal week for a lot of countries. John Farrell.
Convictionless, Lisa, you're right. Adding to that is just the conditioning that we got 4 years ago, Tom, around the polls. We've been covering this for months now, but you can really feel it 24 hours out. The arguments and debates out there over this polling has really ramped up in the last day?
Well, there's two pollings. One is the polling. Mohammed Yunus was with us with Gallup in the last hour. I thought he was absolutely outstanding about original polls in the national vote clearly show Mr. Biden more likable than Mrs. Clinton was 4 years ago. And then, John, there's a state by state. But the other polling going, John, is the market voting. And it'll be fascinating to see with the fear angst that we're in right now, do you get a moonshot out of the election as we saw in 2016?
Well, here's the price action this Monday morning. Good morning to you all. Let me whip through things for you. Last week, down 5.5% on the S&P 500. Worst week since spring. This morning's the bounce back, up 44 points on the S&P 500. We are elevated by 1.36%. Futures with a bid. Treasuries with a very subtle move lower on the yield on the 10-year, down just a basis point to 0.86%. Last week, up about 3 basis points, even with the equity market sell-off. On the month of October, last month, a move of almost 20 basis points higher on a US 10-year yield. Tom mentioned the dollar. Here's the euro. Euro dollar 116.51. Some real problems across the continent. England joining the lockdown. That will happen Wednesday overnight into Thursday. Make it the UK, France, Germany. Who's next? That's the conversation in Europe right now. Let's begin the conversation on Bloomberg Surveillance with Michael Schau, Market Field Asset Management CEO and Portfolio Manager. Michael, fantastic to catch up with you, sir. We'll start with a simple one. How on earth do you navigate the next 24 hours for this market?
I think with no great certainty, we don't know who's going to win the election. I think that it looks likely that Biden will win. Not clear that the Democrats will take the Senate. And what's even less clear is what the market's immediate reaction will be. So, I'm still of the mindset that there are certain things that seem to be happening globally. There is a cyclical rebound in durable goods. Led by the U.S. and Asia, and I think that will continue, whoever wins the White House, and pretty much everything else, I think you simply have to say you don't know and deal with not knowing.
That's where I wanted to go, Michael. I wanted to get away from, the domestic politics. We'll do that with some other good guests here this morning. Michael, I'm fascinated by what you think about EM in what seems to be not a surge, but just a resiliency and up to EM. Why is that occurring?
Well, it's two stories. One is index composition. The emerging market index is now absolutely dominated by Asia, particularly South Korea, Taiwan, China, and obviously Chinese listed in Hong Kong. Those countries are really the least affected large economies by COVID directly. So you have stable domestic demand. They also feed in, heavily into technology and heavy industrial activity. And that remains the strongest part of the domestic U.S. economy. So, for various reasons, this time around, EM is something of a haven, and the underlying currencies are strong. I heard your comments on the dollar. I would say the dollar is less weak at 94 rather than strong at 94. But the currencies which have really been strong this year have been the Asian currencies. You put all of that together, EM is a relatively safe place to be right now.
Michael, what's more important for your investment thesis right now, the U.S. election or the path of the virus?
I would say the latter, and I would say the impact of the latter on demand for durable goods. Because that has been, as I say, the big plus of the last few months has been the resilience and, in fact, latterly the acceleration of spending on durable goods in the face of a virus which has not been under control, certainly in the United States.
Michael, what do you see in the high-frequency data at the moment, and do you think that should drive risk assets in the United States?
I think it's less important than it was. I mean, the high-frequency data told us in the springtime that people were starting to, engage in commerce again. I think, I don't think it's as important today, the fluctuations that you see in something like restaurant usage. I think that you're at the point that you do need a leap of faith to invest at this point in time. I think you're entitled to say that the virus is not going to be conquered for the foreseeable future, and the European economy is going to turn turtle, and you're going to go super defensive. I think that would be a mistake. Or you're entitled to say that we've come this far, and we've seen patterns of spending emerge from the virus that look to be resilient and look to be fairly long-lasting. And, a narrow portfolio that focuses on the positives, I hate to say it, the positives of the virus, probably makes sense going forward.
I want to bring up ADXY, folks. This is a really important series. This is basically Pacific Rim currencies, Asia currencies, less Japan as well. And the chart, I hope we get it up here, goes back to the beginning of the year. And I look, Michael Scholl, at ADXY. That's not the right chart, folks. We'll get it for you here in a bit. But it's basically been a moonshot. Within that, what's the specificity in the Pacific Rim? There it is. Up we go off of the March low. For those of you on radio, it's a moonshot from March straight up on the Asian currency. Good morning, Michael Purvis. Michael Scholl, what is the specificity on the Pacific Rim? I want you to get granular here. Do you buy big cap? Do you buy consumer? What do you buy?
I think index level, Korea, Taiwan, both quite interesting. And I've always felt that the A shares, for all of their faults, and they have many, many faults, are the only sort of true diversifier of portfolios. The A market does whatever it wants to do and doesn't pay a great deal of attention to the rest of the world. But I think high quality Korean and Taiwan, do make sense right now.
Michael Scholl of Marketfield Asset Management. Michael, great to catch up with you, sir. Thank you very much. In just a moment, a little bit later on this programme, we'll catch up with Kevin Cirilli down in Washington, D.C. as we count you down to that election day. Dare I say election day result, Tom Keene? That's what we've been discussing over the last 2 months now. Yeah. Will we actually get one come Wednesday morning? Well,
Wednesday morning, at 10 o'clock at night you start in. I thought the Times had a great breakdown of actually hour by hour, even half hour by half hour, what we see through Tuesday evening. David Weston with our coverage there. But, John, I tell you, you get out to 11 p.m., 1 a.m., Wednesday time, then what? Nobody has a clue what the then what is.
Well, Axios reporting that the President, Tom, has told Confidence that maybe he'll declare victory Tuesday night if it looks like he's ahead, even if the electoral outcome hasn't been decided and even if we haven't heard from some of the major states. Tom, that just speaks to the tension at the moment. And I've got to say, even here in London, I can really feel it. The building tension on either side going into this result, going into this final day of voting.
John, thank you so much for bringing this up. Folks, I had this conversation with Afterthought at the dining room table Saturday night. Look, this is America. It's normal. 1800, 1824, 1879, and on and on and on. John, this is the normal cadence. Granted, with the media and the social media, it's in our face. I'll take that point. But it's normal to have close battle elections in America.
Everyone, Lisa, is imagining dinner with Tom Keene as his youngest daughter.
Wait, let me reframe this. Okay,
and
let me reframe this.
You are confronted with that rant on a Saturday night. Wonderful stuff.
It was helped because in honor of Sir Sean Connery, we drank Vespers all weekend.
Listen, I actually think that this is a different election than what we've had in the past, Tom. Yes, this is normal to have dissonance, but the level of social unrest on all sides is something very concerning for a lot of people. And you could see people battening down the hatches in the markets, and you could see the windows boarded up in Midtown because people are expecting some sort of unrest should the election be too close to call. Yeah. This does feel different a little bit, so.
I'm going to let you have the final word, Tom. You wanted to talk. Do you want to say anything?
No, you had the mute button on. I thought she was talking Arsenal, Manchester United. I don't.
Yeah, we'll talk.
We can find space later in the hour. It's a really quiet week, Tom. We'll talk football a little bit later in the programme. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Futures up 46.
Destined.
We advanced this morning. Good morning to you all. This is Bloomberg.
Tots. Destined.
With the First Word News, I'm Rishka Gupta. The presidential campaign is now in its final full day. A series of polls show Democrat Joe Biden leading President Trump nationally and in battleground states. Still, some of those states remain extremely close. Both candidates will campaign today in Pennsylvania. The state is vital to Biden's chances, and it's become almost a must-win for the president as well. And President Trump is suggesting he may fire infectious diseases chief Anthony Fauci after the election. Over the weekend, Fauci told the Washington Post the U.S. is, quote, in for a whole lot of hurt from the coronavirus this winter. There were chants of fire Fauci at a Trump rally in Florida last night, and the president hinted he may do that once the election's over. A new survey of economists say the Federal Reserve won't increase the pace of asset purchase this year or next. Most of those polled by Bloomberg said even if the Fed did boost bond buying, it wouldn't meaningfully boost the U.S. economy. Fed policymakers meet Wednesday and Thursday. Brexit negotiators are moving closer to breaking the impasse over one of the biggest obstacles to a trade deal. A compromise is emerging on the issue of what access boats from the EU will have to British fishing waters. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I think it's a terrible thing when ballots can be collected after an election. I think it's a terrible thing when people or states are allowed to tabulate ballots for a long period of time after the election is over.
There's nothing he can do to try to intimidate the American people about voting, scare people about voting, challenge the idea that votes aren't going to count if they've been mailed in. It's not going to happen. 90 million people, as of this morning, already voted. 90 million. The American people are going to be heard.
The early voting has been absolutely incredible in the United States. President Trump and Joe Biden on a contested election. Just speaking to where some of the tension is. 48 hours to go. Let's get to the price action of this morning. Good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 2 hours and 12 minutes out from the opening bell. Futures nicely bid. We're firmer this Monday morning. We bounced back from last week's losses. On the week last week, down 5.64% on the S&P 500. Tech. It was brutal for tech, and since the September high, we're down about 8 or 9% from that record high. At 44 this morning, we advanced 1.3%. Not much price action to speak of elsewhere in foreign exchange and in the bond market right now, not at least on the euro and a US 10-year. But Tom, crude, 34 handle on WTI.
Yeah.
Last week was ugly. This morning, we add to it. We shave another 2.74% off WTI.
7 p.m. last night, early Asia trading, John, a 33 handle on American oil. That got my attention, to say the least. Right now in the election, there's any number of ways to go with our Kevin Cirilli, but he's told us we need to keep it to 7 minutes or something like that instead of 7 hours. He is our chief Washington correspondent. Kevin, I thought there's tons of good research out there. Trip Gabriel of the New York Times did a great job on not the battleground states, but the battleground counties. And they went to Erie, Pennsylvania, where one strategist called it the Oracle of Pennsylvania. Now, we know Cirilli is the Oracle of Pennsylvania. Hillary Clinton lost 11 percentage points off President Obama in the last election. Is your research that Mr. Biden can narrow that gap in Erie, Pennsylvania, Oracle?
Well, I was struck yesterday by the strategy of the Biden campaign to hold events in Philadelphia and suburban Philadelphia, where he's still trying to get out the vote effort. Now, look, it really is a tale of how you look at this. From the Democratic perspective, they're saying that he's taking a more steady approach, not barnstorming around the country like President Trump is, and that he's really focused on Pennsylvania, where his campaign is headquartered, to turn it around. From the Democratic perspective, they're looking at it and saying Joe Biden should have PA locked up by now, but that fracking gaffe from the last debate really hurting him. In contrast, the president traveling to Iowa, the Hawkeye state. Democrats say the president should have Iowa locked up by now. Republicans say that President Trump is better for Senator Joni Ernst at the top of the ticket in order to protect the Senate. So this is a lot closer than the national polls are indicating. Right. But it really depends on how these states break.
And, you know, we always want to attribute folks. In my little brain right now on a Monday post Sean Connery Martinis can't figure this out. I read somewhere that somebody's talking, Kevin Cirilli, about President Biden would not have Sanders or the senator from Massachusetts in his cabinet. I mean, does he need to make some bold statement today about seizing the middle ground of his administration to go over the top?
I think that what his campaign would tell you is that he has been able to draw a widespread coalition spanning from the likes of Senator Bernie Sanders, the father of the Democratic Socialist
Kevin,
movement,
he doesn't need Bernie Sanders to win. Stop. He needs to take Pittsburgh.
He needs John Kasich. He needs people, and that's what I would argue, is that he's also been able to put together a coalition with former Republican Governor John Kasich. But the question is that good enough? Is that good enough for the union workers outside of the collar counties, not just of Philly, but Detroit, Michigan? I go to Wisconsin, where this thing is a nail-biter, and you go to Kenosha County. You mentioned counties. Kenosha County, obviously the site over the summer of some racial unrest. Kenosha County, something that President Trump won by just 200 votes last cycle. This obviously also ground zero of sorts for many of the economic issues that we're talking about repeatedly over the past couple of months. So again, could this be an electoral blowout for Joe Biden? Yeah, but it also could be one for President Trump if you look at just how close these swing states are.
Kevin, let's fold in Wall Street. Every single piece of research I've read over the last several weeks all reflects on 2016 and the polls. Can you walk me through your comparison between 2020 polls and 2016?
Well, I think that Joe Biden ran and is running a campaign from the beginning of his political career, even before he announced that he was going to start this cycle. The calculation was run a blue collar type of coalition campaign. Don't try not to go too far to the left. He feels that he was able to tap into that with Senator Kamala Harris. He has been defined by the right as going too far to the left. So we'll have to wait and see if that's a strategy that worked. Progressives will tell you that he should have doubled down and moved to the left like Bernie Sanders. But I think if you're pricing out the next 2 months here, we've got cases on the rise, and if you subscribe to the thought that Germany, France, and now conservative UK are having to have new restrictions, that would raise some significant political risk that the United States has additional restrictions in December at a time in which fiscal stimulus fights will be restarting up. So I would argue that from a market perspective, it's divorced upon the volatility of this week, dare I say next week as well on the election.
And Kevin, it's not just the election of the president, but also very much the Senate. And some people would argue that may be more important when it comes to Wall Street and the potential move in markets following the election. Where are we in terms of the supposed blue wave in the Senate?
Well, I would totally agree that the Senate race and who wins control of the Senate is going to be really the definition of whether or not President Trump in a second term is able to govern with a more middle of the road approach, but also obviously, of course, a first term President Biden. If President Biden hypothetically, and I hate doing hypotheticals, but let's say he gets a blue wave, he's going to have to govern more progressively. But if it's a divided government, then he would argue that a mandate said for him to do this. Ticket splitting, I think we're going to hear a lot about this. There were 34 Senate races, or 34 Senate races back in 2016. All of them, Lisa, all of them, the way the state voted at the top of the ticket was how they voted for the Senate. So this idea of ticket splitting in Georgia, in South Carolina, in North Carolina, where Republicans, Iowa, where Republicans are starting to say, vote for me even if you don't vote for President Trump. Historically speaking, in modern times, that really hasn't been the case. But we'll see if it's a game changer this week.
Kevin Cerulli, working on his birthday. It's a beautiful thing. We made him come in. Kevin, happy birthday.
Thank you.
Happy birthday.
Nowhere else I'd rather be.
You did a good job.
On a day like today.
You did a good job, Kevin. I agree. This is where I'd like to be too, on my birthday as well. I think everyone would want to spend their birthday on this programme. Kevin, thank you. We appreciate it.
Is that a new banner? Everyone wants to be on surveillance.
Everyone should want to spend their birthday with Tom Keene. Getting excited about our special election coverage 2020, beginning Tuesday night, 7 p.m. Coming up. Are you going to be there for that one, Tom?
Today?
Are you going to bed early?
Yes.
How are you managing the Tuesday night into Wednesday morning,
I haven't
Tom?
figured that out. I'll be
do?
starting with Francine seriously early in the morning. John, I haven't figured. I mean, you're only on TV 2 hours a day, so what do you know? But
I will get up.
Early.
Have a long lie-in, go to the gym, have a nice big breakfast.
Yeah, a little
Watch
English.
you get up even earlier.
Porridge.
Yeah,
Awesome.
I'll be having crackers and
scrambled
water.
eggs. From London and New York, this is Bloomberg.
This pandemic will see more countries be willing to elect female leaders.
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity. Trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
There are unconventional tools, asset purchases, forward guidance that expand what monetary policy can do, but there are some limits. It's important for fiscal policy to fill in that gap.
From London and New York, this is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Monday morning price action looks a little something like this. A nice lift to this equity market, bouncing back for some brutal losses last week, up 43 on the S&P 500. We advance 1.31% in the bond market. Yields up Friday. That has got to hurt. We'll talk about that in a moment. Yields right now, 0.86% on 10s. We come in a single basis point. And the euro, stable. Euro dollar 116.50. Last week, dollar strength. Euro weakness as lockdowns in Europe took a hammer to this market. Take a listen to what Howard Ward, Gabelli Fund CIO of Growth Equities, had to say.
The biggest risk to the economic forecast and to the bullish outlook for stocks was that we weren't going to follow the science. We wouldn't stick with it, and it would come back. And that is exactly what has happened.
That's what's happening in the United States. What's happened in Europe is one step further, Tom. Restrictions, lockdowns, France, Germany, now the entire United Kingdom as well. The good news on the economic front is the US recovery does still have momentum. That's something Europe did not have going into winter. And that's just there on the horizon. Does that continue in the United States, or do we go the same way as Europe?
John, to a distracted America on radio and television, let me ask this question, and I ask it with great respect to how you've been out front on this. Is there attendant stimulus or income substitution to help a lockdown United Kingdom?
There is. The furlough programme will be extended, so that's 80% of wages. It was something that the Chancellor was keen to phase out, Tom, but now he's got no choice whatsoever to continue with. The joke, I think, for everyone, and it's not a funny one, is that this only lasts a month. Nobody I have spoken to, nobody I've spoken to, from those that work in retail, in restaurants, whatever, friends, family, no one thinks this goes on for just a month. And I'm not sure the government is convinced either. We heard from Michael Gove over the weekend, who alluded to the fact that probably, Tom, this would go on a little bit longer, and maybe a lot longer.
I read in the Telegraph, Mr. Grove talking about fervent hope as well. If you'd like fervent hope in the economy, you can speak to Neil Dutta. He's with Renaissance Macro. He's been truly one of the most acute optimists on the American economy. Neil, I want to bring up a chart, and I'll describe this for Bloomberg Radio, but it's so easy to describe. The fear before the 2016 election, the world's coming to an end, down we go, and then, Neil, it was a moonshot of market success coming out of the 2016 election. Is this an economy in a natural disaster who can deliver the same effect? The worry now that becomes more optimistic into 2021?
Yeah, I mean, I don't see how you can't be a little bit more upbeat about the U.S. economy going into next year. Obviously, the most obvious, the first part of that is we've already been doing better. I mean, fairly consistently since April, right? So since the economy bottomed, let's say the second or third week of April, the economic data out of the U.S. has been consistently outperforming consensus expectations. those expectations continue to be beat, Tom, what does that tell you? It just tells you that the consensus actually hasn't, reassessed their priors. And so, I think that can continue. Obviously we have, just like in Europe, not as severe when we look at the country as a whole, but we do obviously have a increased rate of infection in the U.S. But what we've seen is that while that'll weigh on certain service industries, and remember, it's not just about the lockdown itself. It's also about the voluntary measures that people take when they take matters into their own hands and they stay away from restaurants and things like that. But we do know there are some things that can still sort of work even with lockdowns in place. As an example, manufacturing. So, I think one of the reasons why the market's probably buoyant today is that you have, like 80% of the global PMIs hitting expansion territory in the last month. So manufacturing can work, construction can work, and I think that's important because, the U.S. housing market has seen a V-shaped recovery. About 30 to 40% of the U.S. economy has seen a V-shaped recovery. So,
okay, but what about the other part? Okay, I got like 8 ways to go here, which is always the case with Neil Dudd, and Lisa's emailing me now. We're in hermetically sealed different parts of our building. Lisa's emailing me, Tom, shut up so I can ask 5 questions. But, Neil, this is really important. I love the idea 30, 40% V-shaped doing great. What about the other part?
That'll come back when we have a more widely distributed medical breakthrough, whether that's a vaccine or a therapeutic. We obviously have some therapeutic. We've seen hospitalizations come up in the U.S., obviously, as cases have gone up. But we do know that the literature is showing that deaths within the hospital are coming down. That's a good sign. And we've already seen, even the services industries, right, they are depressed. But it's not like in the summer when we had that, spike in cases across parts of the country that, people took their restaurant activity down to zero. You have to basically depressed areas of the economy that don't go down to zero. They slow down a little bit. But it's also important to know they're not contributing much to the overall macro story to begin with. So I think you'll see something like that. People kind of taking matters into their own hands, staying away from restaurants for a period of time. But is this activity going to grind to a halt? I think that's unlikely. You see the same
what I hear
thing
from
with,
you, Neil,
sort of the,
it's just the idea that the correlation between output and infections is a lot looser 8-9 months later.
Well, it's nonlinear, John, right? Obviously, we all want a situation. It's the same economy with a lot of infections versus no infections. Obviously, you go along the economy with no infections. But there's a middle ground there where it's just a lot of noise. If that logic were true, then New York State would have the strongest economy in the Union, and Germany arguably the strongest economy in the Western world. Does anyone believe that? Obviously, that's demonstrably false. There's a certain level of virus that people are willing to socially accept, I guess, for the sake of economic activity. We're learning a lot about Reveal's preferences here.
Let's talk about manufacturing versus services, just quickly, Neil, and maybe focus on Europe just for a moment. Manufacturing in Europe is pretty decent. I just wonder how much of that is leveraged towards what's happening out of China. Services is deeply negative. The PMI will come out tomorrow. It will show it in the mid to high 40s, maybe. Neil, that relationship between an economy that shows manufacturing doing better and services really struggling, how do you expect that to develop in the coming quarters?
I personally think that gap is going to widen because, things like goods, a lot of this comes down to the inventory cycle, right? Just like we have an inventory shortfall in the U.S., we have a significant inventory shortfall in Europe, right? Activity was shut off for such a long period of time that, inventories have been depleted quite substantially, and that's going to require some manufacturing activity to restock those inventories. So that's going to continue, and and services will remain sluggish. So and remember that a lot of what's manufactured, these are tradable goods, right? And so the fact that China is doing better and Europe is tied to China, that can mean that the manufacturing activity situation in Europe, remains relatively positive, even with weak service industries.
Neil, if you go back perhaps a couple of months, people would point to the expectation that if there were second waves, third waves of the pandemic, that the federal government in the United States would come in with another fiscal support package to keep up households, and the fact that they've got huge savings rates. At this point, has the market priced out any sort of fiscal support effort before the end of the year?
I think so. I mean, Lisa, I remember talking about this with you a few weeks ago, but if they didn't do it after the unemployment insurance program left, the extra $600 a week, and they didn't do it after the paycheck protection loans basically dried up in the middle of August. Like, where was the forcing function? So my mind was that the odds were pretty low going into Labor Day anyway, and it was I guess we had the markets kind of gyrate back and forth about whether will they or won't they, but to me the odds have been low for quite some time. The forcing function, frankly, hasn't been there. We'll see what happens after the election. I do think fiscal stimulus is going to come one way or the other, but I think the market is right to think that if Vice President Biden wins the election, that'll probably bring up enough Democrats over the line in the Senate to get a more robust fiscal stimulus sometime early next year.
Neil, what would you say if there were perma-bears out there, perhaps theoretically, who start to look around?
There's one on the show.
who are perma-bears for Halloween, and they were looking at the market and they were saying, look, yes, the savings rate is high, but people are getting fired again, and they are entering the permanent roles of unemployed, and it is going to be challenging to keep up this kind of consumer spending that's propped up the economic recovery so far. What would you say to those theoretical perma-bears that are saying that this savings rate can only keep us going for so long and we need a fiscal support plan sooner rather than later?
I mean, we all want it sooner rather than later, but, I would say, number one, employment is still far below where it should be, so that the fact that employment is probably still growing means that organic wages and salaries are still growing. I would also point out that if you look at the growth in consumption since, February versus the growth in personal income, excluding transfer payments since that time, they've basically been right on top of each other, which tells you what? That a lot of the stimulus that was put into the system basically showed up as forced savings on household balance sheets. In other words, a lot of it hasn't even been spent yet, Lisa. So there's still room for the savings rate to decline. And I think it's interesting, we had a beat on consumption in September. The savings rate actually fell more slowly than it did the month before. Even though consumer spending grew at a fairly robust pace. So I think we need to be careful here. And as I say, I think the labor market situation isn't getting worse. I mean, we do hear, obviously, a lot of anecdotes about firings in certain industries. But we also know that, look at the Conference Board labor differential, for example. That's consistent with an unemployment rate a couple percentage points lower than where it is right now. So consumers are obviously feeling a little bit better about the economy. And they have a pulse on their own local economies, I think better than certainly before the BLS captures that. They know about pink slips going out. They know about people hiring again. So I think the fact that confidence has been okay tells you about the forward progress in the jobs market more generally.
Neil, it's been great to catch up. It's been one of the biggest questions on the economy coming out of this pandemic, just how quickly would we bounce back? And Neil, over the last 8 months, you've definitely been on the right side of it, sir. Thanks for joining us this morning. Neil Dutter there of Renaissance Macro Research. You know what I love about this programme, Tom? Lisa asking questions about herself. About that theoretical perma-bear. Yeah, of course. Lisa asking questions about herself. Wonderful. Is that what you went to Halloween as?
A perma-bear? No, I went as a chart for radio.
A chart for radio?
Yeah.
That gives management nightmares. Tom Keene, do you celebrate Halloween?
No, I did not celebrate it. I was so run over by Sean Connery's death that I just had Vespers all weekend. And
that's the reason why.
It was we watched James Bond movies, which was great. The movies after, I should say, James Bond.
Nice.
As well. It's actually very nice. Weekend. I couldn't understand half the English. I mean, John, I don't understand your accent. And Connery in the Scottish, when he gets going, I can't understand a word.
We don't understand each other, and that's fine. It's the beauty of this program.
Should I see this Peaky Blinders thing?
Thomas Shelby. I went as Thomas Shelby last year, Tom, of Peaky Blinders.
Did you?
You definitely would not understand
That's what
him
they said.
Or me if I put on that Birmingham accent. Futures up 42. We advanced 1.29%. No, because if you're going to say peaky, it's got to be peaky something blinders. And I can't say that on air, can I? This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Trump enters the final day of the campaign, hoping for another poll-defying victory. Surveys show the president trailing Joe Biden nationally and in a number of battleground states. Still, the numbers have been tightening in some of those races. Both candidates will be campaigning today in Pennsylvania, where polls show Biden with a slight advantage. Over the weekend, pre-election day voting surpassed 2/3 of all the ballots cast in the 2016 presidential election. Almost 92 million Americans have voted so far. A majority of states are reporting record early turnout. In the UK, one of Prime Minister Boris Johnson's top ministers says a month-long lockdown for England may have to be extended. Cabinet Office Minister Michael Gove says the lockdown will be reviewed on December the 2nd, and if the coronavirus data isn't good, the lockdown could continue. Scientists warn that National Health Service may be overwhelmed by the latest outbreak. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Favorability is absolutely critical. What we find this year is that with likely voters, Biden has a 52% favorability rating. Secretary Clinton, at the same moment with those same demographic likely voters, was at 43%. So he beats her just by 9 points there. Compared to President Trump, he's at 43% favorability with likely voters. That's a slight improvement from where we were in 2016 with President Trump, where he only had a 39% favorability rating.
Amazing to go through the numbers with Mohammed Yunus a little bit earlier on today on Bloomberg Surveillance, the Gallup editor-in-chief. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your price action this Monday morning, a bit into futures, a bounce back from last week's brutal losses on the equity market of in and around 5.5%, both on the S&P 500 in the States and a Stock 600 in Europe. We're up 41 this morning. We advanced 1.25%. Euro-dollar unchanged at 116.43. Tom, I know you've talked a lot about the lira. Last month, the Turkish lira slammed 7.5%, a 7.5% move on dollar lira. That is a record weaker Turkish lira through last month, Tom. A little bit later this week, we'll get an inflation read. And just to give people an idea of where inflation is running in Turkey right now, around about 12%, Tom. 12% is where inflation is running, which is why this market was so disappointed that we didn't get that expected rate hike from the Turkish central bank.
The crisis people look at the calculus of this, John, and the calculus is the second derivative, which is the acceleration. It's flipped in the last 2 days of trading, and it's really showing a deterioration. Again, 8.54 is my point on a fancy Bloomberg chart of where ultimate tension is. We'll see if we get there. Right now, on the calculus of the president, Jeannie Zaino joins us, a wonderful Bloomberg contributor, widely anticipated, her book Brutal, which will be out after the election. Jeannie, we spent a lot this morning on Vice President Biden. Tell us about the president's one-day calculus. He's such his own beast that what is his internal calculus in these final hours?
Well, you know, I give him credit for the amount of energy he's had in these last few days. You know, multiple big rallies outside every day for a man who not that long ago was suffering from COVID. That said, I can explain the calculus of being where he is. He is in all the key battleground states that he needs to hold to push this through to 270 or above. I cannot explain the attacks on the doctors, for instance. I cannot explain some of the comments that he just seems to make and gets him off track about talking to things he does win on, number one being the economy. And, you know, this astonishing number to me out of Gallup last week, which said that almost three quarters, about 60% of Americans say they're better now. Those are good things to talk about, but he seems to get off track a bit.
You know, what's so important here, Jeannie, and, you know, I'm trying at home, folks, talking to kids to be fair and balanced, unlike the Abramowitz household where it's all about gloom. But, Jeannie, you know, I'm trying to say that he's going after his core audience. Can he increase turnout among his core constituency, or are they already at max turnout?
I think they're at max turnout. I give him this. His base is so devoted to him. They're chanting things like, we love you, when he comes out at these rallies. They are going out and voting for him. His trick is not to get the base out. They're going out. It's to get those moderates and independents. And that's why the comments about doctors inflating COVID numbers to inflate their bills is just so detrimental to me in places in the suburbs with seniors and suburban women that he needs to win in places like Pennsylvania. That I don't understand. And you can see it's even tougher as surrogates to explain that when they go out there and get questioned about it.
Jeannie, Trump supporters would say you just don't understand, because not only has he rallied the base and does he have a higher approval rating among them, but he also has registered reportedly more Republican voters that had not been enfranchised in the last election, more non-college educated white men in particular. What do you say about that?
I do think I give him credit. He is changing this map in ways we didn't think that were possible. He could expand, for instance, his support not just among white men, but among African-American men. I mean, it's not going to be hugely substantial, but he is getting new voters in there. But, you know, the problem for him is this thing is so tight that he needs to talk to those suburban women and seniors. Those are his core groups. And he needs to focus on the states he's focusing on on. But getting out his base is not his problem. It is these undecided or moderates or independents. And that's where the commentary really sort of just, I can't explain it.
90 million. That is how many people so far, more than that, have already voted, which already has exceeded the 2016 total voting turnout. What kind of turnout are you expecting, and how will this play into who wins, given the imbalance in who the early voters versus day of voters prefer?
It's astonishing, really. I think we're looking at 150 million, could be more. We really don't know. But the fact that we're over 90 million in early voting is something none of us would have predicted a year ago. And, you know, sort of the common thought is that the Trump campaign, Republicans are going to benefit from same day, election day voting. He has made a big deal about not voting early, not trusting the mail, but going in person. So we expect that his numbers increase there. It's going to be a big question. If he is able to do that, my question is, do we see something of a red wave on election day, particularly, again, in those states he needs? He needs to hold the Sun Belt. Then he needs to pull off a victory in Pennsylvania or Wisconsin, Michigan, which is less likely at this point. But if we see Biden take one of those Sun Belt states early, it's probably going to portend a difficult night for the president.
Jeannie, what's so important is to look back to 1960, and the basic idea was Nixon robbed. And after that, there was forever off the Chicago uproar, grand juries and investigations and the rest of it. Is that what we're in for after the courts get done?
You know, my fear is that we're in for the people have the feeling that they were robbed, and that is really, really unfortunate. So I was a bit concerned by some of the remarks out of the president over the weekend, talking about the fact that you can't trust the system. You know, people have voted in these record numbers. We haven't seen signs that anybody has been unable to vote at this point. We're going to see a lot of litigation after this, but I'm hoping it doesn't either get violent. Certainly, we're seeing boarding up of of stores and things like that in New York City and elsewhere, and that people do trust the results as they come. I think we all just have to be patient. In states like Pennsylvania, we're not going to probably know results, certainly election night, and maybe not for a few nights after if this thing is really close.
Jeannie, great to catch up. As always, Jeannie Zaino there, Iona College professor and Bloomberg contributor. Tom, if we have to wait a few days, can you imagine what the price action in this market is going to look like? For all the talk that we've priced in a blue wave, I have no idea what pricing in a blue wave actually means. And considering the reaction we get whenever we bring up a poll, can we say that anything is truly priced in?
I'm priced into triple leverage all cash, which is helping me out about a mess.
We know that.
But I do see people, John, placing bets. David Einhorn with a better month reported this weekend. I know Doug Cass, I believe, went long this morning. But, you know, John, the uncertainty is there, and some will win and too many will lose. And I'll be in triple cash, so I'll be safe.
All of the above is true. I mean, no doubt Einhorn's had a good week, where tech was trading last week for that short the man has on. Special coverage of Election 2020, Tuesday night, 7 p.m. in New York. Do not miss it on Bloomberg Television and Radio. This is Bloomberg.
You could do it with a Birmingham accent. It'd be great.
You can get a warm burger, soba noodles, even a bowl of curry rice. In a city
city like Tokyo, vending machines seem to be everywhere. There are literally millions in Japan, and it's a big business, selling $44 billion of goods in 2016. With COVID-19, those sales are slowing down, which means getting rid of unprofitable machines. Vending machine sales were already falling even before COVID, with competition from convenience stores that are open 24/7 and have way more options. But there is hope for some of them. About an hour away from central Tokyo is the Retro Vending Machine Park. Here you'll find 50 or so machines side by side selling some quirky items. Turning vending machines into tourist attractions may not be a solution for bigger business, though, since it requires labor and efficient distribution. Saito says it takes 5 people a day to restock his machines, just in time for lunch.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
It looks like we're heading towards a double dip.
The consumer is very nervous.
We could be in for, a prolonged correction.
The duration of any sell-off is as important as the magnitude of that sell-off.
What we need is central bank keeping stability in financial markets.
Policy in the United States on the fiscal side continues to come up short.
We don't have safe havens anymore.
I find it difficult to build a portfolio that I think will be truly robust to every possible outcome.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Bloomberg Radio, on Bloomberg Television, across this nation, this electable nation, one day on to the election, and to all of you worldwide, good morning as well. Too much to cover, an incredibly busy news week. After the election, we've got the Fed. After the election, we've got jobless claims and a jobs report on Friday. And, John, we're really not focused there. We're focused on the election. John, how do you from London see it?
Elevated volatility going into it and the breakdown of correlations. For markets, I think it's really, really tricky right now, Tom. Typically, you'd expect some kind of inverse correlation between stocks and bonds. You're not getting it at the moment. And for that reason, Tom, how on earth do you construct a portfolio to withstand the battering it could get in the next 3 months? I think it's really, really difficult to assess what the politics actually mean, one,
right,
and two, to put together a portfolio around it.
Well said. We're going to talk to an esteemed guest about that here in a moment. John, I've got to ask you about the lockdown. We heard earlier this morning of the exceptionally difficult weekend Prime Minister Johnson had. Is his government threatened?
Well, his government is failing on this front, Tom, and his plan has failed as well. There will be a vote in Parliament on Wednesday. His party, that's where the rebellion will be, Tom, within his own party. The support will actually come from the opposition, who will vote with him to implement this lockdown across England. The lockdown is likely to go through. The opposition within his own party is unlikely to be large enough to actually derail the prospect of it happening, Tom. But the strategy has failed. That's the story. That's not my opinion. That is just a fact. We locked this country down. The hope was that you would come out the other side of it, have an efficient, effective track and trace system until we got a vaccine. Tom, we're back to square one all over again.
And Lisa Abramowitz, as we talked to Gina Zano moments ago, I mean, it's simple. The president going after his health expert this weekend, she was very critical of that action. But with Dr. Fauci and the pandemic here, that does affect this election.
Well, it does affect, especially because Dr. Fauci came out over the weekend and actually seemed to support Joe Biden in his health approach versus President Trump, which was what gave President Trump a reason to be so angry. Look, ahead of this election, going to John's point, how do you construct a portfolio to shield yourself against the risk? What you can see on the margins is people taking risk down and trying to get some cash or dry powder or something that they can spend after they have a sense of which way things are going. And I do want to point to one thing, Tom. There was the second biggest ever weekly withdrawal from the biggest U.S. bond, high-yield bond ETF. Nearly $3.7 billion was withdrawn last week. Is this because people think there's going to be a rash of defaults? Is it because they think the Fed's going to step away? No, more likely it is the analog to battening down the hatches and putting up some boards on windows in Midtown Manhattan, Tom.
Well, there it is, and it's a good start here, and we welcome again all of you on Bloomberg Radio and Bloomberg Television. Part of the charm of Diana Amoa of J.P. Morgan is not only at UBS, her early work on trading desk where she enjoyed the bid walking away, but as a manager of fixed income portfolios, she's a bit aware that if yield goes up, price goes down. We're thrilled that Diana could join us here this morning. On the benchmark 10-year, Diana, I see since early August, the price has declined 3%. That's a lot of coupon. How far are we from real price decline in the bond market?
Well, it really depends on what we get from these elections and then how things play out following that in terms of U.S. policy. We have a range, so we had a range of 0.5 to 1% on the 10-year over this quarter into year-end, looking at various scenarios, various election outcomes. So we think that the most aggressive end, so that would be a blue wave outcome, initially we could get up to 1%. But to move significantly higher than that, given the headwinds that we're facing with COVID cases rising globally, and, you know, as you were discussing with Europe shutting down, I think that's going to be really tough.
Diana, when volatility is elevated cross-asset and correlations, traditional correlations start to break down, how much forced de-risking takes place?
Well, in the heart of the moment, I think it depends on what kind of portfolios people have constructed and what expectations are. So in past political shocks where we've had outcomes that weren't priced in by markets, you certainly did see a significant amount of de-risking because markets were caught out, either because polls were pointing to a different outcome than what materialized. I'd say in this particular instance, what we're seeing actually is quite the opposite, where the polls seem to be consistently pointing to a specific outcome, but markets are reluctant to price it, maybe because of the experiences of 2016 and Brexit. So I'd expect in this instance, the amount of de-risking would be significantly less than what we've seen in the past.
Well, Diana, to build on what John was talking about, Henry Kravis of KKR last week said, I've been investing for over 50 years. I don't remember a time when I've seen such volatility as we see today. There seems to be a belief that because rates are so low, so close to the zero lower bound, that there is no haven and that people are all going to go to the same exit if there is some sort of event that transpires. Is that a sense that you have, that basically the only hedge right now is having extra cash to be able to respond to something?
Well, extra cash is definitely something that markets already seem to hold. When you look at the MMFA function on Bloomberg, which we mentioned in the past, a lot of cash went into money market funds. That went from about 3.6 trillion to 4.8 at the peak. It's still at 4.3 trillion. So there is a significant amount of cash already sitting in the sidelines. I'd say the frustration for investors who look at traditional 60-40 portfolios is that treasuries haven't actually been acting as a hedge in this latest bout of weakness. If you try and understand the logic behind it, it makes sense. You know, aggressive fiscal is one thing that would actually need repricing of curves in the back end of the U.S. as the Treasury comes to fund that in the market. But a failure of that to materialize would impact equities. What investors need to think of what else could act as ballast in portfolios. So I'm fortunate that I started my career in emerging markets. So I can think of several things in EM that could work as potential hedges on a downside scenario. Looking at the option space in EM currencies could make sense into an event such as these, as that has actually been working reasonably well in certain pairs. So it's not that it's impossible to construct portfolios, it's just that investors need to think beyond traditional hedges.
Dana, we needed that downside protection last week in Europe, that's for sure. Some headlines coming from Chancellor Merkel speaking at a news conference in Berlin, saying the following: facing a difficult winter with an aggressive virus, cites a tripling of COVID-19 patients in intensive care. And Tom, this has been the story across Europe, not just in Germany, but in the northwest of this country as well. Overwhelming the healthcare system was the concern back in spring, and unfortunately in Europe, it's the concern all over again.
Well, John, I'm colored by this, outside my walk-up in Manhattan to see the tents go up as they did in February, March, and April, just outside Mount Sinai. But to me, John, it is about hospitalization. I cited South Dakota today, Sioux Falls, with some serious hospitalization issues. What's it like for NHS in the United Kingdom?
Difficult, the future hard, and that's why the Prime Minister has reacted the way he did over the weekend. It was very localised, Tom, as I say, in the northwest of the country in cities like Liverpool, and they were hoping that they'd have this multi-tiered system to deal with different regions. Now the forecast coming from the advisors to the Prime Minister suggesting that that could be something that doesn't just overwhelm a single region but overwhelms the country. This is about making sure by the time we get to Christmas it's not a whole lot worse. The problem this Prime Minister has, Tom, is that he was recommended by his advisors months ago, back in September, to have a 2-week circuit breaker, a 2-week lockdown to prevent us from getting to where we are now. He chose not to. And here we are. The problem that many people in this country have is that if we're going to do another lockdown, what's the objective? What's the objective? Is it to get back to where we were before and actually try this track and trace system again and open up more effectively? Or are we just doing this in the hope that we have a vaccine announcement, Tom, in the next 30, 45 days?
I'm not going to trivialize here, but I'm going to point out the fact that these headlines from Germany are coming from a quantum chemist. And there seems to be a little bit of a difference in the tone, John, from the quantum chemist versus the gentleman from Forden and maybe Wharton, and then also Prime Minister Johnson as a journalist. I mean, there's a different tone to a Merkel virus headline.
Very much so, but Merkel and Prime Minister Johnson going in the same direction at the moment. Diana Ramoa of JP Morgan Investment Management. Diana, thank you. This has been a story across Europe over the last week or so. France, Germany, now England and most of the United Kingdom going into lockdown, Lisa. And I think now it's just fair to say, base case, absolute base case, is a double dip for the European economy.
Yeah, and that's what a lot of economists are coming out and expecting, which is a reversal from a couple of weeks ago. And it goes to this idea, John, that the data is moving so quickly, the virus is moving so quickly. How do you game out how big of an economic hit these lockdowns will be, whether they actually will be effective and actually drum up some of the sales and activity around the holidays, John? It's just so hard to game out, and the economists have gotten it wrong. They're following the information, not leading it.
The language of leadership, Tom, the adjustment in it, you go from a situation when asked, will you lock down the country again? They will say no. A few months later, they will say that is the last option. And then all of a sudden, it's right there in front of you, happening again. And that's the experience of this country right now.
My experience of living next to, frankly, within Mount Sinai, to be accurate about it, John, is it's all about hospitalization. The politicians, whether it's Mayor de Blasio or Governor Cuomo, that's their catalyst for reaction, is literally bed count.
That is the pressure point. Chancellor Merkel saying November can be a turning point in the virus battle. I think we all hope that's the case. The problem is we've all heard it before. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Coming up, Brian Klaas, University College London professor. We'll catch up with him next on this programme. From London and New York this morning, with the eyes of the world on Washington, D.C. Futures up going into the election, up 37 on the S&P 500. We advance a little more than 1%. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. The presidential campaign is now in its full final full day. A series of polls show Democrat Joe Biden leading President Trump nationally and in battleground states. Still, some of those states remain extremely close. Both candidates will campaign today in Pennsylvania. The state is vital to Biden's chances, and it's become almost a must-win state for the president as well. President Trump is suggesting he may fire infectious diseases chief Anthony Fauci after the election. Over the weekend, Fauci told the Washington Post the U.S. is, quote, in for a whole lot of hurt from the coronavirus this winter. There were chants of Brexit negotiators are moving closer to breaking that impasse over one of the biggest obstacles to a trade deal. A compromise is emerging on the issue of what access boats from the EU will have to British fishing waters. The potential solution would allow Britain to claim it has won back control of its seas. And there's one more sign of high demand for that record-setting Ant Group IPO this week. Bloomberg has learned that institutional investors are buying Ant's Hong Kong shares on the grey market at a 50% premium to the listing price. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time: is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start. And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
We should know the result of the election on November 3rd, the evening of November 3rd. That's the way it's been, and that's the way it should be. What's going on in this country?
Every day is a new reminder of how high the stakes are, of how far the other side will go to try to suppress the turnout, especially here in Philadelphia. President Trump is terrified of what will happen in Pennsylvania.
President Trump and former Vice President Joe Biden rallying over the weekend with just one day left as we wrap up the U.S. election. From London and New York this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Monday morning price action looks a little something like this. Equities with a lift off session highs, but still advancing by a little more than 1% on the S&P 500. We're up 40. In foreign exchange, euro-dollar unchanged, 116.52. But there's that positive correlation. Equities, bonds once again. Equities up. Bonds up, yields lower, down 2 basis points to 0.85%. It's the other way around on Friday, and that spooked a lot of people. The week ahead is absolutely remarkable. The election wrapping up tomorrow, Tom. Thursday, a delayed Federal Reserve decision. Friday is payrolls Friday.
Yeah, payrolls Friday is going to be interesting, to say the least. I'm not sure what the Fed will do. I'm going to worry about that Wednesday about 5 p.m. to get briefed in as well. Our team today and tomorrow will try to give you as sophisticated a coverage as we can from people with authority. Brian Klass is out of Carleton in Minnesota. He has a cottage industry going in the United Kingdom of looking at the decline of democracy. We're thrilled that Dr. Klass could join us this morning from UCL. Brian, you have been hugely visible and hugely articulate on the decline of democracy. Let's begin with the U.S. Can we staunch that and resurrect democracy tomorrow?
I think we can begin to. I think that there has been a sustained attack on democratic institutions in the United States. And I think despite, being a nonpartisan expert, this has been from one side predominantly, right? So you have rhetoric coming out of the president attacking the press, trying to scapegoat minority communities, and also most recently around the election saying things like, we can't trust the votes, even though there's evidence that we can, encouraging supporters to vote twice, et cetera. So it's a long-term rebuild that we're going to need because, yes.
Well, I don't mean to interrupt, but look, because of time, Brian, I've got to get to this. It's too important, and you are one of the great experts on this. You are a fabric of the northern part of our Midwest. Whether we go back to William Jennings Bryan, Huey Long, whatever, name the other names, and of course, President Trump. This is populism at hand. Do you see populism extending its reach across America, or as you say it, with clear and direct messaging, can it be staunched like it was with Huey Long of Louisiana and like it was with Jennings Bryan?
Well, I think reality has a way of catching up with populism. And I think what happens is often populists, often big slogans and few solutions. And what's happened recently is that the coronavirus has been reality. The economy has been reality for President Trump. And so I think there is a turn back towards people who actually understand things, right? That actually understand how economies operate and how public health can be best served. And that's why, Dr. Fauci, for example, is the most widely trusted figure in the United States political system at the moment, because people are turning back to experts. So I think there is a pendulum shift that's happening in the United States.
There are boards over the windows in Midtown Manhattan and across cities in the United States. This is unusual the day before an election. There is a feeling of eeriness before the storm. And my 11-year-old son said to me last night, "Are we going to be okay? Is it going to be violent?" Is the sense of violence overstated here, or do you get the sense that the unrest, just in general, has that ability of potentially percolating?
I am very worried. I'm more worried than I've been about any election, certainly in my lifetime. And I think the reason for that is because there's not really an exit ramp for either side here. The stakes are so high that when we wake up on Wednesday, or potentially much further along if we don't know the results quickly, around half the country is going to find this to be an existential threat because the hyperpolarization has taken such root in the United States. And I think that's something where this is a longer-term project. It's not going to get fixed no matter what the result is on Tuesday. And I am very worried about the prospect of, if there is a contested election, especially widespread unrest.
Brian, speculating what happens Wednesday morning, can we talk about what has happened and tell me whether attacking the process actually damages the process, given the record turnout that we've seen so far in early voting?
Yeah, so I think there has been a really good response here to voter suppression, in the sense that, in Texas, there are more people voting now and have already voted than in the entirety of 2016. But that being said, there's also some really worrying signs. We had a foiled plot to kidnap the governor of Michigan. We've had murders at various protests. We also have the president directly endorsing an attempt to push a campaign bus from the Biden campaign off the road in Texas. So, temperatures are very high. And I think that with Trump telegraphing that he might declare victory before all the votes are counted, the risks are high. In economics term, we talk about tail risk. I think there's a very large tail risk here, where it's still improbable that there's going to be widespread unrest and violence, but it's such a damaging prospect that we have to take it very, very seriously and do everything we can to stop it.
Brian, I asked this in a really delicate way, and it's not a loaded question. Why do you think those stores are boarded up? Who do they think is going to attack them come election morning, come Wednesday?
Well, I think there's going to be, the potential for violence no matter what the result is, to be honest. I think that there is a series of communities that feel extremely invested in this result. And I think that, when you have a situation in which those fans have been flamed from people in power for a very long time, the polarization is just at boiling point. It's really at boiling point. And so I think, regardless of what happens, it's not just about who wins and who loses. It's also the rhetoric that I think is extremely damaging from President Trump, saying that we shouldn't trust the result, right? Months of saying the election is rigged despite evidence to the contrary. And so I think that only heightens tensions. And I think regardless of what the result is, there is a significant risk of unrest in American cities.
Brian Klaas, appreciate the time this morning. Thank you, sir. University College London professor. Tom Keene, questioning the legitimacy of the outcome before we even get the outcome. And both sides potentially, according to the professor, could question the legitimacy of that outcome.
Well, they could. It's a process, and I must admit it's highly unusual and maybe original this time around. But, John, I would say that there's an ample history in the United States of these tensions. Again, I would go, John, yes, so what's different this time around? Well, it's the 14 cable TV stations I've got over here on the big wall just past the camera, and also social media. I mean, it's different, John, this time around because of the immediacy of Facebook and, the Instagram that you're glued to all day.
Yeah, me on Instagram, not so much. 24 hours out from the election, full coverage. Beginning, is it TokTik? It's TikTok, I think, Tom. And I think TikTok is Lisa and not me.
Oh, you want me to dance again?
For TikTok.
John, you absolutely do not want me to dance again.
I'll take a miss.
Good.
I'll take a pass. I'll take a pass
Hard
on that.
pass.
Coming up tomorrow night, 7 p.m. in New York on Bloomberg Television and on radio, you will find our coverage of the election still to come through the next 24 to 48 hours. You will not find me on TikTok or active on Instagram in any way, shape or form or the next day. Equity futures are up this morning.
Look at the markets.
Futures doing nicely. They advanced this Monday morning. Good morning to you all. We're up 39 points on the S&P 500. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with interactive brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
the African American community in general, we have a history of having to support each other, right? And so there are opportunities that are presented that we don't often qualify for. So oftentimes we have to turn to our neighbor and turn to people within our community to assist us, to help us.
The Oakland African American Resiliency Relief Program was created to support and fund Black-owned businesses in the city of Oakland. The reason we started this fund due to the systemic racism behind the PPP funds, also how our Black-owned businesses have been marginalized for so long.
I'm standing here right now because we did get the resiliency fund. I only had enough to kind of just pay payroll for a couple of more months, but I said no new initiatives. Now that we have some new initiatives, we have other revenue streams coming in, and that's what's helping to keep things up.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
Everybody knows the COVID epidemic is certainly a major thing in the whole world, also certainly in China. And so this has served as an accelerator for our business.
From New York and London, for our audience worldwide, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, live on Bloomberg TV and radio. This is Bloomberg Surveillance. Here's the price action. 60 minutes out from the opening bell, an equity market with a lift. On the S&P 500, we advanced 39, up by 1.2%, off session highs, but you get the picture. Things are looking okay across Europe and the United States relative to the absolute hammering this equity market got last week. In the bond market, bid is back. Yields are lower by 2-3 basis points to 0.8468%. Later this week, a Fed decision, payrolls Friday, totally hijacked by the election taking place tomorrow. If anyone's interested, your payrolls estimate so far, 590,000 in our survey is the median estimate. Moving target, but it would be a deceleration from the 661 in the previous month. That's the picture of the market. Looking ahead, it has been the number one risk on the horizon for many of you worldwide, I know. The prospect of a contested election, the prospect of waking up Wednesday morning without a result. This is what Mohammed Al-Arian had to say.
If we end up with a divided government, then the economy is in deep doo-doo, because we're not going to get the sort of stimulus we need. We're not going to get the sorts of structural reforms we need.
And Tom, that is the issue right there. It's about policy and the wait to get things done. That's the difference this time around. If we get some kind of contested election, if we have to wait a number of weeks, a number of months, the lack of clarity on the path, the runway towards taking off and getting some stimulus is going to be really clouded.
Well, this has happened many times, John, in our history. Certainly, I think of the 1890s and then on to Teddy Roosevelt. And that took a long time, 10, 20 years of gridlock, some would say. I'll leave that to the historians as well. But as Dr. Al-Arian says, a policy prescription comes in many flavors. Daniel Ahn is with BNP Paribas. He's chief U.S. economist and head of macro strategy there. And far more importantly, he's one of our best thinkers of the set of outcomes forward. He has made real clear that we have a chance to be in the uncharted territory of many different outcomes. Daniel, which is the uncharted territory you're most focused on right now?
Well, there are a lot of potential terra incognita places that we can go in this very unprecedented election. It's clear that we have seen a fairly norm-breaking president. But what I'm most worried about is come January 20th, there's still no clear picture as to who the president of the United States is. And both Joe Biden and Trump show up claiming that they're the legitimate president.
Well, within that outcome, which I'm going to call suitably gloomy, so it's January 20th, and we really don't know where we are, or certainly there's some form of tension and contested as well. What does that do to the economy? Is there a run rate of this economy right now where it can sustain that political shock?
That is the trillion-dollar question. I think, Tom, that the implications of something like that are just so unfathomably profound that it's hard not to believe that that's going to have a pretty dramatic effect upon markets and the economy. So I really hope that we don't get there. And I think we do have a lot of ways that we can avoid the slope toward a constitutional crisis. But if we get there, we'll just have to wait and see.
Dan, what's your view on how the market is pricing a lot of this? This narrative is all over the place. It's like a pendulum from one extreme to the other. A few months back, it was the worry about a contested election. A few months forward, it is the blue wave and pricing that in. And then all over again, a week going into the election, we start talking about contested again. Dan, where's that coming from?
Yeah, I think it's because the stakes are just so high and the outcomes are just so extreme on either direction. When really what we're seeing here is just a shift in the polls of, a couple points here, a couple points there. I mean, what really is striking about this election is actually just how stable it has been. Joe Biden has always led Donald Trump by anywhere from 6 to 10 points. I mean, those aren't insignificant numbers. But compared to the pretty wild swings that we saw in 2016, it's actually the main feature of this election is stability. And yet, people, markets extrapolate from the race tightening a bit to the race widening a bit, and say this is either going to be a Dem sweep or a contested, close, messy election. And by the way, the fact that the election is going to be contested is different from the election actually being close, messy, and chaotic. It's almost certain that President Trump is going to contest the results. He may contest the results even if he has won, as he had done in 2016. But the real question is this going to be close enough that there's a legitimate case to be made that a recounting or one of these election lawsuits can actually swing the difference?
Well, Dan, you nailed it, though. Let's just sit on the markets for a moment. We're extrapolating out yesterday's price action, whatever yesterday or last week's price action actually was. That pendulum swinging so aggressively, despite the fact polls have been really, really stable. Dan, that just screams to me that no one has a clue what's going on. So Wednesday morning, even if we do get a result, and we know what that result is, are we just going to extrapolate out last hour's price action without really thinking about what any of this stuff means over the medium term?
Well, no, I think that come election day, or rather the morning afterward, there is a set of scenarios where we can know pretty for sure who the winner is. Therefore, there are some certain scenarios where I think markets can become pretty confident that Joe Biden is the winner. I do think if Donald Trump is the winner, it may have to take longer for some of the key Midwest states to come in. I think markets, hate a vacuum, and therefore knowing for sure what the results are would help. But yeah, there is still this looming interregnum period between November and January, where if it does look like Joe Biden has won the election, then we have a lame duck president who, as we said earlier, is pretty norm-breaking. We'll, again, have to wait and see what a lame duck Trump administration would look like.
Dan, there's so much uncertainty, not only about the election, but also how markets will respond to any particular election outcome. For people who are looking for some sort of ballast, for something to hang on to, some certainty, is following the virus numbers really the most important thing for them right now?
I do think that the recent market reaction is probably a function not just of the election, but also worries about the third wave in the U.S. But yeah, I mean, at the same time, it does look like the fatality rate of this wave, as tragic as it is better than in the first and second wave. So there's a lot of moving parts here. Again, I think markets are desperately trying to look for something to hold on to construct a narrative, when the simple answer is that all we can do is really wait.
Where is the biggest asymmetry of risks that you see right now?
The asymmetry of risk. I think actually the biggest asymmetry is that the virus can mutate in another way that's less benign. I know that the general science of epidemiology is such that viruses don't actually want to kill their host. They want to keep their host alive so that they can continue to replicate, which is their whole purpose of being. But we should remember that in the 1918 Spanish influenza, we had 3 massive waves, and it was actually the second wave which was more dangerous and fatal than the first wave. I wouldn't rule out that the virus can mutate again in a very dangerous way that makes what we had seen earlier only a foreshadowing of what's to come.
Daniel, I want to go back to pure market economics. What's our GDP this quarter and into the first quarter of next year?
Yeah, so of course we had a very impressive looking Q3 at an annualized 3.1%, but it's important not to read too much into that. We're still roughly 3 or 4% below pre-crisis levels, and now comes the hard part. Much of the growth in Q3 is a mechanical a reversal of the lockdown-related contractions that we had seen in Q1 and Q2. Now, as the economy faces this third wave in the mountain states and in the Midwest, as we still await whether a vaccine will be, whether an effective vaccine will be ready and widely distributed. Now I think comes finally, Congress is currently stalled in providing the fiscal support that the vast majority of economists think is necessary right now. We are in this. We are in the doldrums. We're in the stalling out sort of period. I think growth is going to get much harder from here. And as we said, there are some significant downside risks before us as well.
Hey, Dan, love catching up. Dan Arn there, the chief US economist over at BNP Paribas, also heads up their macro strategy, covering the markets as well. I want to check in on the price action just for you quickly. Quick snapshot this Monday. Equities up. Bonds bid 2, yields lower. That correlation just sticks, and it's a correlation I know many of you aren't comfortable with. Bonds advanced, Treasury yields lower, equities advanced 2. Futures up 36, up a little more than 1%. The gains fade a bit. Yields heading south by 2 basis points on a 10-year to 0.85%. Lisa mentioning the data coming later. Manufacturing PMI, 9:45 Eastern. The ISM on manufacturing at 10 Eastern. Tom, in a couple of days, you'll get the services PMI as well, and the ISM services index as well. And I think that's worth taking a close look at, because services in Europe has faded really quickly. Tomorrow we'll see that in negative territory. In the United States, that's where to watch.
John, totally agree. The services goods dynamic, and I go back to David Rosenberg in conversation with him last week, where he says, look, the inflation worries are just overdone because of this partition between services and goods. And with the EM heating up, as Michael Schull talked about, maybe you do get a little bit of goods inflation, but are you going to see it in services?
Coming up on this programme, looking forward to a conversation with Jonathan Quick of the Rockefeller Foundation on this virus as it sweeps Europe and sends countries locking down economies once again. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, counting you down to the opening bell. About 49 minutes away, with equity futures advancing 37 points. We're up a little more than 1% as we start to ramp up our election coverage here on Bloomberg. Tomorrow, 7 Eastern, the coverage begins with Bloomberg's David Weston live on Bloomberg TV and radio. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Rishka Gupta. President Trump enters the final day of the campaign, hoping for another poll-defying victory. Surveys show the president trailing Joe Biden nationally and in a number of battleground states. Still, the numbers have been tightening in some of those races. Both candidates will be campaigning today in Pennsylvania, where polls show Biden with a slight advantage. In the UK, one of Prime Minister Boris Johnson's top ministers says a month-long lockdown for England may have to be extended. Cabinet Office Minister Michael Gove says the lockdown will be reviewed on December the 2nd. And if the coronavirus data isn't good, the lockdown could continue. Scientists warn that the National Health Service may be overwhelmed by the latest outbreak. And hedge fund billionaire Ray Dalio thinks the Chinese yuan is on track to becoming a reserve currency like the US dollar. Dalio spoke to Bloomberg at the Hong Kong FinTech Week.
You're starting to see the development of capital markets in China that are open to foreign investors. You're starting to see, you will see the internationalization of the renminbi. You will see opening capital markets. You'll see the development of the financial center. I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects.
Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
There isn't anything about trading that is more central to your success than accepting the risk. So wrote Mark Douglas in Trading in the Zone. But how do traders accept the risk? They apply good risk management. They never lose more than a very small percentage of their capital on a single trade. They protect what they have, concentrate on capital preservation and don't get hung up on making money. And they never let their ego, emotions, fear or greed get the better of them.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact,
women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We explore the trends, investments and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is political mismanagement on a grand scale. And what's missing is that effective, wide-scale testing, where you test typically 10% or 20% of the population each week. That's the way to get rid of these lockdowns.
The outspoken Michael O'Leary, the Ryanair CEO, catching up with Bloomberg's Anne-Marie Hordern and Manus Cranny earlier this morning in London. What a difficult time to be an airline. Coming up on the Open as we count you down to the opening bell. Around the opening bell at 9:30 Eastern, so at the Open, we'll catch up with JP Morgan global equity strategist Mislav Matejka. JP Morgan, Tom, cutting tech stocks to neutral, maybe not a surprise after the week we've had. Lifting banks to overweight. That's the conversation I want to have at 9:30 Eastern this morning.
Interesting. Really, that'll be really worth hearing, folks, particularly in the financial question here. A lot of those dynamics, curve steepening seen in the last number of days, maybe that is a catalyst for higher bank price. I've been blown away by what our team has done. I hate to tell you this, folks, but they never talk to me. And the guests just show up. And it has been a stellar day here, one day before the election and within a pandemic. As we saw from Chancellor Merkel earlier this morning, making very clear the pandemic rages in Germany. Jonathan Quick, no, not the goalie from Los Angeles, Jonathan Quick of the Rockefeller Foundation is definitive on this. He has written the definitive book on epidemics, the end of epidemics, the looming threat to humanity, and we are thrilled to get an update this morning. Jonathan Quick, what have you learned about this pandemic with all you know and all your expertise? What have you learned in the last 60 days?
Well, unfortunately, it's what we're relearning. We're relearning lessons from 100 years ago.
Yep.
And one of the key lessons was those communities that started earlier with a wider range of common sense public health measures and kept them in place longer had half the pandemic related fatality as those cities and communities that started late, that put their measures on and off and didn't stick with it. So sad to say, we're seeing the same thing, where we have proven that common sense public health measures of distancing and masks and avoiding those crowded events work. That's what's bent the curve in country after country and the states that made it happen. And we're in a state of pandemic fatigue and pandemic anger that's getting in the way of that.
I would suggest the fatigue and anger is very typical in epidemics, in pandemics. Certainly, I've mentioned Albert Camus' The Plague many times. But Jonathan Quick, we've seen Asia react. And I believe, if you want to correct me, I'm all ears, that the statistics in Korea, et cetera, are really, really quite good. Why can't we as a society tilt towards their discipline and societal patterns?
Well, I think you've really hit it. One of the things that's been really striking about this pandemic is how much the variation in national views about liberty and The Declaration of Independence says life, liberty, and the pursuit of happiness. It doesn't say the pursuit of happiness above life. And I think we've gotten our priorities a little bit distorted. That said, unfortunately, the reality of the pandemic is hitting state after state, city after city. When mayors are visiting their hospitals and seeing it firsthand, they become believers, and governors are pulled in. So it's taking a while, but I believe we are going to be able to turn the corner on this.
Before we turn the corner, Dr. Quick, is the U.S. heading toward a similar situation that Europe is seeing right now?
In terms of lockdowns?
Yes.
I think that's going to be a regional state decision, but I think that is very that may well be the necessary measure, because we've beat the April-May peak, we've beat the July-August peak, and we're heading toward 100,000 cases a day. So we're going to need that in places that aren't able to turn the curve by themselves without those more restrictive measures.
Dr. Quick, everyone's talking about the circuit breaker here, the vaccine. And last week we were hearing that before the vaccine gets rolled out, approved, and enough people actually get inoculated, it's going to be the end of next year before life starts to look anything like how we remember. Is that your assessment as well?
Yes. I'm confident we're going to have a safe, effective vaccine. We have 6 in the running here and another half dozen more globally. And the results are looking promising on that. And I'm impressed with the efforts of NIH and CDC and the preparations that have been made. The key thing now, the big question now is getting the majority of Americans who do believe that we're going to have an effective vaccine, also having the communication and trust building that they'll actually accept the vaccine.
This has been wonderful, Dr. Quick. Thank you so much for the update. Jonathan Quick, Definitive on Epidemics with the Rockefeller Foundation. It is a wonderful symbol of our democracy, planes waiting to travel this country to garner the marginal vote. In this case, it's the President of the United States on Air Force Two. This is not Air Force One, the Boeing jet. For those of you on Bloomberg Radio, it is a beautiful morning in Miami. Lisa Abramowitz, some 639 miles from Fayetteville, North Carolina. And this is what it's about in 2020, Lisa. You get on the plane and you go.
Well, President Trump is showing incredible energy on the last day before the election. 5 rallies in 4 different states trying to drum up support against this pivotal election day. And really, it'll be interesting to see turnout for this entire election. If you want to say that perhaps the democratic process has been threatened, the one thing is perhaps it's been edified by the number of people, the volume of people who have shown up and actually cast their votes, Tom.
Our Kevin Cirilli focused on Pennsylvania. He says that's where Vice President Biden is focused. It is goosebump time. It's time for that dash to the election. We'll have coverage for you 7 p.m. Tomorrow night with David Weston. But much more than that, we will take our entire team, particularly led by Craig Gordon out of Washington, and drive forward whatever the Tuesday night outcome into Wednesday. And as you heard Daniel Ahn say, very controversial, perhaps a debate to inauguration the 3rd week of January as well. Futures up 35, Dow futures up 368. I'm going to call it a stasis off of what we saw very difficult last week. As John Farrell mentioned, yields come in, they come in further. We're in 3 basis points right now, 0.84 on the yield. 210 spread comes in again, another 310 basis points as well. Dollar resiliency, with yen 104.64 and euro dollar, surprisingly weak euro, 116.41, I would say, given all the different opinions that we have. I should know Turkish lira 8.44, perhaps idiosyncratic. Please stay with us through the day on this very exciting Monday. We go to election coverage here tomorrow night. This is Bloomberg Radio. This is Bloomberg Television.
So we'll have the conversations with the Bank of England in the latter part of this year. And then, yeah, we will address our policy around returning capital to shareholders at our year-end results coming up shortly at the beginning of 2021.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the Open starts right now. 30 minutes away from the opening bell, equity futures up 35. We advanced a little more than 1 full percentage point. We begin with the big issue. 24 hours to go. The candidates spending their final hours in key battleground states. President Trump looking for a last-minute surge with stops in North Carolina, Michigan, Wisconsin and Pennsylvania. Former Vice President Joe Biden narrowing his focus to just 2 states, going all in on Pennsylvania and adding a last-minute stop in Ohio, where polling indicates a very tight race. No Republican has ever won the presidency without taking Ohio. Joining us now is Bloomberg's Kevin Cirilli and Katie Lyons with a preview of today's events and looking ahead to how this price action is set up ahead of the election. Kevin, let's start with you, sir. 24 hours to go, and President Trump is hitting that trail and hitting that trail hard.
Precisely, and it's a barnstorming of sorts as he tries to make his way through all of the swing states virtually, from Florida to Pennsylvania, North Carolina, even a stop in Ohio now, and Iowa for that matter. Now, Democrats are saying that he is looking to win in states that he should already be ahead in. Republicans tell me that he is looking to boost some of the senatorial candidates in order to give them a last-minute surge as well. Case in point, Senator Joni Ernst, a Republican from the Hawkeye state, who's locked in a very tough battle against Democratic challenger Teresa Greenfield. Biden, for his part, focusing in not just on Ohio, but on Pennsylvania, where his campaign is headquartered. He's trying to urge the get out the vote effort into the collar counties around Philadelphia. This is the same type of response, quite honestly, that Hillary Clinton was not able to get. Forget about the national polls. Look at the swing states. We mentioned Pennsylvania. We mentioned Florida. But Wisconsin, also very much on my radar. Republicans significantly trailing there, according to polls, but the president was able to carry it in 2016. The Republicans that I talk with say that he still has a path to victory if he doesn't win Wisconsin, but it would have to include a victory in North Carolina as well as Florida. Jonathan?
Kevin's already looking forward to catching up through the next 24 hours, so I know you've got a busy morning ahead of you. Katie, I want to turn to you just quickly and talk about this market. How many investors have you and I, all of us, spoken to when we bring up the polls, they ignore us and just say 2016? Nobody believes these polls right now, Kaylee.
Yeah, John, you're probably right. The ghost of 2016 is still very much haunting us and this equity market. But interestingly, with 24 hours ahead to the vote, futures are pointing to a higher open, following on from gains we saw in Asia and gains in the European session. Right now, S&P futures up by about 31 points. Still, though, the equity market's bracing for what could be a very volatile week, John. Not just the election, but we also have a Fed decision and a U.S. jobs report. As we head into the week, volatility remains elevated. We're just off the highest level since June, printing around a 37 handle on the VIX at the moment. The thing is, John, other assets aren't correlating with equities in the way we'd expect. We saw a similar pattern happening last week. That risk on tone you're seeing in the equity market not confirmed when you look at the usual hedges. Yes, investors are buying equities, but they're also buying bonds. The 10-year yield comes in around 3 to 4 basis points, printing 0.83 basis points at the moment. So you have some hedging there, and you can see that showing up in gold as well. Gold futures up by about 0.5%. One commodity that isn't rallying today, though, John, is oil. A brutal stretch for crude as of late. Oil lower for the 4th day in a row over the past 9 days, down by about 15%. And here, much more about the supply and demand dynamics, specifically reduced demand given the spread of the virus and the renewal of lockdowns over in Europe. So it is a reminder that the pandemic is also still hanging over us as a longer-term risk factor, John, and a near-term one. But all eyes of this market right now seem to be on tomorrow's election, John.
Kelly Lyons, very much so. Thank you. 27 minutes away from that opening bell. Equity futures up 30 points. We advance 0.9% on the S&P 500 as the presidential candidates enter the final straight.
We're at an inflection point.
There's not going to be a transition. We're winning.
We cannot afford 4 more years of Donald Trump.
We're leading all over the place.
We're going to win this election.
There's no way you're putting that guy in. I don't believe it. There's no way.
We're done. We're tired of the tweets, the anger, the hate, the failure, the irresponsibility.
If Biden wins, China wins. When we win, America wins.
It's time to take back our democracy.
We are going to keep on winning, winning, winning.
We're going to change the course of the country and, quite frankly, the world.
We are going to win Iowa, and we are going to win Wisconsin. And we are going to win 4 more years in that very beautiful White House.
President Trump is terrified.
Tuesday's going to be beautiful. Great red wave.
And we all hope we actually get a result come Wednesday morning. That is the market's greatest fear. Pangaea's Terry Haynes optimistic about markets in the wake of the election. He writes the following. A lightning split government is the main but not immediate market positive. Washington in 2021 is 60% likely to be split with a smaller Republican Senate and Democratic House majorities. This would be a market positive since rolling back market-friendly major legislation, including the 2017 tax law, would be very unlikely. Terry, I'm pleased to say, joins us now. Terry, let's just start on the great unknown, or a list of unknowns, which I know is something you're looking at with 48 hours to go. Walk me through your number one.
My number one is the enthusiasm gaps, plural. If you look at polls, you'll always see that Trump voters are much more enthusiastic than Biden voters. But on the other hand, there's a great deal of enthusiasm for getting Trump out of office, anti-Trump voters. So which enthusiasm gap prevails is frankly an unknown. It's not something that's really been polled much or polled well in my estimation, and something that's drastically going to affect this election. I mean, it's the basis of what we talk about when we talk about whether the early vote means anything or not, and if so, what.
Terry, you know the punditry and the cheat guide to punditry around an election, you say it's always about turnout, and try and sound intelligent talking about turnout. So can we try and sound intelligent talking about turnout now? We've talked about the numbers. It runs into the millions. We know that. 80, 90 million already voting, Terry. Have you got a decent read on where that vote that's already in the can, where it's gone?
I think intelligence in this case probably equals humility more than anything else. You see all kinds of numbers from all kinds of places. Certainly, there's been record-breaking turnout in a lot of places. Texas, it comes to mind. But also, the numbers you see don't give you a clear sense of whether the turnout is predominantly Democrats coming out to defeat Trump or anybody else coming out to defeat Trump, or whether they're early Trump voters or anything else. There's not a real clear cast to this. I would urge strongly that people don't read much of anything into this. What this reminds me of is 2004, when the John Kerry campaign was talking about exit polls in Florida, meaning that they were very likely to win, to the point where he was congratulated for being president. And that turned out to be disastrously wrong. I would really urge strongly that that people don't read anything into this other than a lot of people voting, number one. Number two, you know what you're going to get on election day to some extent, which is a lot of people who haven't voted before now coming out and voting, and probably predominantly Republican. So, whether this guarantees a Biden victory or not, I think is anybody's guess, and it's a fool's errand to try.
Well, Terry, let me just try doing one thing, and you can call me a fool if you like. So many people come on the show and talk about the 2016 comparison and the polls back then and how they've been conditioned by that not to believe these polls. And you've already talked about the vulnerability of these polls. A lot of work's been done. Can you talk to me about the strength, if there is a strength of the polling that has been done? Where is it, Terry?
Well, the strength, I think, is in aggregates and in generalities and trends more than anything else. One reason that I try to use an aggregate of the Real Clear Politics aggregate of battlegrounds to show just how close things are. Biden's certainly up, but he's up by the margin of error. Is that an ironclad, and he's up more than Clinton was in 2016. Is that some kind of ironclad guarantee you ought to be reliant upon? I would suggest that you don't rely on it, but at the same time, what it shows is that it's a more daunting task for Trump to run that inside straight twice than it was the first time in 2016. And so you can get a general sense of the way things are going, but on specifics in an election this tight, I still urge a great deal of caution.
Terry, just a final question for me about the process on the morning of Wednesday. When we work through this and start to get through the results, there are some huge worries about this being contested and one side or the other or both calling it for themselves before it is said that you should be calling it. And Terry, I just wonder from your perspective, offer our audience, investors, a guide for Tuesday night into Wednesday morning and how to navigate some really choppy waters that we might have to navigate.
Well, I think you're going to be, if you're looking for a quick election result, I think you're going to be disappointed for two reasons. One of them is the litigation you're talking about, but the first one that happens is that so many states will be very, very cautious about releasing results, and so they're not going to, and that doesn't even include the early vote, much of which doesn't get in different states doesn't get counted until starting on election day. So you're going to see very late results, number one, and you're going to see I think you're going to see markets say there's no clear winner here, and people are going to start grasping at straws and grasping at rumors, looking back at the early vote, all that sort of business. And for myself, I would urge markets to be patient and not read too much into shadows, because things can change and change back again, as we all saw in 2000. So,
Terry, calling for patience in markets, that is truly a fool's errand, sir. Terry, it is great to catch up with you. Terry Haynes there of Pangea, thank you very much. 20 minutes out from the opening bell. Equities up nicely going into this after a really bad week for the equity longs last week. We advanced 35 points, up a little more than 1%. Let's get you to the market desk and get you some moves, and welcome back in for the first time this hour, Bloomberg's Abigail Doolittle.
Thanks so much, John. And after last week's big stock market rout, the worst week for the major averages going back to March, we had something interesting going on. Outperformance for the cyclical sectors over tech. Now, we do have tech investors trying to step back up. Apple up slightly, Microsoft up about 0.6%. But after last week's less than perfect earnings, those tech investors still having a difficult time. Where we have a better bid, though, JP Morgan, the banks up about 1%, even as yields fall, as bonds rise. And most surprising, John, might be the fact that with oil tumbling on the day off of the lows, but at the lows, as you know, down 6%, oil, energy names, they are higher. Royal Dutch Shell right now up 1%. So it seems that the cyclical investors that trade, they're trying to exert themselves this Monday morning, John.
Abigail, thank you. Coming up on this programme, the pandemic remaining front and centre. Daily cases surging in many parts of the world, leading the United Kingdom to lockdown. Nuveen's head of fixed income strategy, Tony Rodriguez, joining us shortly. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points. So continuing in this knee-jerk risk-off feel.
Very shortly, within a couple of weeks, we're going to have safe vaccine that will end. And now look, we're rounding. They hate when I say it, the fake news, but we're rounding the turn. We're rounding the corner.
Imagine where we'd be if this president just wore a mask instead of mocked it from the beginning.
Europe imposed draconian lockdowns, and cases were surging, and deaths were surging. But think of it, draconian. Now they have to do it all over again. What the hell are they doing? I think I'm going to go over and explain it to him.
President Donald Trump and former Vice President Joe Biden sparring over the handling of the coronavirus pandemic. This as large parts of Europe re-enter some form of lockdown this week, with England joining a growing list of countries imposing tougher restrictions. Back with us is Bloomberg's Guy Johnson. Guy, the question we heard a lot of last week, I'm hearing it again this week. Who's next?
Well, I think probably the major countries are already kind of where we would expect to be now. Over the weekend, we saw the England joining, as you say, France in a tighter lockdown. Italy's gone to a three-stage lockdown process this morning. John, Angela Merkel, the German Chancellor, warning that the light at the end of the tunnel is a long, long way off. She's certainly talking about a very hard winter. I think we are kind of now at a point where we have most of the major economies heavily restricted. Schools are staying open in most places. Some businesses are staying open if you can't work from home. But we're kind of almost there now. The question now is, how long does it last? Getting into these tighter restrictions is one thing. Getting out of them, very difficult. Michael Gove here in the UK over the weekend on one of the Sunday talk shows indicating that December the 2nd, which is currently the scheduled date at which England will exit the current system and return to the three-tier system, well, that could be expanded, that we may go beyond that. The UK could remain in its current structure of a national lockdown until way beyond that. So I think the question now is, how long does it last? How long does it take to control the virus? How long does it take for the data to start to show that these lockdowns are having an effect, John?
Just looking at the screen this morning, a bounce back from last week's equity losses. And for the markets, Guy, let's just finish there and pause for a moment. The balance of risks around this market, the big downside risk is the duration of this. It continues, double dip, I think is the base case now. But this persists well into 2021. That's the downside. The upside, Guy, is you get some really constructive vaccine news in the next month or so. And you can see this going the other way.
Absolutely. And the markets, therefore, is caught between those two narratives. The situation in the UK is very difficult. The situation in France is very difficult. The situation in Germany is very difficult. One side of the economy, the manufacturing, looks OK. So you need to bear that in mind. The services side, the hospitality side, looks very difficult. That will benefit. That's the high beta trade on the vaccine news coming out. So you can't go all in on one side of the story, John. You can't become too negative at this point because the potential for a tail at the other end could certainly come back and has the potential to grow. And as time progresses, the possibility of that vaccine news becoming more and more real has to be there, though most indications from the scientists, certainly over here, seem to be that we'll probably have to wait until at least next year, the early part of next year, before that vaccine program starts to be rolled out in a meaningful way. And then you've got to worry about how many people are ultimately going to take it. But there is the potential for volatility on both sides, John. Certainly two-way market. The price action last week, obviously very brutal. it was never going to be a straight line.
Guy, looking forward to the coverage in about 40 minutes' time alongside Alex Steele following this programme. Going into the Open about 13 minutes away. Want to whip through things for you. Futures are advancing up 36 on the S&P 500. It's the move in bonds we'll get to in just a moment. It's the positive correlation between bonds and equity that I know has got a lot of attention. Yields come in 3 basis points to 0.84%. as the equity market rallies. Here's the take from Nuveen's Tony Rodriguez, keeping a cautiously optimistic outlook. He writes the following. Sharp increases in coronavirus cases in the US and Europe, along with the reintroduction of business restrictions in Europe, have reduced risk appetite. We expect elevated volatility amid a gradual and bumpy recovery. Tony, I'm pleased to say, joins us now for more. Tony, a little bit later in this programme, I'll catch up with Peter Cheer of Academy Securities, and a focus of that conversation is where I'd like to start this one as well. It's not just about the elevated volatility, it's about the breakdown of traditional correlations. What does that mean to you right now, Tony?
Well, Jonathan, you bring up a great point, is that correlations have broken down. We think one of the biggest drivers of that is central bank intervention. So the Fed, the ECB, the BOJ, they are clearly distorting market signals from the Treasury market. So it's very difficult right now to find that uncorrelated asset. So what it means to us for investors is that you have to go kind of one step back, and you have to look at diversification as really being your primary kind of protective strategy within a portfolio. So you can't count on treasuries to do that. You're not going to find a diversified portfolio with a negative correlation to equities the way treasuries do, but you can find a portfolio that replaces treasuries with much higher income than what treasuries provide, obviously, still have decent liquidity, and have a lower correlation to equities, not as bad, as low as treasuries, but we think that that is the approach. It's de-risk to the point where you are comfortable with the volatility we're expecting, but have a diversified portfolio to try to hedge a little bit of that equity risk in your portfolio.
Tony, if that uncorrelated safety isn't out there, can you tell me where I find something that is both low beta and high income?
You know, very low beta, tough to find. When we talk about high quality, low beta, we always say call 1-800-NO-YIELD, and you'll find a lot of sovereign debt. But what you can find, Jonathan, is you can find kind of income generating assets across high yield and leveraged loans, emerging markets, preferreds, and investment grade credit, where if you have a diversified portfolio there, you can still generate a 3.5%, 4% type of yield from that portfolio and have a correlation that's less than 0.5. Again, not a negative correlation, but a reasonable construction in the context of a no-income environment without very effective, highly uncorrelated assets available.
Tony, in a really choppy time such as this one, and with the prospect of forced de-risking, I am thinking about what is the biggest consensus trade out there. And if we really think about the biggest consensus trade out there, for me at least, from the conversations I have, and it's anecdotal I know, it's got to be the follow the Fed strategy. So, Tony, I'm thinking about that developing as a pain trade, not because I think as a base case it will happen. I just want to talk about the risks of that happening with you now. Tony, what's the biggest threat? What's the vulnerability around the follow the Fed strategy, which takes you into credit and the pockets of fixed income where the Fed's a buyer?
So we think that the biggest risk in that strategy is if you take it too far. So when we talk about credit markets, we talk about approaching it in the mid-quality segment, low-quality investment grade, kind of mid to upper quality below investment grade. If you take follow the Fed and think that that is a way to justify investments in the very lowest quality segments of the market or in the most COVID-affected sectors of the market, travel, leisure, et cetera, that's when we think you can get in trouble with follow the Fed. But if you do it in the context of avoiding what they're actually buying, because they've made treasuries much too rich, and not taking it too far into the lowest quality segments of the market, that's where we think it's an appropriate strategy to follow the Fed.
Tony, I saved the most annoying question until last, and we've got about 30 seconds for you to answer it. Do you have a trade going into Wednesday morning, Tuesday night?
No. It's impossible, we think, to really have a trade around the election outcome, especially because we think it'll be unlikely to have a result Tuesday night, possibly by Wednesday morning. So really, I think that trade is to be pretty well diversified, and we say be at kind of the midpoint of your risk budget. You don't want to be over your skis on risk heading into that uncertainty around the election.
Hey, Tony, always great to catch up. Appreciate the guidance. Tony Rodriguez there on this market. Coming up, the analyst action you need to know. That'll be next in our morning calls. And later, JP Morgan's Mislav Matejka joins us to discuss the top trades for the US election and why he is now overweight banks. Looking forward to that. From London and New York, this is Bloomberg.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
About 4 or 5 minutes away from the cash open in New York City. Equity futures bouncing back 34, in and around 3,300. We advanced a little more than 1 percentage point. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Guggenheim, upgrading Kraft Heinz to a buy, a $35 price target. The analyst expecting the pandemic to fuel another few quarters of strong demand. That stock up by about 1%. Stifel upgrading Under Armour to a buy, a $17 price target. The analyst expecting greater confidence in the stock after the retailer topped earnings estimates and raised its outlook. And your third and final call, it comes from Morgan Stanley, upgrading Wynn Resorts to overweight, a 95 price target. The analyst expecting growth to rebound next year with travellers and spenders returning to Macau. There are three of the calls coming up next. Less than 24 hours until the US election. JP Morgan's Mislav Matejka joins us to discuss why he's moving out of tech and into the financials. That conversation next. From London and New York, this is Bloomberg.
Just days away from the most
purchases forward guidance that expand what monetary policy can do. But there are some limits. It's important for fiscal policy to fill in that gap.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Well, last week wasn't fun for the equity market bulls, was it? We were down about 5.5% on the S&P 500. The worst week going back to March. I guess Monday morning is your bounce. I'm sure someone will give you a narrative. I'm not going to give you one. 37 on the S&P 500. That's how much we advanced. On the NASDAQ, up by about 0.8%. There's your opening bell. Switch up the board into the bond market. Election result Wednesday morning, maybe. Fed decision Thursday, definitely. Friday, payrolls, definitely. But it's the maybe you're all focused on. Yields 83 basis points on a 10-year. Call it 84. That positive correlation that I know is really haunting you all at the moment, it continues. Bonds bid, equities bid, yields lower 4 basis points. So the FX market, a euro at 116.32. Services PMI okay. Heads up on the services PMI, rather. Manufacturing PMI okay. Services PMI could be deep below 50 once again in Europe for the month of October. In a crude market, it picks up on the situation for demand coming out of Europe. WTI $35 and about 50 cents. Russia already talking about what they can do with others to try and stabilise this market. That means crude is off the lows. We're down just 0.8%. That's the cross-asset picture this Monday morning. Good morning to you all. At the market desk with your movers, here's Abigail.
John, well, we do have a very strong rebound rally today, as you're showing there after last week's big sell-off. So let's take a look at some of the biggest movers, some of the movers that weighed last week, because today they're helping out. Starting out with the banks, despite the fact that yields are falling, we have a nice rally for banks, perhaps on that narrative that you're talking about around the positive correlation between stocks and bonds and yields coming down, really helping out stocks. That seems to be enough to also help out energy. Chevron and the other big oil majors up sharply. Chevron up 1.7%, even as oil is down at 1 point, down 6%. The really important sector, though, the worst sector last week, the tech sector falling about 6% last week. Its worst week since March. Today, a nice bid in part on Microsoft up about 0.8%. Let's see if those tech bulls can stay in place. Now, turning to the virus, we, of course, do have a resurgence of the virus, the additional lockdowns, including there in the UK where you are, John. We not surprisingly have some of the travel and leisure stocks down sharply. The cruise line operators, Carnival and Royal Caribbean, both down sharply. On the other hand, Clorox, the bleach company, up 3.2%. They put up what some analysts are calling a blowout quarter. They also raised the forecast. And Costco popping, perhaps in rebound from last week, but also up about 1% today. This on reports, John, that some Americans are starting to hoard again. So some virus influences on the market this week as well, John.
Abigail, thank you. Thank you very much. About 2 minutes into the session, equities advanced 1% on the S&P. Top of the pile, materials and healthcare. The pendulum has swung so aggressively in the last couple of months, even as the polls have remained really, really stable. The pendulum's gone from contested election to blue wave, back to contested election. 2 months ago, a blue wave. Well, that was bearish. 2 months later, a blue wave. That's now bullish, apparently. At least that's what I'm told on programs like this. Wall Street has been warming up to the idea of a Biden presidency. But UBS's Stuart Kaiser cautions and stresses the need of a corresponding blue wave.
If you look back to over the summer, the blue wave was not necessarily considered the best outcome by a lot of equity investors. And over the last couple of months, it has become not only the best outcome, but almost a necessary outcome.
The necessary outcome, apparently, to understand the runway towards another fiscal package. On the story, Bloomberg's Sarah Ponzek. Morning, Sarah.
Morning to you, John. 2. That is the number of trading days standing between us and election night. Now, we'll see if we get an actual result that day, but still, it's unbelievable to think it's already here. At that, though, sure, markets may be higher this morning, but it's been a bumpy ride. Just last week, the S&P down 6%, the worst week since March. That makes it the worst week before a presidential election on record ever in history. That also puts a time-tested predictor of presidential elections in jeopardy. That is, for a Trump win, at least. That is the 3-month performance of the S&P in history. If that has turned negative, we have only seen the incumbent party win once. Now, right now, it's kind of flirting at that unchanged level between gains and losses. But at that, like you said, markets have been warming to the idea of a Biden presidency, but a Biden presidency that is also accompanied by a Democratic Senate. So your blue wave, your blue sweep, of course, as it's been called. Now, at that, there is one area of the market, though, that has obviously not been warming to that, and that is companies that pay higher tax rates, considering the fact that Biden has proposed to raise the corporate tax rate from 21% to 28%. Right there you see two Deutsche Bank baskets of stocks, one with higher tax rates, one with lower tax rates. As you can see over the last month, those that pay higher taxes have fallen. Those that pay lower taxes have actually risen more than 2%. But should this blue wave take form, that is the Biden presidency, but you also get that Democratic win in the Senate, all important, the expectation is that we will see outperformance from value, from small caps, from cyclicals. We've heard QMA, we've heard Credit Suisse, among others, call for this, and you can see this right here. Well, that's already taking shape. Last month, we saw the Russell 2000 beat the S&P by the most since 2016, November of 2016, so that last presidential election. We've also seen value now beat growth for 2 months straight. Of course, that's after 11 months of losing, though. So the all-important question is this the start of a true sustainable rotation? How much does the election come actually have to do with it? Or is this just another head fake, as we have seen many times before, John?
The elusive rotation. Sarah Ponzet, thank you. Sarah Ponzet doing some brilliant work over the last couple of weeks. The last few years, I know, but the last few weeks on the election going into this result. JP Morgan's Mislav Matejka expecting the election to broaden out the market's leadership, writing the following. We would use any weakness to reposition the portfolios for 2021. A good starting point for the rotation would be taking profits on tech overweight. That certainly happened last week. And adding to the financials. Mislav joins us now over the phone. Mislav, love getting you on the programme. Thanks for joining us today. Let's just start right there. Why do you like the financials, sir?
So the starting point is extreme. You have right now technology up 20% on the year, banks down 40% on the year. Growth versus value run that we have seen year to date has never, in at least the last 50 years, we have the data been witnessed. So in my view, this is an important starting point. And then the elections, our call is irrespective of who wins, the rotation will happen. The market is primed for the rotation here.
Mislav, is the underperforming dividend factor part of the same story with the financials?
Yeah, I would say so. I think a lot of banks could have paid dividends, but they were not allowed to. They had to cancel. So this huge collapse in the banking stocks, which up until last week were still down 40%, that would be turning around, in my view, if the dividends were to come into play. In addition to what you talked about before, I think bond yields, you can't run away from the bond yields. Last 6 months, bond yields did not play ball. PMIs rebounded, but bond yields stayed flat. And that's why growth kept outperforming value. If the dividends and the bond yields were to turn, then the value will perform.
What gives you confidence, Mislav, that they will, that bond yields will turn?
You have a few things here. First, the stimulus will come irrespective of who wins. In the last 2 months, market is working through this mini W. We are calling it a mini W part of the cycle. You had a V and then a resurgence in the virus and stalling PMIs. That is a bit of a problematic situation for the bond yields. However, after the elections, the stimulus comes through again. You could potentially have less trade uncertainty, weaker dollar, more clarity politically. And then very importantly, the labor market. Labor market has been a deflationary force. You had a negative private sector wage growth all the way through in the last months. Around the turn of this year, we think the private sector wage growth will start to bottom out, and that will allow Fed to put their foot off the bond yields, and bond yields could actually pick up.
Mislav, this is a big call to think that bond yields can pick up materially, given what's playing out in Europe right now. Can you connect Europe and just join the dots for me here? Europe, I hope it's a mini W, but I think most people's base case is it could be worse than that, Mislav. Where does Europe fit into this call?
We have been the whole of this year overweight U.S. versus Europe because we have been long technology versus banks. And Europe, you saw in the last 6 months, Europe went nowhere. I mean, Stock 600 is where it was in May. However, I think there is going to be an improvement in Europe as well. We had a bit of a weakness, a bit of a de-risking in the last few weeks. The market is now absorbing the lockdowns and shutdowns, so that is starting to move, in my view, within a few weeks behind us. And Europe is ultimately a prime value play. If you think banks will start to perform better, and we actually finally do, we have made this switch, then you should not ignore Europe.
So, Mislav, my final question to you is time horizon for this trade. As I look out the next 5 to 10 years, this is a difficult call, but it looks like trend growth is lower. That means interest rates will also likely be lower. Our tolerance for higher rates has clearly diminished because we've added so much debt to this economy. Over the long term, do you see that as an environment where banks can have this durable outperformance over a long period of time? Or is this an 18-month, 12-month, 2-quarter trade? What is it, Mislav?
In my view, it's not 5 to 10 years. This is not a regime shift, but this is 2016, 2017 type of a 3 to 4 quarters trade.
Okay.
Like then you had a crash and you have stimulus and a reacceleration. So it's going to be a meaningful trade.
Mislav, appreciate it. Appreciate the clarity there as well. Good luck over the next couple of days to you and the team over at JP Morgan. Great work on this note. Fantastic read. I want to get back to the market desk on this market. We do advance with your movers. Here's Abigail.
John, let's keep it super simple relative to the S&P 500 at least, and take a look at the 2 biggest point boosts and the 2 biggest movers. As for the point boost, not surprisingly, it's tech. Those stocks that were so beaten down last week, we have buyers out, both Apple and Microsoft being bid up, investors buying the dip after last week's disappointment around less than perfect earnings. As for the biggest percentage movers, and the reason Nielsen up about 7%, the reason that the industrial sector is close to the top, they put up a strong quarter, but they also are selling their Global Connect business to Advent for $2.7 billion. So again, that's the best stock within the industrial sector. And then Estee Lauder, the second best stock for the S&P 500, are right around there. They put up a strong quarter going into the holiday season. Investors liking it, really buying last week's dip right across the board at this point, John.
Abigail, thank you. Coming up on this programme, if you're a journalist and you could design a trading week and you got 3 picks, a political event, a central bank decision and a data point, it would be this week right here. Coming up this week, a contentious battle for the White House, a Federal Reserve decision and payrolls Friday. That conversation up next with Academy's Peter Cheer. From London and New York, this is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
The market is still worried about uncertainty over next week's election, uncertainty over the rising coronavirus, and potential of more fiscal stimulus and or inflation. So all of that is more than offsetting a giant buy for the bonds from the Fed and what should be chasing people into it. Instead, they're looking at this news and selling it off.
Really great to catch up with Bianco Research President Jim Bianco, weighing in on the big market moving events this week. And what a week, a crucial stretch for investors. With the week ahead, Bloomberg's Michael McKee joins us now. Hey, Mike.
Good morning, John. Well, it's the first of the month, so that means PMI day around the world. China still expanding, and a host of good numbers out of Europe this morning, but maybe a last stand as they begin to lock down. We just got the market PMI for the United States, comes in at 53.4. That's just a tenth higher, not statistically significant, but it suggests the manufacturing economy is still growing, at least as we head into higher COVID cases. Now, the number of the day is the ISM comes up at the top of the hour. Improvement expected there as well. Tomorrow, of course, nothing's happening. The question is, will tomorrow linger for the rest of the week and overhang everything else we do? Will we know what's happened in the election by the time the Fed meets on Thursday? Wednesday is the start of the Fed meeting. We get the ADP report as well that day. Always traded, not always very accurate in terms of the payrolls number. But Thursday is the Fed and the Bank of England. They have the same problem, no visibility out there. Not only do we not know who's going to be president, but we don't know what the virus caseload is going to be like in the months ahead. We have an idea of what will happen because of the lockdowns in the UK. Is that ahead for the U.S. and for the Bank of England, of course, not just the virus, but whether Brexit. Friday, the question is, will the jobs report be a key question, or will we only be talking about the presidential results? As of today, economists say we should see about 700,000 jobs created in October, another slowdown. But if there is good news out there for President Trump, it's in the Conference Board consumer confidence figures from last week that showed Americans think there is a rising possibility of more jobs being available. So one good mark for the president as he campaigns. But again, Friday, a long way away, John.
A lifetime away. Michael McKee, that's a quote. Always traded, not accurate. That's Michael McKee throwing some shade at traders, as he often does. You've got to listen carefully. But every now and again, he'll just throw a little bit of shade at you out there. Mike, thank you. Peter Cheer of Economy Securities saying any outcome on election day is still better than the current uncertainty. Writes the following: markets will have to digest the election and determine what the results mean, but that should be a far easier task than currently having to assume almost any possible scenario could happen. The Fed will remain agnostic to the election. Peter joins us now over the phone. Peter Cheer, fantastic to catch up with you, sir. Just give me your guide, your playbook for the next several days.
You know, I think we want to see what happens with the election, and from there we'll be able to make decisions on what should happen next. I think really for the markets over the coming weeks, it's really going to be about stimulus. Does anything happen to the election that changes the course of stimulus? And if it doesn't, I think markets can rebound pretty nicely because stimulus does look like it's coming. And then, as we've seen before, time and time again, politicians almost need their feet held to the fire to do something in terms of stimulus. With COVID cases rising, Europe deteriorating, and possibly weaker jobs data coming in, I think we are going to get that stimulus.
Well, Peter, you had the confidence to come out in April time and talk about leaning into cyclical risk, leaning into risk assets. When the world effectively was shut down, Peter, now we're starting to see Europe effectively go into lockdown. Different to spring, but still nevertheless not what we hoped for in the summer, looking out to 21 and looking to the back end of 20. Are you willing to do the same thing again, Peter?
Yes, I still like the cyclicals. I think we are going to really get stimulus, and it's going to be more than the Band-Aid stimulus. We're going to see some infrastructure spending, and we're going to see things that can kind of really boost the economy. And valuations are still quite low for a lot of these stocks. So I think that's where the opportunity is. And we've seen it for the past few weeks where you've really seen, say, the Russell 2000 and some value stocks actually outperform big tech. It's not happening today, but I think that is a trend that's in place, especially as we march to slightly higher yields.
Well, let's talk about another trade, in fact, two. Elevated volatility and the breakdown of correlations. Peter, I know you're paying this a lot of attention. What do you think persists more? Is it the elevated volatility, the breakdown of correlations, or both?
I think for me, it's really the breakdown of correlations. I think we've seen equity vol be elevated for quite a while. We're just starting to see that in the Treasury market. You're seeing that MOVE index creep up. But last week, you really saw this correlation breakdown where Treasuries did not act as a hedge against your equity portfolios. In fact, both were going down at the same time. And so anyone who runs a risk parity type strategy or really is thoughtful about their portfolio risk, they've got to look at that and wonder if they have to cut back on both equities and Treasuries into this period of changed correlation.
So, Peter, what do you suggest people should do if that's what you're expecting?
You know, I think you want to be very nimble. I'm comfortable owning some credit here. I do like the beaten down sectors much more, and I think you take some profits, particularly in the big tech. Then again, we might get some rhetoric that's bad on corporate taxes, things like that post-election. And you go back to 2017 and 18, corporate tax cuts did help the market a lot. So I want to take some profits on the big winners, keep reallocating to the areas that have been left behind, and I think you're fine with credit and avoid treasuries.
Are you not worried, Peter, that the US goes the same way as Europe?
I'm clearly a little bit worried. You know, we're seeing this caseload rise. We're, in fact, seeing more hospitalizations. I do think, though, we're better at dealing with it. And ultimately, just like we had at the end of March, if we start heading that way, I think we're going to get even more stimulus. So it's almost this, catch-22 where it was easy for D.C. to ignore the need for stimulus when the stock market was going up every day, COVID cases were contained. So I think we get back to a situation like we saw in March where as COVID cases start rising, hospitalization comes through, D.C. gets its act together and delivers the stimulus that probably should have been done 3 months ago.
Peter, I'm not criticising you. It just always entertains me when people say things aren't great right now, but I'm bullish. But if things get worse, I'll be even more bullish because we get more stimulus. And Peter, I know you're not saying that. It's just what people might hear. Peter Cheer, fantastic to catch up with you, sir. As always, Peter Cheer there from Academy Securities. Let's get you some sector price action. An equity market that drifts higher, maybe rips higher off the lows of last week on the S&P 500 and across Europe. Here's Abigail.
John, this morning's sector action is somewhat slippery. It is risk on, though, not surprisingly, with those big gains. And the reason I'm saying it's slippery, we've gone from the cyclicals to the growth and defensive, all trying to take on the top spot. Right now, it is more cyclical with the materials up top, consumer staples trying to sneak in there, industrials. The point to be made, though, all green on the screen. Most of these sectors, 10 of the 11 sectors, up by 1% or more, really trying to reverse last week's big sell-off. Energy on bottom, in sympathy with oil. As for the biggest movers to the upside on the day, John, that has to do everything with the mega cap tech stocks. There's a hole to be climbed out of, though, not surprisingly. Last week, the FANG index down sharply. Tech was the worst sector last week, down 6%, its worst week since March. But today, we see that some of that weakness has been rebounded as Apple, Microsoft, Facebook, and the like. They are trying to get a bid from traders. Right now, it's happening. Let's see whether it lasts into the end of the day, John, until 4 o'clock.
Abigail, let's get to 4 o'clock today and then focus on tomorrow and the day after. What a week we've got ahead of us. And Michael McKee pointing out correctly, payrolls Friday just feels like a lifetime away. Coming up, the market-moving events you need to be watching through today and into the week in our trading diary. From London and New York, with equities drifting higher, pushing higher, this is Bloomberg.
time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio. I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The worst week since March, potentially followed up with the biggest day of gains since the middle of October. The S&P 500 up 45. We advanced by 1.38%. The Nasdaq up by about 1.4. Top of the hour, Michael McKee breaking down the ISM manufacturing figures. A couple of days' time, we'll get the ISM services. Then it's the three events that matter to everybody. The final stretch of campaigning for the president in North Carolina, Pennsylvania, Michigan and Wisconsin. Joe Biden making his last steps in Pennsylvania and Ohio. Tomorrow, of course, the main event, Election Day in the United States. Then following that, it's the other two that hardly anyone's thinking about. The Fed on Thursday and payrolls this coming Friday. From London and New York this morning, good morning. Thank you for choosing Bloomberg TV. This was the countdown to the open. Catch me on Twitter at FerroTV. You're watching Bloomberg TV.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
3 p.m. in London, 10 a.m. in New York. London and New York separated by 5 hours again. 30 minutes into the trading day in the United States. From London, I'm Guy Johnson. My co-host in New York, Alex Steele. Welcome to Bloomberg Markets. Alex, what a week.
Welcome. 24 hours until Election Day. We also have the Fed on Thursday. Let's not forget about that, plus Jobs Friday as well. So lots to digest here, plus that global sell-off that we saw on Friday. So really dismal week for the markets. Today, we're on the front foot. 3,200 was the area many were watching for the S&P. We're obviously well above that, over 1.5% here, holding high. Morgan Stanley Mike Wilson saying, look, buy the dip. He sees a broadening out of market participation based on earnings. One asset, though, that's not holding up, and that's the euro below its 100-day moving average. Euro dollar moving lower. The VIX, though, taking a break. Oil making a pretty strong comeback. Was at a 5-month low just hours ago. We'll talk about oil in just a second in terms of what that says about the global economy. Guy?
The ISM manufacturing number is out, and it's smashing it. Mike McKee's here to break it all down.
Yeah, maybe too late for an influence on the presidential election, but certainly influencing the way the markets are going to trade, because this is a big number. 59.3 in September. It was 55.4. We thought there might be a slight tick up, but this just blows that away as the manufacturing industries in the United States come back quickly. New orders, 67.9 from 60.2, and production 63 from 61. And for the first time since July of 2019, we are seeing employment above 50, 53.2, which augurs well for this Friday's numbers, at least. Maybe we get some positive manufacturing. Prices paid still rising, 65.5, 62.8. Hard to know exactly what that means in terms of long-run inflation, since we do have the confusions of the COVID case. Is it a shortage of materials? Is it a pipeline problem, or are we actually seeing prices going up? Exports for the year looks like the new export orders goes up to 55.7 from 54.3. That'll take a hit from the lockdowns in Europe. But overall, this is a very good number for the economy going forward.
Have to wonder, though, how much is it like we've seen in Europe, where manufacturing comes back, services, though, still a little dicey.
We had great numbers in Europe, and then
fell apart.
It's going to, probably drop off now that they're locking down.
All right, Bloomberg's Mike McKee, thank you very much. As I mentioned, less than 24 hours to go until Election Day. You got Democratic candidate Joe Biden leading President Trump in polls nationally and in several key swing states. Joining us now with more is Kevin Cirilli, Bloomberg Chief Washington Correspondent. Kevin, give us the lay of the land.
Well, here we go. Ready, set, go. That's both sides try to barnstorm their way into Election Day to get out the vote in key battleground states. Democratic presidential nominee Joe Biden going to be focusing on what has become an incredibly important state for both sides. That's Pennsylvania. He's also going to be making a stop in Ohio, where, according to swing state polls, he is within striking distance, just down 1 percentage point, well within the average of polls margin of errors in the Hawkeyes, or in the state of Iowa. Meanwhile, the president going to be keeping a marathon pace as he goes to several states today, including North Carolina. North Carolina, of course, also the site of a very contentious Senate battle where Senator Tom Tillis is going to be locked in a dead heat with Cal Cunningham, the Democrat challenger. So this is really down to the wire here as both sides try to focus in on these swing states. And we'll know, can you believe it, Alex, just in a couple of hours when those first polls open, less than 1 day from now, Alex and Guy.
Wow, what a 24 hours we are counting down to. Kevin, thank you very much indeed. Yeah. Kevin Cirilli, thank you very much. Joining us now for more analysis on what we should make of these last few hours. Jeannie Zaino, Bloomberg contributor and Iona College professor. Jeannie, welcome. What's your read this election eve?
Well, I hope Kevin is right that we know a lot more in 24 hours than we expect we might. If this thing comes down to Pennsylvania, as he was mentioning, such a key state where they are spanning across the state today, these candidates and their surrogates, if it comes down to Pennsylvania, we may not know for a few days or longer after this thing wraps up. So I'm trying to be optimistic, but I think Kevin may be more optimistic than I am at this point.
Jeannie, there were some talks over the weekend that President Trump would declare himself the winner if it looked like it was going in his favor. That report came from Axios. Trump denied that. The campaign denied that. But if that happened, what does that look like tomorrow night?
It looks like something we've never seen in American history, where you would have an incumbent president before all the votes are counted saying that he is or declaring himself the winner. I still have trouble believing that is the case, and I hope when the president and the campaign come out, I'm going to take them at their word that that is not going to happen. We have to count every vote before we know who the winner is if this thing is close.
Which is going to cause greater volatility, do you think? The presidential race or the Senate races?
They're both so incredibly exciting and impactful in terms of the markets, for instance. I think the Senate is really important to watch. There is a very good shot that Joe Biden takes the presidency and Democrats take the Senate, right? It's certainly not guaranteed. We don't know on either score. But if that happens, that promises to change policy in Washington, D.C. We would have, for the first time in quite a few years, we would have an all-Democratic Washington. And that would say something about a variety of issues, from taxation to regulation to the environment to education, certainly a stimulus bill. So we want to watch out for that. And, you know, a year ago, we wouldn't have said that Democrats are in striking distance of the Senate, but they clearly are now. And Kevin was just mentioning one of the key races to watch, North Carolina, but there are others as well. Maine, we have Susan Collins, and you have just Senate races across the country that Democrats can pick off. If they get 3 and Biden wins, they have enough to take the Senate. If they get 4 and Biden loses, they have enough to take the Senate. So they're in striking distance there.
Yeah, Jeannie, can you define striking distance? Because I feel like the market's trying to then eventually understand the distinction between a blue wave and, say, a light blue wave, where you have a slight majority in the Senate, but that doesn't mean that all of a sudden everything gets through, versus something where you can end the filibuster and everything can get through.
Yeah, I am not one who thinks we're going to have a blue wave where Democrats take the Senate, you know, by huge numbers. And then, you know, really we get this unprecedented support for sort of far left progressive policies. We need to remember that some of these candidates are running in districts that are not incredibly progressive or liberal. They're more purple districts. So I myself think we're looking at, if anything, more of, as you called it, a light blue wave. I think Democrats have a chance now to pick up between 2 and 5 or 6 seats in the Senate. It's not going to change things completely, but with Democrats in control, certainly if they take the White House and the Senate, we could see policy changes afoot, certainly pulling back on some of what President Trump has done and under Mitch McConnell, the Senate has done in the last 4 years.
What do you think the period between now and Christmas looks like if Trump wins?
It's such a good question. You know, if Trump wins, you know, I think we're probably in it. Again, it depends on who wins the Senate. They obviously won't be in if it's the Democrats until January. But I think if Trump wins, I think we're probably going to see more of the same out of President Trump. I do think, I hope, and maybe I'm just being optimistic, that we would see a stimulus bill out of the Senate. I'm not convinced we will. But I do think that the bigger question is going to be, if Trump loses and the Republicans lose the Senate, what does the next 2 months look like? And I think that's anybody's guess. It's a long time for people who are lame ducks to be sitting there.
Jeannie, maybe an unfair question, but really micro tomorrow, when traders are going to be looking at numbers, polls, etc. What's the number one thing you're looking at? Because we've never been in this place where so many people have voted before actual voting day, and so many absentee ballots and mail-in voting, for example. What's the number you're looking at?
You know, I think what I'm looking at is, do we see a pickup from Joe Biden in any of these southwestern, southern states? And if we see him pick up a state in the Sun Belt early, I think it's going to bode very badly for the president. So that's the number one thing I'm looking at. I'm also looking at states like Indiana. We'll get those results early. It's certainly not a battleground state, but it has a number of voters who went from Obama to Trump. I think if we see that, you know, movement in favor of Trump, I think it's going to bode well for the president going forward. So those are sort of 2 key things I'm going to be looking for early tomorrow night.
All right, Jeannie, thanks so much. We really appreciate it. Looking forward to it. Jeannie Zaino, a Bloomberg contributor and Iona College professor. Thanks very much. And tune in to our special coverage of the election tomorrow. That kicks off at 7 p.m. in New York. Well, coming up right now, we're going to focus on the potential volatility around the election. We got you covered. Joshua Younger, J.P. Morgan U.S. rate strategist, managing director, and Manish Deshpande, Barclays head of U.S. equity and global derivatives strategy. This is Bloomberg.
Retail, I think, is strong. We see a lot of people ordering online or going to the grocery store and buying and eating at home. We just don't know what restaurants are going to do this year in the state of Florida, which is the largest consumer of the crab.
Details in the next couple of weeks. So, you know, I hope that optimistically we can look at, say, December, that we can, you know, start operating there.
Let's check in on the Bloomberg First Word News now. I'm Ritika Gupta. President Trump is suggesting he may fire infectious diseases chief Anthony Fauci after the election. Over the weekend, Fauci told the Washington Post the U.S. is, quote, in for a whole lot of hurt from the coronavirus this winter. There were chants of fire Fauci at a Trump rally in Florida last night, and the president hinted he may do that once the election's over. In the UK, one of Prime Minister Boris Johnson's top ministers says a months-long lockdown for England may have to be extended. Cabinet Office Minister Michael Gove says the lockdown will be reviewed on December the 2nd, and if the coronavirus data isn't good enough, the lockdown could continue. Scientists warn that the National Health Service may be overwhelmed by this latest outbreak. Former National Security Agency whistleblower Edward Snowden is applying for Russian citizenship. Snowden and his wife are expecting a baby. He cited the child as motivation to become a dual U.S.-Russian citizen. Russian President Vladimir Putin granted Snowden asylum back in 2013 after he revealed highly classified NSA surveillance programs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex?
All right, thanks so much, Ritika. So one of the things that traders were really bracing for this election season was a contested election. Now, this chart is the difference between November VIX futures curve versus the December VIX future curve, and you see that it's come down. Now, and then it came back up only recently. It means that some of the volatility shorter term is being priced out. Joining us now for more, Joshua Younger, J.P. Morgan U.S. Rate Strategy Managing Director, and Manish Deshpande, Barclays Head of U.S. Equity and Global Derivatives Strategy. We have you covered from all different angles here. So, Manish, the first thing for you is what's in the market right now? What's positioning? What does the hedging look like?
So right now, I think it is useful to think of the level of VIX futures of VIX as
incorporating two different effects, right? So one is an election premium, which we think is around, let's call it 10 vol points. And the rest is, let's call it sort of the COVID or vaccine risk premium. So right now, both of them are in play. But we think that if we get a decisive victory, let's say, Joe Biden wins convincingly tomorrow or the next few days, then that premium will come down. But the rest of the premium, i.e. what is happening in Europe and potentially here, and then the risk of a vaccine not coming through, that risk premium is still going to stay.
Same question to you, Joshua. What do you think's priced right now? What is the market signaling?
So we also have a lot of event risk in rates. It's more concentrated at this point around the election date itself by several measures. And so, typically you'll see an excess of maybe 1 to 2 times the background level of volatility. And this time around, we're looking at 3 to 4. That was as high as 5, 6, 7 times earlier in September. So, a lot of that has also been priced out, but there's a sense that the election could be a major catalyst. I think the key here is not just the presidential result, which is obviously highly relevant, but the fact that the fiscal outlook for both candidates is fairly similar from a rates perspective. We need to know what can get through Congress. And so the potential for the Senate to be up in the air for several weeks is a big part of this.
Yeah, Joshua, it seems like the consensus view to that is that if you have a blue wave, you're looking at a steepener. If you have a split Senate versus White House, you look at a bull flattening. That feels consensus now. Is it, and is that legit?
There's definitely consensus, or it's a consensus view. That doesn't mean it will happen that way. But I think the way rates behaved last week during the risk-off move is indicative of a market that is positioned for a blue wave. We really got very little movement in rates despite a pretty substantial sell-off in equities, and usually you'd expect those two things to be connected. So much of this blue wave view, I think, is priced in at this point, potentially taking some of it out recently. But I think the lesson of 2016 over the course of that evening is that the initial reaction of the market might be different from what ultimately gets priced over time. But definitely a reasonably high probability of a Democratic sweep priced in at this point.
Manish, if that's not the case, if President Trump wins, just give me a sense of how that will affect volatility pricing.
So I think it is important to break down the effect into the medium term and the short term. So in the medium term, the policy mix and everything else matters. Obviously, are we going to get a tax hike? Are we going to get the infrastructure spending plan? Are we going to get a larger pandemic-related fiscal stimulus? All that matters for the medium term. But to me, I think in the short term, what really matters is how quickly do we know the result. Right? So you can think of 3 scenarios. One is a decisive victory. Like I said, over the next few days, we know who the president is. The second scenario is sort of too close to call, which is similar to the 2000 election, that we are going through December and legal challenges are being mounted, but they do get resolved by early December before the Electoral College meets. The third scenario, which to me is a tail risk, but that is what the market is most concerned about, is that we're sitting in the middle of December and we don't know who the president is. Now, from this short-term perspective, actually, it doesn't matter who wins. As long as there is clarity and we don't get to the third scenario, I think that's going to be a positive thing on the margin. Having said that, the way that the market is looking at it, I think a Biden win, especially because that will result in a slightly bigger and more comprehensive pandemic stimulus bill, that will be viewed more positively. So even if Trump wins, immediately, maybe it will be upset victory, obviously, given where the polls are, but that might be viewed on the margin positively by the market.
Okay, so let me say something counterintuitive here, Manish. So the reason why we care about that uncertainty is because it dictates what kind of fiscal stimulus we will get, which is exactly what markets care about. But then we get this ISM manufacturing number, blows the doors off the barn, as we were talking about on our chat here. Do we need it? Like, is the number that the market thinks we need actually something that we need, and does that reduce the kind of upside potential?
It does to some extent, but keep in mind that we got another sort of factor now, that of a second wave in Europe and potentially, let's call it a third wave in the US. And that is, so there are 2 forces buffeting it. If this number had come without what is happening in Europe, then obviously, yes, certainly that the impact of the pandemic stimulus will be less concerning. But just given what is happening and, ISM and all those numbers are, clearly backward looking, it is not clear what is going to happen over the next few months.
Joshua, let's talk a little bit about the second/third wave. and the impact that it's likely to have on the data and the economy. In terms of how we should think about the rates market, which is the more important story between now and Christmas? What happens with the US election and the Senate on one hand, and what happens with the rate of change in the virus count? Just in terms of how the rates market is going to think about that.
Yeah, I think the two are very strongly connected in the sense that it's less about, because this epidemiological outlook is so uncertain and is subject to change over a very rapid timescale. The way I think about it is it's more about the government's ability and willingness to respond than it is about the specific policies being proposed right now, because as we're seeing in Europe, the outlook can swing very quickly and somewhat unexpectedly. So in a world where you have split control of government or an uncertain outcome where we don't know who's in control of government, even during the lame duck session, the ability of government to provide stimulus when needed is much less. And so that necessarily puts a premium on the rates market because you don't have that fiscal impulse. Whereas in the case where you have very clear control, and especially if you have unified democratic control, which they've definitely pushed for more stimulus, then that has implications for the supply outlook and the inflation outlook and the growth outlook and all of those other things. So that's the way, given this very unique economic circumstance, the flexibility of government and the willingness and ability of government to respond is the key variable.
All right, Joshua, so we also have the Fed coming on Thursday. What's your top trade right now?
So we're in steepeners. That's more around the election than the Fed. We don't think the Fed meeting is going to be a particularly significant event because we're in the middle of things to some extent, and so they're not likely to change their policy in any material way. Over the long run, we can talk about more sort of substantive potential changes in policy, how they actually implement their new framework, and even over the longer term, who potentially is in charge once Powell's term is over. But for Wednesday, we don't think there's going to be a significant change.
We'll leave it there. Thanks for your time today, both of you. We really appreciate it. Joshua Younger of JP Morgan, Manish Deshpande of Barclays. Appreciate it. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
So as we've already indicated, it's going to be a busy week. And Alex, later this week, we're going to see the debut of the world's largest IPO. Ant Group set to begin trading in Hong Kong Thursday. Bloomberg learning that institutional investors are buying Ant's Hong Kong shares on the grey market at a 50% premium. They're going out of the door at 80. we're seeing trades going through at 120. Remember, institutional investors, they closed the book on them a little early. So it looks like they're out there trying to bid up prices. But if we see it going out of the door at 120, this is going to be an epic IPO. It's going to be interesting to see, given everything else that's going on, whether or not the volatility that we could see could affect the IPO as well.
I think it's already epic. I mean, anywhere you look, you could throw a dart and hit a really cool stat. So apparently demand for the retail portion of this IPO in Shanghai exceeded the initial supply by more than 870 times. I don't know if my brain can compute that much. Just to show that on all cylinders, it's firing pretty hard. Even the banks that were on the IPO, their stocks soared up like 31% today. That's a derivative play of this massive IPO.
Yeah, there's some reporting going around that Jack Ma's been called in by the authorities. I think I saw it on the FT a little bit earlier on. The PBOC calling him in, asking questions. Not sure what those questions are going to be. But this story is also getting caught up in the China-US trade tension too. And the Chinese pushing back, making sure that Alibaba and don't get caught up. And there are concerns that they certainly could be from the Chinese side of the equation. This is such a huge IPO. A few years ago, it would have taken place in the US. The fact that it's not, I think, is hugely significant.
Yeah, and sort of it speaks to the fact that the decoupling that you see within the U.S. and China on the tech world could still happen regardless of who is in the White House. Not necessarily that Biden would be any friendlier to China, but that maybe the way they go about it's different. But on the technology side, how do you have any kind of cooperation when there's national security involved? And it feels like both sides of the aisle are pretty firm on that stance. So will we just to see these two tech markets developing in just very different ways, with more of the action maybe coming for now from China?
Yep, and China trying to do its best at the moment to figure out a way of getting around some of the restrictions that have been created by the US. You're going to look at what's happening with Huawei. What are we going to do next? Top policy risks for US businesses. We're going to discuss all of that with the Wall Street veteran. Charles Meyer, Signum Global Trading Chairman, is going to be joining us. That's coming up. This is Bloomberg.
You can get a warm burger, soba noodles, even a bowl of curry rice. In a city like Tokyo, vending machines seem to be everywhere. There are literally millions in Japan, and it's a big business, selling $44 billion of goods in 2016. With COVID-19, those sales are slowing down, which means getting rid of unprofitable machines. Vending machine sales were already falling even before COVID, with competition from convenience stores that are open 24/7 and have way more options. But there is hope for some of them. About an hour away from central Tokyo is the Retro Vending Machine Park. Here you'll find 50 or so machines side by side selling some quirky items. Turning vending machines into tourist attractions may not be a solution for bigger business, though, since it requires labor and efficient distribution. Saito says it takes 5 people a day to restock his machines, just in time for lunch.
Everybody knows the COVID epidemic is certainly a major thing in the whole world, also certainly in China. And so this has served as an accelerator for our business.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Hi from London, I'm Guy Johnson. Welcome to Bloomberg Markets. Alex Steele is over in New York. So a hypothetical Biden victory in tomorrow's US election would likely mean higher taxes for companies and individuals. Scarlett Fu has an overview.
Thank you so much, Guy. Yeah, one of the Trump administration's crowning achievements, of course, is the tax cut package passed at the end of 2017. Remember, it slashed the corporate tax rate to 21% from 35%, making the U.S. a lot more competitive with other countries. And to incentivize companies to keep manufacturing at home rather than outsource overseas, companies are allowed to deduct the full cost of equipment spending until 2023. And, of course, money stashed overseas can be repatriated home at a lower rate, again, to spur spending at home. And of course, the market took notice of this, sent stocks higher, GDP bounced, and of course, we saw unemployment fall to 4-decade lows. Now, Joe Biden is looking to roll back a lot of these tax cuts. For companies, that entails lifting the corporate tax rate to 28%, which is still lower than the 35% previously, and raising the tax on foreign earnings of U.S. companies, and of course, targeting the rich. Now, the top personal tax rate would increase to almost 40% from the current 37%, and those same folks would see their capital gains and dividends taxed at that higher rate as well. The question, of course, is whether any of these Biden proposals will get watered down because, of course, the economy is in a lot weaker state because of COVID than before, even with that record third quarter GDP bounce. And on top of that, if the Democrats win the Senate, of course, they'll have a narrow majority and they'll have to appeal to the centrists in the party. Now, Goldman Sachs estimates that Biden's current tax proposals would cut the S&P 500 earnings by 9% in 2022, with the full impact felt a year later. If you go back and look at what's happened over the past 6 months, as Biden has seen his polling improve, and that would be the white line there, we've seen companies with low tax rates also move in tandem with the odds of his winning. That, of course, is in contrast to what we saw in 2018 when companies with high tax rates outperformed because they were seen as the outsized beneficiaries of those tax cuts. Alex?
Great setup. Thank you so much, Scarlett Fu. And let's talk about taxes, because U.S. executives actually see corporate tax policy as the top risk for businesses under a Biden administration. That beats the virus. That's according to a PwC report. 62% of business leaders see the tax code changes as the biggest threat. Well, joining us now for Wall Street Perspective, Charles Myers, Signum Global Chairman and former Evercore Vice Chairman. He also advised Hillary Clinton and Joe Biden's presidential campaigns. Joining us now, Bloomberg's Wall Street correspondent, Sonali Basak. Guys, thanks for joining. Charles, let's start with you on this. Why are the corporations so afraid of these taxes and markets just do not seem to care?
I think there's a disconnect out there between expectations and what will most likely happen next year if Biden wins with the Senate, which is that the magnitude by which both corporate and personal taxes are going to go up next year and be retroactive to Jan 1, 2021 is much more likely than the sort of overall narrative or perception that's being put out there that, in fact, Biden's going to inherit a weak economy, go slower on tax increases, and, in fact, have them phased in starting in 2022. I think that latter narrative is very dangerous, and I think that's partly what's been priced in today, and I think we're in for a bit of a wake-up call next year on that.
But, Charles, how realistic is this to get done quickly? Let's be honest, even with a Senate majority blue sweep, it's not that every senator who's Democratic is going to vote for all of the tax changes that are in the Biden plan. How much of a debate are we going to see as the administration tries to get some of these passed? Should they be in power?
Yes, I think there's two things that'll be at play next year early next year on this on the tax issue. The first is that all they're going to need is a 51 vote majority, because they'll get it through the budget reconciliation process. So even if, again, they really only need 51 senators, and we think that the Democrats will probably have 52 or 53 seats in the Senate. But that's one issue that will be at play, of course, is what their majority looks like. But again, reconciliation, they only need 51 votes. The second thing, which is very important and a lot of people have lost sight of, is the fact that the debt ceiling has to be raised by July of next year. So we've been saying, in fact, that no matter who wins tomorrow, even if President Trump wins, which is not our base case, but no matter who wins, taxes are going up next year. They will be retroactive to Jan 1 because the debt ceiling has to be raised. Again, I think on the timing issue, in addition to the need for a majority, both of those are coming together. And I think tell us that taxes are going up next year, both corporate and personal, and will be retroactive.
So barring taxes, what are maybe some of the more aggressive policies under a potential Biden administration that you think are not being priced into the market right now?
So aside from tax, which by far we think is the most underpriced risk today in the U.S. equity market, again, the estimates are anywhere from 9 to 12% hit to EPS. And people are looking out to 2022. We think it's a hit to EPS next year for on average for the S&P 500 companies. In addition to that, though, I think people are underestimating what a Biden administration intends to do on drug prices and secondly, in energy policy. Because those latter two, which affect a lot of companies and obviously two pretty important sectors for the markets, he can get a lot of the necessary change in those two areas done without Congress. So again, I think it's pharma and energy, particularly fossil fuels, where we could see, again, a lot of executive action next year that might be underpriced today in the market.
Charles, good morning. The Biden team has raised a lot of money from Wall Street and from corporate leaders. And I'm curious how those conversations have gone. What have the Biden team been telling those people that has allowed those people to give the Biden team a lot of money? And there does seem to be a mismatch between that and what you're saying.
Yeah, so I think it's really two things. When conversations have happened with some of the biggest donors or with the private sector, with folks from financial services, et cetera, from the campaign, the message is twofold. First, in the end, if in fact Biden can do what he would like to do, which is get about a $2+ trillion stimulus package done at the end of January, followed by a $2.5 trillion or larger infrastructure package in Q1 or Q2, that the tax increases actually will be offset by the much bigger impact on growth from both of those two positives, stimulus and infrastructure. The second issue, which actually resonates with a lot of folks in the private sector, a lot of CEOs and other, is that there's a real need for stability and predictability in policy making, which is missing today. The last quick thing I would layer over all of that is a very strong sense of, the tax code and the majority of the Trump tax cuts did actually benefit companies and the wealthiest Americans. There is a real sense in this country we need to do something about systemic inequality, income inequality, gender inequality, racial inequality, and that the private sector and certainly the C-suites have bought into that. And one way to do it is through the tax code, and that those changes need to be made. I think it's a combination of all of those, that there's much more buy-in from the private sector, including at the top of companies, around these tax increases.
Charles, what is the skill set do you think the Biden team is looking for if they were to win in the Treasury Secretary they would select?
I think in the end, it's going to be a compromise candidate. Initially, it was going to be someone from financial services. I think the progressive wing of the party killed that pretty effectively months ago. And then it was, and still is a lot of noise around whether it's Elizabeth Warren or someone that's from the very progressive wing of the party. And I don't think that's going to happen either. I think it will be Lael Brainerd. She's clearly the front runner today. And I think it would be an excellent choice and very market positive because she's been dovish at the Fed, but also very pro-stimulus. So I think in that position, as with a lot of the important cabinet positions, Biden's going to go with the centrist that's probably technically very good, but not controversial.
Charles, if we do get a President Trump win, what does Wall Street do with that?
I think if we get a Trump win, it'll be, I'd argue, an even bigger surprise or upset than in 2016. You see the market clearly rally on expectation of tax cuts, further deregulation, et cetera. But I think reality will start to set in pretty quickly. We're entering a second wave of COVID that's been incredibly painful in Europe and I think is heading here. All the evidence points to that. So there's going to be concern there. Secondly, whether or not he can get another round of stimulus through. And then thirdly, as I said earlier, we've got to raise the debt ceiling in July. Taxes are going to have to go up. The only way President Trump will be able to get the debt ceiling raised next year because the Democrats in the House will hold his administration hostage and force tax increases in exchange for lifting the ceiling. He's also going to have to give in. Reality will start to set in, I think, if President Trump wins. And I think that the market will be far less enthusiastic after the initial pop.
And to that note, too, what happens if we don't get a blue wave?
I think the probably worst case scenario for the market, aside from a long, protracted, delayed outcome, which we don't think will happen, we think, in fact, we'll know a very strong and very good preliminary result within 24 to 48 hours of the election. But barring that, the second worst outcome would be a Biden win without the Senate. And I know historically, divided government's always been seen as the most positive for the markets because gridlock prevents either side from pushing through things that are too extreme. In this case, divided government, Biden in the White House without the Senate means that getting even emergency stimulus through in January is going to be very tough. And this country is going to need it, especially with this second wave coming. So I worry about that scenario more than I do about most others.
How hard on Wall Street do you think this next administration is going to be? You know, we talked about the potential Treasury Secretary here, but and Wall Street does come up in the Democratic agenda right away. But is it really going to be as hard on the industry as we believe?
No, I think that it's a little bit of a red herring out there. You know, the banks have actually done a pretty good job since 2008, 2009 of reforming certainly their most egregious or abusive practices. And I think that instead, what you'll see from a Biden administration on the regulatory side is much more attention focused on drug prices, much more attention focused on energy, not whether they ban fracking or not. That's a red herring as well. I think there's just going to be much tighter regulation of fossil fuels. And then within financial services, I think, you know, it's not a huge priority for the administration. So where within financial services, a Biden administration will focus is on the consumer protection side. I think there's still parts of that industry that are clearly engaged in abusive practices, and that's probably where most of the attention will be focused. I think financial services under a Biden administration does very well.
And real quick here, Charles, too, how do you feel about the technology industry? I know you've said over at Signum, you guys are internally debating how hard he might be there.
Yeah, I think people are underestimating it because, again, you know, most of the big tech companies have been a big part of the solution around COVID in terms of how we live our lives and work now. But the truth is that the antitrust move, which is well underway, will accelerate under a Biden administration. We'll have a much more aggressive Department of Justice with a much more aggressive view on antitrust. And I think between that and privacy, the four big U.S. tech companies will look quite different 2 or 3 years from now. People underestimate, I think, how large a priority that is already, and that the process is underway even before Biden takes office.
The game is afoot. Our thanks to Charles Myers of Signum Global and Bloomberg's Sonali Basak. Boris Johnson, the British Prime Minister, is currently on his feet, I understand, down in the House of Commons, updating the House on what he said over the weekend, this 1-month lockdown that is going to have a pretty dramatic effect on UK data. So England going into that 4-month lockdown, the other parts of the United Kingdom going their separate ways. Anyway, Boris Johnson speaking now. You can probably find it on live go on your terminal if you would like to follow what the Prime Minister is saying. This is Bloomberg.
Let this virus damage our children's futures. So schools will remain open, colleges, universities, childcare and early years settings. And I am pleased that this will command support, Mr. Speaker, across this House. It's also
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen
And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
Let's check in on the Bloomberg First Word News now. I'm Ritika Gupta. President Trump enters the final day of the campaign, hoping for another poll-defying victory. Surveys show the president trailing Joe Biden nationally and in a number of battleground states. Still, the numbers have been tightening in some of those races. Both candidates will be campaigning today in Pennsylvania, where polls show Biden with a slight advantage. Over the weekend, pre-election day voting surpassed 2/3 of all the ballots cast in the 2016 presidential election. That's almost 92 million Americans that have voted so far. A majority of states are reporting record early turnout. And Brexit negotiators are moving closer to breaking the impasse over one of the biggest obstacles to a trade deal. A compromise is emerging on the issue of what access boats from the EU will have to British fishing waters. The potential solution would allow Britain to claim it has won back control of its seas. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy?
Thank you very much indeed, Ritika. So the Prime Minister's just finished speaking down in the Houses of Parliament, addressing parliamentarians on his current plans. He is facing something of a rearguard action when it comes to dealing with a number of MPs within his own party who are concerned about the lockdown that is being employed. There is financial help on the way. We are seeing a doubling of support for the unemployed. Nevertheless, the virus does seem to be largely in control of this process. Joining us now, Sam Fazeli, Director of Research at Bloomberg Intelligence. Sam, I want to talk about not where we are now, but where we're going. How long is it going to be before we understand whether or not the programs that are being employed here in the UK and elsewhere around Europe are having a meaningful impact? It is easy to get in. I say easy, it's probably not easy, but it is easier to get in than get out.
Yeah, hi guys. So obviously it depends on what the threshold is. So if you go for the Australia-Melbourne threshold of 0 COVID-19 new infections, that took 112 days, right? Here in France, they've set up 5,000 per day, and we're at 46,000 or so yesterday, I think, or at least on Friday. In the UK, I don't know if they have a specific threshold. I think they work more with the R number, and they'd like to get that below 0. But this is the problem. If you reopen, which is what we did, when there is a virus still visibly around, then you have a risk of higher transmission. Even in Australia, I don't think that they're in the clear because you don't know how many people there are out there still that are asymptomatic.
So Sam, let me ask that in a different way. So if you don't know the threshold for getting out, what do you do while you're in it? Because what Boris Johnson also said is that they're looking at a rapid mass COVID testing program to begin in days. It's like, what are they going to do in this lockdown that they couldn't do in the other one?
Okay, so there's lots that they can do this time. There's a fantastic piece of research that was done by a group in the U.S. Associated with Colorado University and Harvard, where they showed that if you do rapid testing, not this usual thing that takes 2 or 3 days to give you an answer, during this period, you do rapid testing that gives you that antigen result in 15 minutes, which are now available and weren't available then, and you do that every 3 days or even once a week, over a period of 4 to 6 weeks, you can stop the pandemic, or you can have a pretty good chance of stopping the pandemic. So this time we
do we have enough of them? Do we have enough of those tests?
Yeah, that's the crux of it. So I don't think there's enough, but you can but try, right? It is at least it's good that they're doing it. And remember, they did that in Slovenia, and they're doing it in Slovenia, and it makes a difference. Because what you want is to catch people while they're infectious and tell them, look, hang on, stay home, let this pass, and then you can come out. If you do that, it's as good as a vaccine.
How does it get rolled? How does something like that get implemented in a very large country? Slovenia, obviously, very different.
Yeah, so you're going to need community nurses, and, they had thousands of people. Every medical professional, I think, was involved in doing this. So, yes, they're only about a 4 or 5 million population country. Here, you're going to have to be a bit more, accept the fact that it could take longer to do that. But if you're doing it during a lockdown, it gives you an opportunity to at least know that as soon as you find somebody, they're already isolated and not running around in the streets.
Boris Johnson talking about the vaccine, quote, real prospects of COVID vaccine in the first quarter. Would you agree with that?
Yeah, I mean, he doesn't know anything more today than he did yesterday or a week before that. Every single vaccine that gets tested seems to show at least an immune reaction. We're just waiting to find out if they prevent disease. And I suspect Moderna and Pfizer will give us some of that information in the next few weeks.
Sam, it's always good to catch up with you. We really appreciate it, getting that on-the-ground analysis there. Sam Fazeli, Director of Research over at Bloomberg Intelligence. All right, coming up on the program, you got oil clawing back some of its earlier losses. That's coming up next in today's Futures in Focus. What is the realistic bottom here? This is Bloomberg.
So we'll have the conversations with the Bank of England in the latter part of this year. And then, yeah, we will address our policy around returning capital to shareholders at our year-end results coming up shortly at the beginning of 2021.
Live from New York, I'm Alex Steele along with Guy Johnson over in London. This is Bloomberg Markets. It's time now for Futures in Focus. We're taking a look at oil. Okay, crude erasing some of its earlier losses, but got really hammered last week near a 5-month low. Joining us now, Mike McGlone of Bloomberg Intelligence. The technical question, did we find the short-term bottom?
Well, I think the good thing about crude oil this year is the bottom's in forever. Minus 40. We're never going to see that again. So we got that going.
Short-term.
Short-term. Maybe if the stock market can go up, and it depends on if we get the Democratic sweep, the focus will be more in reducing demand, i.e. clean energy. Right now, it's on increasing supply with Donald Trump. So I think what we should look forward to crude oil is really good resistance around 40, pretty good support around 30, and stuck in that range for a long time.
Mike, oil moved a little earlier on, but so did a whole bunch of other commodities. Kind of felt like the basket was moving rather than the individual components. Is this a dollar trade more than anything else?
A dollar is a big part of it. And this year, remember, the trade-weighted broad dollar index reached an all-time high. So mean reversion in the dollar, if it could continue lower, that's a good sign that commodities are bottoming. I'm getting those indications in every sector except energy, metals. If there's weakness in the dollar, metals, copper usually does very well, definitely gold. And agriculture, U.S. is a major exporter of grains. If we get weakness there, that'll pick up. So I'm seeing that as a big sign. So that's one thing we have to look forward to the next few years. If we have mean reversion in the dollar weakness, commodities are breaking out higher versus the stock market.
But I wonder if oil's a little different in that, look at copper and what we've seen in the oil market. If it was about growth and about the dollar, they wouldn't be behaving this erratically. Copper has been on a steady bull market. This, to me, is a supply story. It's Libya surprising the market, being able to sustain some volumes online when many thought that there wasn't going to be able to hack it.
That's the problem on the endless problem in crude oil. Too much supply, more coming on, lack of demand. It's really not coming. There's no more elasticity demand in crude oil. But copper, I'm glad you mentioned, is really the key thing. I was really worried about it initially, but this divergent strength in copper versus stock market, to me, is a sign it's ready to break above that $7,000 threshold. That's held since 2013, and all it needs is a little weakness in the dollar and more of the same with this demand from China. And then let's think infrastructure spending. Every country in the world, most countries in the world are getting free money. So why not take that money and spend it on infrastructure? I think that's what we're going to see, especially in this country with this big fiscal stimulus coming.
Mike, always a pleasure. Thanks for your time today, updating us. Mike McGlone of Bloomberg Intelligence on what's happening in the commodity space. Up next, we'll carry on the conversation about what is going on here in Europe. We've got Jordan Rochester joining us, Nomura G10 FX strategist. The euro's trading kind of around the 116 level. The European equities are bouncing back pretty strongly. They're still down pretty dramatically over the last 5 days, but certainly recouping some of last week's big losses that we saw. We'll get more analysis in just a moment. The European close is coming up. This is Bloomberg.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Live from London, I'm Guy Johnson. Alex Steele's over in New York. We're counting you down to the European close right here on Bloomberg Market. So what do you need to know from Europe this hour? Well, locking down. Europe accelerating into tighter virus restrictions. Angela Merkel warning that the light at the end of the tunnel is still far away. Bargain hunting. Ryanair flying over the COVID thunderclouds. The low-cost giant CEO Michael O'Leary predicting huge market share gains post the vaccine. Before that, though, he's warning that winter looks very tough. And Europe, like everywhere else, holding its breath ahead of the US election. Equity volatility continues to fall from October's peak. Stocks are rising today. Let's take a look at how much. We're near session highs here in Europe right now after yesterday's drubbing for European equities, last week's drubbing, should I say, we are seeing a bounce back. We're up by 1.5% on the stock 600. Some markets up more than that. The S&P up by 1.2. Euro dollar, though, still trading around that 116 level. We'll get some analysis on that in just a moment. We're down by 0.1%. Crude just coming off its lows. The other thing that's worth mentioning as well is that we are seeing the curve flattening back down a little bit today. Big moves in the 30-year on both sides of the Atlantic. Alex.
Well, just moments ago, Prime Minister Boris Johnson defended his one-month lockdown, a plan for England. He spoke in the House of Commons.
We are not going back to the full-scale lockdown of March and April, and there are ways in which these measures are less prohibitive.
Johnson also promised mass COVID testing program to begin within days, that rapid test. Joining us now on the phone from London is Bloomberg government reporter Emily Ashton. Emily, what is going to be the takeaway over the next 4 to 6 weeks? What kind of guarantee do we have that these actually end December 2nd?
Well, this is the concern of Conservative MPs, the lawmakers here in Parliament. So we have this vote on Wednesday on whether this second lockdown will go ahead. I think we expect that vote to be approved, despite maybe about a dozen of Boris Johnson's own colleagues raising concerns about civil liberties, about the impact on businesses, and about whether this lockdown will be extended post-December the 2nd, this end date. But Boris Johnson has just said, look, you will get a vote on that week, the December the 2nd week, as to whether you want to extend it or not, giving them that reassurance that we're not going to extend this forever. But Boris Johnson was saying, look, what we want to do is to get this R rate down, to make sure the virus doesn't keep spreading. If we could do that for 4 weeks, get that rate down, and then hopefully we can get on top of it. And then the next stage is that mass testing, making sure that we can test people in schools and in institutions so that we can just keep that economy going. And that's what he's pinning his hopes on now. We're not likely to see a vaccine until next spring, the government is saying. But if we can get that mass testing program done, that's the way they want to make sure the virus is under control.
Got to get hold of those quick tests, though. That's going to be a big challenge. Emily, thank you very much indeed. Emily Ashton joining us on the latest on UK politics. Let's get back to the markets now. How bad can the euro rate get? The pound's trading just north of 129 right now. Europe clearly facing harsh restrictions as we head towards Christmas. How do you balance that out as well with the risks of the US election? Let's talk about all of that now. Jordan Rochester, G10 FX strategist, joining us now from Nomura. So I've got a near 116 on euro dollar, and I've got the pound trading 129.05. Given the fact that the virus seems to be in control in Europe, do you see further downside for those pairs?
Afternoon, Guy. Morning, Alex. Well, Guy, in the short term, and really short term, we're talking until tomorrow, I can see this sort of downward drift continuing. But if we break properly below the recent ranges of euro-dollar, the question will be, is this going to be a new trend? And the answer from us is unlikely. It's not going to be a new trend. And that's because the US election on Tuesday and hopefully the results by Wednesday, Thursday would tell us quite a lot about the outlook. If we have a blue wave, if we see massive fiscal spending expectations pick up, the dollar is likely to weaken, Guy. And in that scenario, I can't see the recent lockdowns overwhelming that sort of euphoria from the fiscal expectations. We saw back in April and May and June how important it is for markets when they react to the fiscal stimulus and the monetary stimulus from policymakers. That actually matters more than the numbers of COVID-19 cases. Unfortunately, there is a difference between Main Street and Wall Street, and the assets that we're buying, they got more money chasing too few assets. And the point I've been making to clients just this morning and this afternoon is that this lockdown's quite different, Guy. I know Angela Merkel was quoted there saying the light at the end of the tunnel is quite far away. Well, actually, there is light at the end of the tunnel, which is we have better testing. We've got hopefully potential vaccines. I think back to March and April, we didn't have that anywhere near in terms of timelines. So I think there is a big difference this time around, Guy, from the first wave to the second wave. And if you think there's going to be a blue wave in this US election, this is probably an opportunity to buy back euro, not sell it.
I guess my question is, why is it a done deal that a blue wave would be negative for the dollar, in that you can make the argument that you have more fiscal stimulus from the U.S. and a Fed that has a lot more room to move than the ECB and the BOJ, and that could actually be good for U.S. growth, equals good for assets from the U.S. Is dollar positive?
Absolutely, Alex. I agree. The difference is the trade deficit for the U.S. is already starting from a very wide perspective. The double deficits of the U.S., which is the current account and the government balance, incredibly wide, and the Fed has actually not been buying up all of the issuance so far to date. There's been an excess amount of US Treasury issuance compared to Europe and even the UK, much more balanced sort of numbers where the central banks have stepped in and bought up most of the issuance. So what you're left with, Alex, is a world of excess dollars. And typically when you get a big fiscal stimulus and monetary stimulus from the US, that money leaks out of the US via the trade balance and benefits the rest of the world. You'll see higher imports, for example. So yes, completely agreed. You'll see higher growth expectations for the US, but you'll also see outflows from a financial account perspective that will lead to that dollar weaker trend.
Jordan, key Senate races look very close. What happens if the Democrats do not take the Senate?
Well, I think we're going to be doing an all-nighter tomorrow, basically. And one of the early Senate races, hopefully, is Georgia. If we see, I mean, Georgia's on my mind, essentially. If we don't see that flip to Democrats, we know that it's going to be a lot tougher for the Democrats to flip the entire Senate in their favor. So Georgia's on my mind. Florida, of course, like everybody else, following that key swing state. If the Democrats don't win the Senate, that is really messy. And if, let's imagine you have a Joe Biden presidency, but Republican Senate, in that scenario, we're talking Democrats again trying to get stimulus done, but the Senate dragging things out. There will be some form of stimulus, but the numbers will be much smaller, $500 billion to $1 trillion, where with a Democratic blue wave, we're hoping more to 3 to 4 in terms of the market multiples that we're looking at. So the differences are quite vast. And in that scenario, it's risk off. It's euro dollar down to 114 sort of moves on the night, really, if you see that sort of outcome.
On the night, what about after? And I ask because I feel like with every big event over the last 4 years, the reaction function is a lot shorter. The biggest was when Trump surprised with his win in 2016, but that reversed too in like 24 hours. How long do you think these market moves are going to be in for?
Yeah, Alex, it made a bit of a mockery of our profession, really, didn't it? So Trump back in 2016 was risk off and the dollar yen went lower and the S&P futures went lower. And then about 3 hours later, everyone got their heads around the tax reforms and the dollar went up and risk on everywhere else in terms of equity markets. This time around, I have asked the same question. Is the reaction function we're all talking about right now, is what I just said completely the opposite to what happens? It's very possible if, for example, you get a blue wave, big fiscal expectations, you see risk on initially. But then if Joe Biden starts talking about raising taxes as fast as he can, the truth is he won't be able to raise them as fast as he can. He's not president till January in this scenario. And tax reform actually takes a while. And raising taxes won't be probably the first thing he does as president. But if that's his focus, and that's possibly the reason why you see risk off maybe in some sectors. If you see the Democrats start talking about reform and antitrust issues for technology, that's, again, another risk-off factor. Definitely, we've all considered it. I think the fact we're talking about it is a good thing. Where in 2016, I don't know if anyone was really talking about if Trump wins, it's risk-on. It was pretty much before it's risk-off, until the actual fact of the matter happened on the night.
If Trump wins, is that the biggest volatility event here? It strikes me that the Senate is probably the worst-case scenario, but the market just doesn't seem to have Trump winning priced in anywhere. Is Trump winning still the biggest surprise?
I think so, Guy. I mean, CNH is one of the favored trades in the foreign exchange space, so lower dollar CNH. And that's on the back of the expectation that Joe Biden will be less aggressive to China with trade, tariffs and so forth. So if Trump was to win, that consensus trade would get hurt. You'd see big moves in CNH in that scenario, just from the trade angle. Then you'd have the risk angle as well, which is the Democrats would still be likely to hold the House in that scenario. So you have a Trump presidency holding onto the Senate, for example, but the House still split. Since July, we were talking about phase 4 stimulus. It was quite exhausting every day. Pelosi and the Democrats and Mnuchin and Meadows talking about we are looking to hopefully get a deal done. And here we are in November and it hasn't happened. The question, Guy, will be how quickly they do a stimulus deal, phase 4, and how big will it be? The Senate Republicans have actually held things back, trying to keep the size small to around $500 billion, even less in some examples. The question will be whether they suddenly change their opinion because Trump's won the presidency in that scenario. How quickly does phase 4 stimulus happen? That can kind of bring back the risk off we would see from the election. So yes, risk off on that outcome of a Trump presidency. But if you get a big phase 4, $1.5–2 trillion, which is roughly where we thought it could have been back in July if it had gone through, that could solve that sort of risk off pattern.
All right, Jordan, good luck on your overnight. I'm imagining you guys with like a huge whiteboard with like the 75 different probabilities and like how you trade over the next 48 hours. Good luck with that. Jordan Rochester, G10 FX strategist at Nomura. All right, coming up, it's the road ahead for transatlantic trade relations. We're going to speak with Sir David Manning, former UK ambassador to the United States. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Let's check in on the Bloomberg First Word News now. I'm Ritika Gupta. The new lockdowns make it almost certain that the Bank of England will come up with more monetary stimulus this week. Central bank watchers had already expected the BOE to boost its bond buying programme. Prime Minister Boris Johnson's month-long lockdown means the economy will face a third quarter of decline this year. And Brexit negotiators are moving closer to breaking the impasse over one of the biggest obstacles to a trade deal. A compromise is emerging on the issue of what access boats from the EU will have to British fishing waters. The potential solution would allow Britain to claim it has won back control of its seas. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Guy.
Thank you very much indeed, Ritika. So UK negotiators say trade talks with the United States have actually reached advanced stages in most areas. They said the two nations are in a good position to move forward after the US election. The question is, who's going to win? Joining us now, Sir David Manning, former UK ambassador to the United States. So, David, thank you very much indeed for your time today. Let's start off with the big picture question, and then we'll get down into the details of a potential trade deal. Is a Biden win bad news for the UK?
No, I think a Biden win would be good news for the UK. And I tell you why. It's because his approach to international relations is much more sympathetic to the British approach than that of Donald Trump. The Trump presidency has been a period of America first. He is a president who is obviously suspicious of multilateral institutions and multilateral approaches, whereas everything we know about Joe Biden suggests that he's the reverse, that he has always supported a multilateral approach to global issues, and he has been a supporter of multilateral institutions. And that is very much where Britain is. Britain is a keen supporter of multilateral institutions and approaches and sees its national interests as being furthered by those methods, not by, as it were, nationalist go-it-alone policies. So I think that a Biden presidency for the United Kingdom would be a positive.
OK, let's pick that apart a little bit. Boris Johnson, the British Prime Minister, formed a very close relationship with the current incumbent of the White House, Mr. Trump. I wonder whether that will work against the UK. We also saw under the Obama administration, and I wonder whether or not this will be continued under a Joe Biden presidency, that Obama favoured Berlin over London. So I'm wondering whether or not the UK's relationship with Washington, in terms of the priorities, may be downgraded.
Well, I think Britain may have to face up to that. Certainly when I was working in the United States, and I think since, it has always been the case that American presidents and Washington generally has seen Britain's role in the EU as an important component in the bilateral relationship. They valued the fact that we've been in Europe and able to influence the debates there. Now, of course, there's a whole range of issues that are bilateral and not dependent on our membership of the EU. But I don't think it's any secret that certainly the Biden camp would much have preferred Britain to stay in the European Union. And I think if Joe Biden becomes president, he is likely to see the EU as a more important interlocutor overall than London. Now, that doesn't mean to say that suddenly the relationship with Britain doesn't matter. I think there will be all sorts of areas where we will clearly be working closely together. Some of them will be in general approach, and I mentioned this attitude to a multilateral view of the world, which we would certainly share with the Biden presidency. But we will be much closer to Joe Biden than we would have been or will be with a second Trump presidency when it comes to issues like climate change, when it comes to the management of pandemics, and both of those are areas where Britain has a leading role to play, I think, and certainly sees a global approach as the answer. And absolutely critically for us in this country, we attach enormous importance to the security relationship. And that transcends the bilateral relationship, although that's very important, our close relations on intelligence, on the military and so on. But the bedrock for Britain has, since the late 1940s, been the NATO alliance. And I think that is not suddenly going to change if Joe Biden becomes president. On the contrary, he has made it clear that he believes in the alliance, and that would be very welcome in London, whoever is prime minister, particularly if we are to gather that another Trump presidency might put America's commitment to NATO at risk. And this was what John Bolton seemed to suggest in his book, which gives an account of his time as national security advisor under President Trump. And this would be enormously unwelcome to Britain. So, yes, I think that the United States will probably put the EU, give it greater priority than it has done in the past, and that we will be missing from that. But there will be other elements that are very important in the bilateral relationship, such as security, and I think that those will be anchors for the London-Washington relationship.
Ambassador, I wonder how Brexit winds up playing into this. Joe Biden has already said that if there will be no U.S.-UK trade deal, if Britain goes back on its treaty it signed with the EU, he, as well as Nancy Pelosi, have talked about the relationship with Northern Ireland and how those can be deal breakers as well. How do you think this conversation plays out?
Well, I think it is a very important element. I take it very seriously, and I don't think it's empty talk. I think we should take very seriously the message that has come from Joe Biden and from those around him, and indeed from the Democratic Party leadership, that if there is, let's say, a no Brexit deal that in any way undermines or jeopardizes the Good Friday Agreement, then there will be no free trade agreement with Britain. It is enormously important, clearly, to Joe Biden and those around him that this agreement, which took so much negotiating, which I remember so vividly from my own time in Washington and how important American support for it was, that this should not be undermined, that we do not want to go back to a period when the relationship in Northern Ireland was the period of the Troubles. So I think we need to take that very seriously, and I think that's something that actually transcends the result of this election, because I think it would affect the way Congress viewed any FTA, whoever is in the White House, whether it's a second Trump term or whether it's Joe Biden.
Well, let's just deal with the details of such an FTA. The UK Department of International Trade, David, this morning said that it believes that it is in a, quote, good position to move forward after the election, regardless of almost who wins, seem to be the kind of the inference from it. Do you think that's the case? Do you think a deal that has been negotiated pre-election, say we were to see a transfer of power in the United States to Joe Biden, that such a deal could simply be Bidenized and maybe different emphasis placed on different bits, but once the kind of the building blocks are in place, that we can move forward? Or do you think you always have to start again?
Look, I don't know the answer to that because I'm not party to the negotiations, and I don't know how close we are to resolving the outstanding difficulties. Before sort of attempting to give you a view, I do come back to what I've just said to Alex, which is whether or not there is, let's call it an oven-ready deal, if by any chance that deal falls foul of the Brexit negotiations, it won't go through. So it can, in my view, so it can be as ready as it likes. But there is a second element to this, and we have got to be sure that whatever deal we do with the European Union is compatible with the Northern Ireland Good Friday Agreement. As to whether, if that you've put that on one side and that is all straightforward, as we hope it would be, whether it is then easy simply to press ahead with this deal, I don't know. There are clearly areas that are very controversial and very emotional in terms of British politics. One of them is agricultural standards. Yes. One of them is the access of US pharmaceutical companies to the British health system. And these are, in American terminology, third rail issues. It will be very difficult for any British government to ride roughshod over public sensibilities over this. Now, if it is a Trump re-election scenario, we are told that he wants to press ahead with this, but we have been told this for a long time. And certainly it was the ambition earlier this year that this deal would be done quite quickly. Well, it hasn't been so far. And as to the Joe Biden situation, well, if he's president, what are his priorities? I suspect he would like to do the deal with us, but we know, and I've been listening to some of your other contributors, domestic issues are going to weigh very, very heavily in the scale.
So, David, we will leave it there. We really appreciate your time and your analysis. Thank you very much indeed to David Manning, former UK ambassador to the United States. This is Bloomberg.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
We are about to close European markets. They are near session highs. They are bouncing back from the big losses that we saw last week. We are still down over the last 5 days by 2 to 3%. We have seen volatility also come a little lower today. Curves are flattening on both sides of the Atlantic, but critically, euro, dollar and the cable rate are both trading near very pivotal levels, particularly for the single currency around that 116 level. Anyway, today at least, equity markets catching a bit into the critical US election. The details to follow. This is Bloomberg.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
Stocks wrapping up the day here in Europe. 30 seconds to go until the end of regular trading. Let's take a look at what the session looks like. Stock 600 bouncing back. We're finishing near session highs today. We're up by around 1.5%. But this comes clearly on the back of the significant selling that we saw towards the tail end of last week. In fact, for most of last week. And we are seeing volatility come down as well. So a little bit of a calming of equity markets in advance of the US election. I have to say, though, anecdotally, it seems that many people are not carrying significant positions, risk positions, into that election. And it's maybe some evidence to suggest that that's what last week was really about. As I say, volatility coming down a little bit as well. But we did climb throughout most of October up to recent peaks, which is fading that move a little bit. Be interesting to see whether that carries on over the next 24, 48 hours. That's going to be one of the big trades, certainly to watch out for. In terms of the other trades that we're watching so carefully at the moment, euro dollar front and center. We're trading at critical levels. We're down a little bit again today. We're trading just north of that 116 handle. We were talking to Jordan Rochester a little bit earlier on. If you don't get the blue wave, if you say, for instance, see Joe Biden winning the White House, but the Republicans holding on to the Senate, he was suggesting you could see that number going down to around 114. So keep an eye on this pair as we work our way through again the next 24, 48 hours. In terms of the individual markets around Europe, a little bit of dispersion, but not much. The FTSE 100 underperforming a little bit. The CAC 40 outperforming a little bit, with stocks like Lafarge doing very well around Europe. The construction sector's done very well. But actually, in broad terms, what we've seen is the travel sector underperforming today, but there are some notable standouts. So let's talk about some of the single stocks that we're watching. Ryanair is one of them. Seems to be, from a stock point of view, at least today, kind of cruising above the COVID cloud that is really dragging everything else in its wake at the moment. Ryanair trading up by 4.65%. The numbers today were okay. Michael O'Leary, the CEO, delivering a good set of numbers, the boss over there. He is talking about a positive outlook if we are to see a vaccine, but nevertheless, in the near term at least, it's going to be a very tough winter, and even this company can't avoid that. Ocado, the home delivery company, deals with Kroger over in the United States, for instance, trading up very strongly, one of the best performers out of Europe today, not only in terms of an upgrade for the numbers, it's also buying a robotics company. Remember, that is essentially what this is. It's basically a technology company, so that's a robotics company, augmenting that today with an acquisition. And Lafarge Holcim, I brought that up a little bit earlier, trading up by 4.35%. The outlook looking fairly good. You would have thought actually the construction sector would be on the back foot considering what the narrative we're getting today, but the company posting a positive sort of story going forward. And you've got to think about maybe we are going to see some of the stimulus being turned into capital stock, and you would have thought at some point Lafarge Holcim in the construction sector would be a beneficiary of that. Alex.
Well, all of this set in the backdrop of the resurgence virus and then lockdowns in Europe as well. So that leads us to COVID treatments. Well, biotech company Tiziana Life Sciences will start clinical trials tomorrow. It's developing a treatment that could be nasally administered. Its founder and chairman, Gabriele Tironi, joins us now. Gabriele, what are you offering? What's the treatment? Walk us through the specifics.
So, Alex, today is a big milestone for Tiziana Life Sciences for three reasons. One, it's the first time that we are entering a human trial for efficacy and proof of concept of our monoclonal antibody for Formagilab in COVID-19 patients in Brazil. The second reason is it is the first time that a monoclonal antibody will be administered nasally, as traditionally all monoclonal antibodies have been given intravenously by injection. So it's the first time that this is ever going to be done, and we think that this can provide a major advantage in treating COVID-19 patients, as you can act locally and attack the cytokine storm, which is present in the respiratory tract and lungs, and which leads to mortality. The third reason we're excited is that we are going to be running an arm of the trial with faralumab isolated by itself. But in addition to that, we're going to be combining it with dexamethasone, which is a well-known steroid which has been used very commonly in the last 6 months as part of COVID cocktails, including the one that was used to treat President Trump last month. So we're very excited about running that together with dexamethasone and isolated as Formagilab itself.
What type of patients would this be appropriate for, Gabriele?
So what we are enrolling 3 arms, 36 patients minimum, 60 maximum. And the idea is to have one set of patients that are controlled without any drug, one with our monoclonal antibody, and then the third with a monoclonal antibody plus dexamethasone. And the idea is to try to prevent patients going onto respirators by the use of our treatment.
If things go okay and efficacy moves forward, when does this treatment sort of hit en masse?
So the idea of the proof of concept trial is to see if we see any positive efficacy in the trial. And once that is achieved, we will enroll a bigger trial where we will be able to measure whether we can get an FDA approval. So the idea of this trial is to get quick results. In fact, it's designed so that we will know by the end of December 2020, so by Christmas time, whether there is a positive result in the administration of Formalulab and with dexamethasone. So the idea is, now that we've seen that it was safe in our previous trial reported last year in healthy volunteers, we now test it to see if it works in improving the status of COVID-19 patients. Once that is achieved, and if that is achieved, we will enroll a much bigger trial.
Gabriele, at what point would a patient receive this single treatment or cocktail treatment with dexamethasone? Would it be as they entered hospital? Would it be before they go on to respiration? I'm curious as to at what point in the process that it would be applied.
So obviously on the first arm, we enroll COVID patients which get no drug treatment. On the second and third arm, the idea would be to, before they go to a respirator, to give them, when the symptoms progress in a negative fashion, we would put them on the dexamethasone plus Formalulab trial.
What do you think is the relationship going forward between treatment and a vaccine? There's a lot of questions as to how long a vaccine will be good for, how many shots you have to get, and how then treatments wind up interacting with all of it.
Well, I've been a big believer in that drug therapies are essential in parallel to vaccine treatment, because we believe that drug therapies are necessary for all the population that will not be vaccinated. And for the anti-vaccine believers, there needs to be a drug treatment in parallel. And we're big believers that cocktails, where you could attack the viral part of the COVID-19 virus, as well as what transpires when you have the infection, which is the attack on your immune system through an excessive cytokine storm, which attacks your respiratory tract and lungs. So we believe that the best path forward is combining drugs together, which attack separately the virus and the cytokine storm.
What else could this be used for?
Well, with this technology and therapy that we're testing in Brazil could also be used for acute respiratory distress syndrome and MERS as well, Middle East respiratory syndrome. So we believe that if this showed success, it would be a useful therapy beyond COVID-19, because ARDS has been with us way before the COVID pandemic, and it'll be around way after the COVID pandemic. In addition, Guy, we have been developing as our lead indication with Formalulab a treatment for progressive multiple sclerosis. And we will be initiating a phase 2 trial in the first half of 2021 in progressive multiple sclerosis patients. And so the ability to expand Formalulab in other autoimmune diseases such as Crohn's disease, type 1 diabetes is massive. And we hope to be able to achieve the success of drugs such as Humira, which are monoclonal antibodies that have achieved $20 billion in revenue per annum. And what we have that is an advantage is we can be delivered orally and nasally. And all monoclonal antibodies up until today have only been delivered by injection. So this trial is going to be a launching pad to test efficacy, and also the gateway to expanding into multiple sclerosis, even Alzheimer's and Crohn's disease.
We wish you good luck. Gabriele Cerrone of Tiziana, thank you very much indeed. Let's check where European stocks have settled. Positive session for European equities. These are the final numbers. A little bit of a dip down during the auction process, and not much to speak about. As you can see, a positive session. We'll carry on the coverage post-game here in Europe at the top of the hour on Bloomberg Radio with the Cable Show, John Ferro and me. This is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
There are unconventional tools, asset purchases, forward guidance that expand what monetary policy can do, but there are some limits. It's important for fiscal policy to fill in that gap.
Let's check in on the Bloomberg First Word News now. I'm Ritika Gupta. Joe Biden has a 7 percentage point lead in the battleground state of Pennsylvania. That's according to one of the final polls of the campaign. A Monmouth University poll out today has Biden ahead of the President Trump, 51-44 in Pennsylvania. Both candidates are campaigning there today. And President Trump is suggesting he may fire infectious diseases chief Anthony Fauci after the election. Over the weekend, Fauci told the Washington Post the U.S. is, quote, in for a whole lot of hurt from the coronavirus this winter. There were chants of fire Fauci at a Trump rally in Florida last night, and the president hinted he may do that once the election is over. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Alex.
All right, thanks so much, Ritika. So let's get to how we're positioned here for the election. Standard Chartered actually wrote a note that said, we continue to believe that sector-specific policies, notwithstanding the U.S. presidential election outcomes, are likely to be positive for risk assets in the medium term. Joining us now, Stuart Kaiser, UBS, head of equity derivatives strategy. Hey, Stuart, help me square all these pegs. What do you do over the next 24 hours? And do you think that no matter who wins, like Standard Chartered does, you're in a bullish mood for stocks?
Look, I mean, in the next 24 hours, I think some of us will be hiding under our kitchen tables probably. But otherwise, our view on the election is just, the pullback we've had the last week has probably rebalanced things a little bit. Coming into the election before that, it did feel like the market was probably a little bit too bullishly priced about, the potential for a blue wave outcome and then a large stimulus package to follow. I do think if you got a GOP Senate, that would probably not read as positive for markets, at least tactically, because, the risks around a large stimulus package would kind of arise there. So I think you will get a generalized risk relief just to have the event behind us. But, to the extent that the outcome, makes it look like we might not get the size of stimulus the market is hoping for, in that case, I don't think it's necessarily bullish from a tactical perspective. So I do think there's still a little bit of two-sided risk here, though the odds are probably skewed to the upside. I do still think you have that outcome that could be negative to markets, and that's why risk is priced the way it is.
Stuart, what happens if the Biden win turns into lots of talk about tax rises? The market is firmly focused on the stimulus side of the equation, but not talking about the revenue-raising side.
Yeah, and I think that is, that's definitely a risk. And I think most equity investors over the summer were much more focused on the downside risk from tax policy as opposed to the upside risk from stimulus. And since then, what we've had is U.S. economic data going a little bit sideways, and then obviously now the potential for more lockdowns, that stimulus has kind of become almost more of a necessary condition than it was. My impression from talking to investors is that there's a view that you'll get the stimulus now, but that the Democrats may push off the potential changes in tax policy, for let's say 6 to 12 months to allow the economy to recover. So I think the risk aspect from a tax policy change from an investor's perspective will be that it happens quicker than they expect. I think most people expect it to happen, but I think there's sort of a growing consensus that it'll get pushed out a little further in the future to allow the economy to recover. So I think it's much more a timing than a magnitude for that one.
Hey, Stuart, I know you said you want to hide under your bed for the next 24 hours, but in terms of the market, how are we positioned here? Have positions been squared up? Are there any big bets on in the market right now? Are people sitting in cash? What's happening?
I would say positioning has kind of cleaned up a little bit, and I think you can see that in the price action. You've seen the markets pull back a little bit. You've seen some of those tech leaders come under a little bit of pressure. The flows we've seen from an options perspective, I think, have been more to the hedging side. So in that sense, I do think the last week has been people positioning for that risk outcome, just in case. And that's the pattern that you've gotten ahead of previous elections since 1990, which is you tend to get about a week ahead of the election, the VIX tends to kind of move a little bit higher as people start to trade that risk. So yeah, I do think it's cleaned up a little bit. How I would describe it is I think the headlines have probably been more bullish than the positioning has been over the course of the last month. Maybe more talk about stimulus and more talk about a value rally, and potentially less positioning actually behind that. So in that sense, once the election passes, I think there's the opportunity here for some of those headlines to turn into positioning, which will be bullish for markets.
Stuart, I've covered a few U.S. elections, and the market always seems to get it wrong. Why do you think this time could be different?
It's a good question. I mean, I think what's different this time is, frankly, how long we've been talking about it. In the sense that, we were getting questions about the election when people were wondering what to do if Warren got elected president, 12 months ago. So, to your point, I think, maybe we've talked about it too much and sort of overthought it. And to me, that's what happened a few weeks ago is people stepped back and said, look, regardless of the election, we're probably going to get a large stimulus package. We're probably going to get a vaccine announcement. And the Fed is certainly behind the market. So that is, I think, the more simplistic way to think about it is just the election's going to pass. We're going to get stimulus. We're going to get vaccine. And in that sense, I just need to be bullish going into 2021. What happened last week was, I think the re-lockdown news, particularly in Germany, where Merkel had kind of committed not to do that, really kind of threw people for a loop a little bit. And then I think you also had people just last minute saying, what if this is 2016 and the polls don't show up the way that I expect them to? So I think the market is going to be, where would the market be wrong? And I think it's just the degree of risk that's been priced in is just, incredibly, incredibly large. And to Alex's point, this could just be maybe not a non-event, but certainly not an event as large as the market has talked itself into over the last couple of months.
Okay, we're going to wrap it up there. Stuart, always appreciate your insight. Thanks for joining us today. Stuart Kaiser of UBS. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
So less than 24 hours to go until Election Day. The Democratic candidate, Joe Biden, leading President Trump in polls nationally and in several key swing states. Joining us now from West Des Moines, Iowa, for more on polling is Ann Seltzer, Seltzer & Company president. She's been a pollster for over 30 years and is something of a specialist on Iowa. So the latest polls I read from you suggest that President Trump is going to win and win big in Iowa. How big is he going to win? And how significant is that?
Well, our poll has him up 7. And so with a margin of error of 3.4%, I'm not sure that a poll like that would say it's necessarily a big win. But we did show him at about that level in 2016, and he won the state with 9 points. So I just have to begin this conversation by using the word uncertainty, which it's impossible to look backward and really sort of forecast what's going to happen in the future, given there's so many changes in voter turnout, And that is being fueled by early voting on a massive scale. And of course, the unprecedented amount of money campaigns wanted for nothing. So if they use their money wisely, there are all sorts of ways to shake up these races yet.
So, Ann, let's get to that, because something that came out over the weekend was that some within the Biden campaign are worried about Latino turnout, as well as African Americans, that those that have registered have not yet come out to pre-vote. Walk me through what you know there.
Well, in Iowa, we do not have registration by race, so there's no way to really track that on a formal basis. There are probably indicators and people who have voter files where they've overlaid what they think is happening there. We certainly have seen in other polling that we've done some indications that, again, 2016, our polls showed that there was likely to be a dip in African American turnout, and indeed that's what happened. So from election to election, the difference isn't so much of people changing their minds in the middle of the poll, it's who decides to turn out. That, to me, is the key indicator. So when we've got turnout at this massive level, don't yet know exactly how that's going to fall by race or even by age that much, because there's just so much of it going on.
What about gender, Ann?
Yeah, well, we have seen consistently in Iowa, I hate to use the word gigantic, but it was, a gender gap with women preferring Joe Biden in double digits, into the plus 20 margin kind of error, but balanced on the other side with men preferring President Trump. And we now see that the men vote is sticking with that kind of imbalance, but the women's vote has narrowed a bit, still favoring Joe Biden and still by a healthy margin, but not what we were seeing earlier this year.
And we have about 30 seconds left. What about independents?
Independents have been the really strong indicator that perhaps Iowa will go Republican yet again. That is, they swung for Donald Trump in 2016. They're swinging that way in our latest poll.
Interesting. All right, Ann, we really appreciate it. It's going to be a very busy few hours. Thank you, Ann Seltzer and Company President, joining us there. And tune into our special coverage of the election tomorrow that kicks off at 7 p.m. In New York. Of course, Guy, the question is, what's actually priced into the market, and what do you do over the next 24 hours is going to be key. Well, that wraps it up for me and Guy in the U.S. and in London. Coming up here in the U.S., you have the Columbia Law School professor, Richard Brufelt, will be joining David Weston on Balance of Power on Bloomberg Television and Radio. Don't miss that. Within the markets, a very different story today than it was on Friday. 1.3% upside there for the S&P, as the euro still trades a little bit heavy and bonds pretty much go nowhere. This is Bloomberg.
The African American community in general, we have a history of having to support each other, right? And so there are opportunities that are presented that we don't often qualify for. So oftentimes we have to turn to our neighbor and turn to people within our community to assist us, to help us.
The Oakland African American Resiliency Relief Program was created to support and fund Black-owned businesses in the city of Oakland. The reason we started this fund due to the systemic racism behind the PPP funds, also how our Black-owned businesses have been marginalized for so long.
I'm standing here right now because we did get the resiliency fund. I only had enough to kind of just pay payroll for a couple of more months, but I said no new initiatives. Now that we have some new initiatives, we have other revenue streams coming in, and that's what's helping to keep things up.
My understanding is that the government is working on both governments are working on the details in the next couple of weeks. So, I hope that optimistically we can look at, say, December, that we can, start operating there.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. We're just 18 hours away from polls opening on the East Coast of the United States, and already over 95 million Americans have cast their vote, either early in person or by mail. To bring us up to speed on this Election Day Eve, we turn to our chief Washington correspondent, Kevin Cirilli. It's not just Election Day Eve, it's your birthday, as I understand it, Kevin. So happy birthday. But give us a sense of what these candidates are doing today. One day to go.
Well, thank you. It's a marathon, not a sprint. But today it is a sprint up until when the first polls open tomorrow on Election Day. Democratic presidential nominee Joe Biden spending his time, David, in the Keystone State, Pennsylvania, where his campaign is headquartered. He's also going to be making a last-ditch effort to try to turn Ohio, get this, Ohio back to blue. This, of course, had been trending, a state that had been trending Republican for quite some time, and Democrats now feel that they might have Ohio in play. President Trump barnstorming across the country. North Carolina, a key state, a key Senate race, mind you. Also going to be making stops in Florida, in Pennsylvania, Iowa, where he's trying to give a lift to Senator Joni Ernst, an incumbent Republican in the Senate. So all of this comes at a time in which there are now new reports about how both of the candidates will be spending their election night. I spoke with a source close to the president's re-election campaign earlier this morning, David, who told me that the president will be having a very close circle of prominent, notable names surrounding him on election night at the White House, where he likely could give some type of national address. Whether or not he declares victory, whether or not Joe Biden declares victory, we don't know. But the president suggesting that he is preparing his team for there to be not just a long night ahead of them, but a long several days after the election. David?
Yeah, we're talking about election week, aren't we, Kevin? Thank you so much. Look forward to spending that week with you, Kevin Cirilli, our chief Washington correspondent. With us throughout the election coverage this year has been our Bloomberg political contributor, Jeannie Zaino. She's professor of political science at Iona College. She's back with us now. Jeannie, great to have you with us. So day before, give us a sense of what you're looking at. Set the stage.
Well, I'm exhausted hearing Kevin just talk about what the candidates are doing, because it is quite a marathon. And, the president in particular, just after COVID, to be doing this many big rallies outside, it's quite incredible. But I think, what I'm looking for as we move into election night, number one, is to see, does Joe Biden break into any of those Sunbelt states? I think if he does, particularly those states that count early, like a Florida, like a Georgia, like a North Carolina, I'm not expecting he will, but if he does, I think that would bode problematic for the president. But if the president is able to hold those, as he was in 2016, this then moves into the Midwestern states. So we're particularly looking, obviously, at Pennsylvania. And they, of course, are not going to be releasing results, we expect, on election night. So to your point, we could then be looking at a few days, if not more, before we know the results of this.
Yeah, a terribly important point. We're all going to have to be patient, I think, tomorrow night, without a doubt. Jeannie, this is an election like no other, with given the number of people who voted early, voting by absentee ballot. Another difference, though, I wonder, is how stubborn the polls have been. There's been that margin of Vice President Biden over President Trump pretty stubbornly throughout. If, in fact, because of the energy, as you describe it, President Trump is bringing to this, and the barnstorming, if it turns around, what does that mean for polling in this country?
It's such a good question. You know, we sort of pollsters had egg on their face in 2016. I'm not so sure it was warranted, but with all the predictions that Clinton would win by 80, 90%, and then for her to lose, that was problematic. Of course, if it happens again, I think we as an industry are really going to have to go back and see where we are going wrong. I think the important thing to keep in mind, and Ann was just on talking about it, these polls are all within a margin of error. So if we're looking at something like Pennsylvania at 4 or 5% for Biden, in a margin of error of 3 or 4%, that means it's pretty much neck and neck. So I think we have to keep that in mind. In these states that are tight, we could see the president pull it out, as he did in 2016.
And I want to come back to the question of how long we have to wait, because as we've discussed before, depending on the state, you could have early returns coming in favoring President Trump and then turning around, or vice versa. For example, between Pennsylvania and Florida, it's very different in when those absentee ballots get counted.
Yeah, absolutely. And it's on a state-by-state basis in terms of when they start counting and how long they're accepting ballots. So, you know, I think this was some of the concern people had over the weekend, listening to the president say he might declare victory on election night if it's close before all of the ballots are counted. And I think what we'd be looking at in that case would be a whole lot of litigation on both sides. And of course, that's almost a worst case scenario, not just for people watching this election closely like we are, but for Americans as a whole, because it raises all kinds of questions of social unrest, potentially rioting and violence and those kinds of things. So that would be an almost worst case scenario, sort of a 2000 on speed where we'd had that across several states potentially.
It's not just the president that we're electing, but also a third of the Senate. And there's a real question whether the Senate could switch back to Democrat or not. How realistic is that, do you think, right now?
You know, 10 months ago, 11 months ago, we would have said not really likely. But at this point, it is absolutely possible Democrats take the Senate. And I think it's so important to watch that and to talk about it. The Democrats only need to pick up 3 seats if Biden wins. They need to pick up 4 if he loses, and they will control the Senate. And there's a lot of close races out there, Republicans defending many more seats than Democrats are. And so Democrats really have a shot to take this. So, you know, we're watching states from Maine, for instance, with Susan Collins, where the spending and ad spending, we understand, has been $26 million in ad spending alone, which is quite incredible. And, you know, you're looking at big spending across the country on these Senate races, because it's a really important prospect of Democrats taking the Senate at this point.
And Jeannie, if we didn't have enough troubles, we may not know the result, as I understand, the Senate either. This is something you spotted, actually. We have, of course, 2 Senate races in Georgia because there's one special election, and they have to get more than 50% to get elected. You could have runoffs in 1 or even 2 Senate seats in Georgia alone.
Yeah, absolutely. So we have Loeffler and Perdue. Both of those seats are up. And if neither, you know, if in either race they don't get over 50, as you mentioned, it goes to a runoff. And we could potentially not know who controls the Senate until January, in which case we're going to see a lot of money pour into Georgia to continue funding these campaigns. I think we're all hoping it doesn't happen in both. But at this point, looking at the polls, it's a real possibility down there. And of course, in Maine, you have the ranked choice voting, and that can also put a wrinkle in terms of how that comes out for Susan Collins, the incumbent there.
Yeah, a lot of possibilities to prepare for. Thank you so much to Jeannie Zaino, Iona College professor and Bloomberg contributor. She'll be with us tomorrow night for that election coverage. And now let's get a check on the markets. Joining us now is Abigail Doolittle. So when I looked a little earlier, it looked like people were buying pretty much everything, Abigail.
Yeah, a real risk on day here, at least relative to stocks. Commodities a little bit less so, but we have big gains for both the Dow and the S&P 500. The NASDAQ less so. I'm not sure that has so much to do with the election. Last Friday, there were some saying that perhaps last Friday could turn out to be the pre-election low, similar to 2016, when you had the 2 weeks into the election, down weeks, and then you had a big rally in the election week and out of the election. What's very clear, though, is we have lots of selling in the tech space. That probably has to do with J.P. Morgan saying that they're lightening up on their overweighting tech positioning to a neutral. They expect some of the more cyclical sectors to take hold, and that has nothing to do with the election. They think that will happen no matter who wins the presidency. What they do say, though, is, and this is not surprising, that what investors really want relative to the election is certainty, that they want to know who is going to win this election, and that once that's in place, that's going to be a real positive for the markets. And one sign of that uncertainty that you and Jeannie and Kevin were just talking about, bonds. We actually have bonds rallying in a big way on the day after selling off last week. Never a dull moment, David.
Yeah, Abigail, it isn't. But one thing you follow, I know, is positioning. Is that telling us anything? Are people hedging? What's going on with the VIX?
The VIX is actually down just slightly today, but the VIX continues to suggest that, yes, investors are hedging into the election. The VIX has been outpacing the VXN, or the tech index VIX, which is pretty interesting because it, again, suggests that relative to regular volatility, as opposed to that mega cap volatility, investors are starting to bring up the hedge in terms of anything can happen. And something else that I've been watching over the last few months, the S&P 500 stuck in this huge range of congestion. And there's one line of thinking that says that if in the 3 months ahead of the election, the stock market is up, that supports the incumbent. If it is down, that supports the contender. David, right now it's on the wire, suggesting that the markets are far more uncertain about the outcome of this election than the polls are.
Yeah, exactly. The polls may not be reliable. We'll find out soon enough. Thank you so much, Abigail. That's Abigail Doolittle reporting on the markets. Coming up, we're going to talk with the former political director for the California Republican Party, Mike Madrid, about the key question of the Latino vote. This is Balance of Power on Bloomberg Television and on radio.
There isn't anything about trading that is more central to your success than accepting the risk. So wrote Mark Douglas in Trading in the Zone. But how do traders accept the risk? They apply good risk management. They never lose more than a very small percentage of their capital on a single trade. They protect what they have, concentrate on capital preservation, and don't get hung up on making money. And they never let their ego, emotions, fear or greed get the better of them.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We turn now to Mark Crumpton for Bloomberg First Word News.
David, thank you. The Justice Department plans to send monitors to voting locations in 13 states tomorrow to make sure federal voting rights laws are enforced. They include 6 counties in the battleground state of Florida and 3 in the battleground state of Pennsylvania. Officials say the monitors will make sure voters can cast their ballots without discrimination, intimidation, or harassment. President Trump will spend election night at the White House. The president's campaign had planned a traditional party at his Washington, D.C. hotel. But the president said last week he was considering other options because of the District of Columbia's coronavirus protocols. They would restrict the size of the gathering. His press secretary, Kayleigh McEnany, told Fox News today that the president will monitor the election results from the White House. The head of the World Health Organization has gone into self-quarantine. Dr. Tedros Ghebreyesus says he is isolating himself after coming into contact with someone who tested positive for COVID-19. Dr. Tedros says he is well, has no symptoms, and will work from home for the coming days. On Sunday, Geneva, where the WHO is based, imposed a partial confinement until late November amid a surge in cases. Former National Security Agency whistleblower Edward Snowden is applying for Russian citizenship. Snowden and his wife are expecting a baby. He cited the child as motivation to become a dual U.S.-Russian citizen. Russian President Vladimir Putin granted Snowden asylum in 2013 after he revealed highly classified NSA surveillance programs. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thanks so much, Mark. The Latino vote could play an important role in the presidential contest tomorrow as Latinos grow as a proportion of the overall population, even as voter turnout with Latinos sometimes lags behind. Welcome now an expert on this subject. He is Mike Madrid. He was Director of Policy at the California State Republican Party. He went on to co-found the Lincoln Project and is a principal at Grassroots, a political consulting and lobbying firm in California. So, Mike, thanks so much for being back with us. Address the question of the Latino vote. How important is it? Is there there's a perception, at least, that Latinos don't turn out as much to vote? Is that accurate?
It actually is accurate, but the size and segment of the Latino share of our population and of the electorate has gotten so big now that even with lower voter turnout rates, Latinos will surpass African American voters this year as the second largest racial and ethnic voting group in the country. So it's a very critical constituency. Its sheer size is now a force to be reckoned with in an electoral sense. And while there has historically been lower voter turnout than other groups, we will see a historic turnout of Latinos in November 3rd, just a couple short days away.
We refer to the Latino vote, but as a practical matter, it's not a monolith, right?
That's absolutely right. And again, as it gets bigger, we start to learn more and more about the complexities. Cuban Americans, of course, are changing the dynamics in Florida. The southwestern United States is overwhelmingly Mexican American. There's a lot of identified Puerto Ricans, of course, who are already American citizens throughout the eastern seaboard, from New York down to Florida. Central Americans are a huge part of the Floridian electorate, and we are seeing Mexican American populations grow in places like Pennsylvania, North Carolina, even Iowa.
So we've been talking about the swing states or battleground states here that include some of those you just mentioned, such as Florida, such as Pennsylvania, and for that matter, Arizona as well. Where could the Latino vote and showing up or not showing up make a significant difference in the presidential?
It's a great question. Arizona, certainly. Texas, of course, is a battleground state and is a battleground state in large parts to the rise of the Latino electorate. Florida, of course, with its complex Hispanic community, because it is so diverse. Pennsylvania, there's a good pocket of about 100,000 Hispanic voters, which could be decisive. North Carolina and Iowa. Really, we're hitting a point in American history where this will probably be the last election where Hispanics will not be central to most of the battleground states as we determine the next president of the United States.
So give us a sense between President Donald Trump and the former Vice President Joe Biden. For whom is the Latino more important? And let me be very specific on something. There was a report on Bloomberg just last Friday that perhaps some people in the Biden camp were concerned about voter turnout among Hispanics, particularly in South Florida.
That's a great question. And the answer, unfortunately, is it's critical for both of them for different reasons. It's absolutely central to Donald Trump's ability to take Florida. He's invested massively in Miami-Dade and South Florida in trying to get and consolidate as much of this Cuban vote as he possibly can. Cubans can make up about 6% of the Floridian electorate. About half of those are breaking for Biden, half of those are breaking for Trump. Those are good numbers for Donald Trump. Biden's going to have to do a little bit better, as the Bloomberg News article reported. Now you switch over to Texas, it's really about turnout. And if they do get the turnout, they meaning the Biden campaign, I do expect there's a very good possibility that Texas could actually flip to the Democrats' column. I think the Hispanic vote in Arizona will actually be decisive for Biden.
What are the things, if you can summarize in general, what are the things that typically drive a Latino to turn out and vote? What do they care about the most?
Well, this is a fascinating question and a really good one. For 30 years, Hispanics have been telling us that jobs and the economy are the number one issue, followed closely by education and healthcare. The reason why I say it's a good question is because more often than not, we stereotypically look at issues like immigration, driver's licenses for the undocumented or building a border wall or having kids in cages being the driving issues. While those are, of course, extremely important to the community, they should be important to absolutely everybody. And one of the reasons why we do see lower turnout is because neither major party is addressing the economic concerns of the fastest growing segment of the American population. And until that's reconciled, we probably will not see higher turnout levels. And whichever party is able to capture the economic agenda, an aspirational middle class agenda for Latinos, will probably be the majority party for the next decade.
Mike, we have a different issue, different from the last 100 years in the pandemic this time. We've had a number of reports about how it has disproportionately hit the Latino community and the African-American community, by the way, Native Americans as well. Is that a motivation for Latinos? Are they focused on COVID-19 particularly?
That's a really good question. The answer is yes, they are, not only because of the health and safety and the disproportionate impact. Again, Latinos are 3 times more likely to be infected, largely because Latinos make up the essential workforce that keeps the economy running in a times of pandemic and allows other people to quarantine, but also because death rates have not only gone up and skyrocketed in the community, but the economic destruction, those the most economically devastated by this pandemic are people of color generally and Latinos specifically. So I do believe that this will be a driving issue. Most polling suggests that it is. The one big variable is what's that going to mean on election day? Latinos are notoriously late to deciding as a part of the electorate, and they are overwhelmingly election day voters. I expect we will see very, very large numbers from Hispanics showing up on Tuesday to vote alongside Republicans, kind of an odd marriage. But those people standing in long lines tomorrow will be rural white Republicans and Latino Democrats.
Fascinating. Mike, that was really informative. Really appreciate you being with us. That's Mike Madrid. He's co-founder of the Lincoln Project. And be sure to tune in for our coverage of the election results. That will start tomorrow evening at 7 p.m. Eastern Time on Bloomberg Television and Radio. This is Bloomberg.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective, too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The time has come to elect the next president of the United States, and the stakes could not be higher. 2 candidates, 2 very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
Everybody knows the COVID epidemic is certainly a major thing in the whole world, also certainly in China. And so this has served as an accelerator for our business.
The time has come to elect the next president of the United States, and the stakes could not be higher. 2 candidates, 2 very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It's time now for a check of the markets. Polls are still favoring a change in the White House, but what are the markets telling us? Scarlett Fu has some numbers on what we should expect. Scarlett, what are they telling us?
Well, David, the conventional wisdom is that a good stock market favors the guy who's already in office. And history shows that when the stock market is up in the 3 months prior to Election Day, the incumbent gets reelected. When the market is down, the incumbent loses. And that has been the case in 20 of the past 23 presidential elections, which goes all the way back to 1928. Of course, 2020, that's all I need to say. Nothing is clear cut in 2020. And this year, we have the market little changed, up marginally. It was up just 0.1% when I checked earlier. That means a gain or a loss will come down to the wire. The S&P 500 has kind of been all over the place, as you can see there, since the summer. But it really has settled into a narrow range over the last week or so. Now, we have seen low-tax companies outperform high-tax peers over the past month as polls show Joe Biden leading over Donald Trump. Charles Myers, who is the chairman of Signum Global Advisors, the former vice chairman of Evercore ISI, told Bloomberg TV this morning that taxes are the most underpriced risk in U.S. equity markets. And that's because markets have priced in this narrative that the weak economy will force Joe Biden to water down his tax plan if he's reelected. What is not understood, according to Charles Myers, is that the magnitude of how much personal and corporate taxes will go up and be made retroactive to the start of 2021 is a much more likely scenario. And of course, that's something that we'll have to grapple with. But you can see in the meantime, companies with low taxes have outperformed.
So, Scarlett, you and I think almost every day get some bank or the other predicting what stocks will do well or poorly, depending on whether Joe Biden gets elected or President Donald Trump. So are people basically pricing in whatever might happen come January 20?
Yeah, that's been the case for the last couple of months. And a big part of that idea is that the long-awaited rotation into value stocks, cyclical stocks, will take place, will really take hold. And we've already seen that begun, at least judging by fund flows. You can see the green at the end of the chart there. That shows that value funds have seen 13 weeks of inflows. And the thinking is that a Biden victory, along with perhaps winning the Senate, would mean an easier path to fiscal stimulus and infrastructure spending. Now, Charles Myers, who I mentioned earlier, said that the stimulus and infrastructure spending plans would offset the expected tax increases.
Yeah, I wonder, though, if they're fully prepared for those tax increases. That's the question. And also the question is how much time, really, it's going to take to get that stimulus through and how big it will be, for that matter.
Yeah.
But it's also affected the value of the dollar, as I understand it.
It's affected the value of the dollar, but there are a lot of other question marks as well in terms of how the other countries are managing their economic policy, their stimulus, and, of course, their monetary policy as well. Don't forget, after the election, we have a lot of other big events that investors need to brace for, whether it's the FOMC decision due out on Thursday or the October jobs report, which comes out on Friday.
Yeah, it's quite a week, no doubt about it. Thank you so much to Scarlett Fu for that report on the markets and what they're telling us about the election. Up next, the legal wrangling is in full swing on the eve of the election. We talk with election law expert Professor Richard Briffault of Columbia Law School. He's going to talk about what's going on in Pennsylvania and in South Carolina, and for that matter, in Texas. This is Balance of Power on Bloomberg Television and on radio.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with Interactive Brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, federal and state officials have erected barriers to thwart cyber attacks before tomorrow's election. Hundreds of people will be linked to the Homeland Security Department's command center. They include experts from the Pentagon, National Security Agency, and companies such as Twitter and Facebook. New York City Mayor Bill de Blasio says he's concerned about the number of COVID cases and percentage of positive test results, but that the hospital situation in the city remains under control. Mayor de Blasio says the 7-day average remains under 2%. A positive rate of 3% citywide would trigger a shutdown of the school system. Italy is taking new steps to try to stem the spread of COVID-19. The measures include closing shopping malls on the weekends, shuttering museums, and limiting movements between regions. Prime Minister Giuseppe Conte also says he will enforce a nighttime curfew. Conte told lawmakers the restrictions will vary by region depending on how severe the outbreak is in each area. The Vatican is breaking its silence on Pope Francis's controversial comments on gay civil unions. The Vatican says the remarks were taken out of context in a documentary that spliced together parts of an old interview. But the Vatican does confirm that Francis believes that same-sex couples should have legal protections. While the pontiff was known to have taken that position privately, he had never articulated his support as pope. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks very much, Mark. President Trump has said he will fight court decisions that at this point allow Pennsylvania and North Carolina to count absentee ballots received after but postmarked before November 3rd. Welcome now a leading expert on election law. He is Richard Profalt. He's professor of law at Columbia University. So, Professor, always great to have you with us. Give us a sense of what's going on in Pennsylvania and in North Carolina and what his legal challenge, the president's legal challenge, could be.
Okay. Thank you. It's good to be here. So in both of those states, state decision makers, in Pennsylvania it was the state Supreme Court, with the agreement of the Secretary of State of the state, the chief elections officer, and in North Carolina, it was the North Carolina Board of Elections, again, working in a consent decree with the state court. They agreed to extend the deadline for the receipt of absentee ballots, so the ballots could come in after Election Day, several days after Election Day, provided they were postmarked before, relying on the kind of the double whammy of the COVID pandemic, which has led to huge numbers of requests for absentee ballots and people sending them in, and the delays that the U.S. Postal Service has acknowledged is affecting postal service, so that it's taking longer for absentee ballots to be mailed to voters and longer for the absentee ballots that the voters are sending back to actually get to the elections offices. So in both states, the result of litigation, they agree we're going to give voters more time to get their ballots and not past Election Day to mail them, but to get them in a few days later. And that's what's been challenged. There was efforts before, in the recent weeks, to stop those rulings outright. In both cases, the Supreme Court declined to stop those rulings. But there are hints, at least there were some dissents in the Supreme Court case in Pennsylvania, and in North Carolina as well, that the issue might come back after Election Day. What the court declined to do was issue an injunction stopping those ballots, but they might look at them afterwards. And indeed, I know in Pennsylvania, the Attorney General and the Secretary of State have said they're going to keep those ballots in effect, a separate pile in case there's a challenge to them afterwards.
So, Professor, at the very beginning of what you said state authorities, the courts in the case of Pennsylvania, election authorities in the case of North Carolina. Is that a critical distinction? Because we also had an attempt in Wisconsin that came up through the federal courts, as I understand it, and it went the other way. Is it possible that's what the Supreme Court is looking at, whether it's the state officials deciding it or a federal court?
That's been a big issue, a big distinction. That's an important. You raise a very important distinction that we've had. So the Supreme Court has pretty consistently slapped down efforts on the part of lower federal courts to liberalize the conditions for voting in light of the pandemic, saying that violates a doctrine the Supreme Court laid out a couple of years ago called the Purcell Principle, that says that federal courts should not be intervening to set aside election rules or to modify election rules in the pre-election period. The court, that's part of the court's kind of management of the lower federal courts. That doesn't apply when a state court or a state decision maker makes a change like that. There's still some room for Supreme Court action, but it wouldn't be out of their supervisory authority over lower courts. It would actually be more on the merits, more on the idea that there's something about this action, that there might be something about this action that violates something in the Constitution.
So, Professor, let's travel all the way down to Texas, because over the weekend we had a dispute arise in Texas, and I understand it's in Houston, Harris County, the possibility of going through for drive-in voting. There's, I think, like 125,000 ballots have been cast or something. The state courts declined to stop that, although reportedly the Republicans are now going to go into federal court. What's going on down there?
It's, again, a claim is being made. I'm not even sure how good a claim it is that the county clerk in Harris County is Houston, the biggest county in Texas, and the county clerk actually runs the actual mechanics of voting. Has basically authorized curbside voting. People can, drive up, kind of drive through, it sounds like it's like a tent or something, and there's election officials there, and one at a time to sort of receive the ballot, so that people don't have to go into the polling place. Again, it's it's an accommodation to COVID. And that's been challenged. The claim is that the Harris County clerk has gone beyond his authority. So far, the state courts have not agreed with that. The state courts have not stepped in to stop this. And as you point out, I think well over 100,000 ballots have been cast this way. The plaintiffs in this case, who I think are Republican voters, are challenging it, again, on some notion that it's beyond the clerk's authority and somehow violates the election rules. And we'll find out whether I think the hearing in Texas is supposed to be today. It might even be going on right now. How the federal court judge will rule, and what in particular will happen to the 120,000 or so people who cast their ballots in good faith, relying on the declaration, relying on the system set up by the Harris County clerk.
Professor, you and I have talked in the past about what appear to be a record number of lawsuits involving this election already have been filed, many of which have been resolved at this point. We're running out of time. As a practical matter, are we about to pivot from what happened before the votes were cast to recounts, things like that?
Yeah, although some of it will relate, because like these issues about the Dropbox the curbside voting, there's some issues about Dropbox voting and some issues about the absentee ballots that arrive after Election Day in states that normally don't allow it. Many states do allow it, and those states aren't being challenged. And the point is, what we're getting is a lot of things where the rules have been revised in light of COVID in a number of states. And I think there may be still challenges. These challenges now are to sort of stop those changes before Election Day. It's conceivable, certainly in Pennsylvania and North Carolina, that there'll be continued claims that those ballots shouldn't be counted, even though they've been received. Once they've been received in Pennsylvania, they've actually going to be set aside, I think, awaiting a challenge. At least that means that the ballots that come in on time won't be challenged.
So, Professor, because you are a student of election law, clarify one thing for me. We remember Bush versus Gore, in which the Supreme Court really did decide the presidency. How relatively rare is it for courts actually decide elections as opposed to the voters and the election officials?
Well, I think Bush versus Gore, Florida, 2000 was 20 years ago, and that's the last major time this happened. I think, and occasionally you'll see it for, other elections, state legislative elections, other elections. There will be claims of irregularities, claims of misconduct, and they will go through the ordinary, litigation process. So it has happened that courts have had to make decisions. I think there was a Senate race in Minnesota in 2008. It's rare that they're dispositive, but, it matters when the election is close, because then a few thousand ballots one way or the other could swing the result. Remember, in Florida, the number of ballots, the ultimate margin, I think, was under 1,000 votes when 6 million votes were cast.
Exactly right. Thank you so much. It really is always a treat to have you on this subject of election law. That's Professor Richard Fault of Columbia Law School. Coming up, President Trump making a final campaign pitch to a crucial voter bloc, African-American men. Will those outreach efforts pay off? We're going to talk with the co-chair of Black Voices for Trump, T.W. Shannon, who is with the Trump campaign in Pennsylvania. That's coming up next. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Trump's schedule today includes events in North Carolina, Pennsylvania, Michigan, Wisconsin, maybe a few others. For a report on the Trump campaign, we welcome now Bloomberg White House correspondent Josh Wingrove. So, Josh, give us a sense of what it's like inside the campaign right now. What are they thinking? How are they feeling?
Well, they're making that last push, and essentially they think in 2016 everyone wrote them off, and the same thing is happening now. They're confident in particular in the Sun Belt. You know, they're looking at Arizona. Some folks in the campaign even think they'll flip Nevada. The president has spent a lot of time, more than any other state, in Pennsylvania. It looks like they think that will sort of be the state that it comes down to. And so we'll see him there today. We see Joe Biden there today as well. But again, anyone in the president's orbit will tell you that they didn't get too worked up about polls in 2016, and they're not going to try to get too worked up about them now. But certainly the public polls that are out there show that the president is an underdog or a long shot tomorrow. He needs what he calls a big red wave of turnout to deliver victory in the states that will get him over 270 tomorrow.
Yeah, Jess, I got to say, the polls are against him maybe, but boy, you can't question his enthusiasm, his energy on that campaign trail.
Yeah, I mean, he's, I think 14 rallies over today and the previous 2 days. He believes that these rallies can turn the tide, that they're, big for voter identification, that sort of thing. On the flip side, Democrats don't really object to the rallies, and pollsters say it's not clear that they have the punch they once did. The Trump campaign emphatically disputes that. So I guess, we'll see. But President Trump wants to put his feet on the ground in these swing states today. He woke up in Florida, North Carolina doing a rally, Pennsylvania, Michigan, and Wisconsin, really trying to hit those states that really clinched this thing for him 4 years ago. And he would hope to have a repeat showing at today. But as I say, Michigan, Wisconsin, Pennsylvania, the public polls at least are indicating that, that Biden has a lead in those states. So Trump needs to hope that those polls get proven wrong.
Okay, Josh, thank you so much for being with us. That's Bloomberg White House reporter Josh Wingrove. Now for a view on the election from someone who has been a staunch supporter of the president. Welcome now T.W. Shannon. He's president and CEO of Chickasaw Community Bank. He's also co-chair of Black Voices for Trump. Mr. Shannon earlier served as the Speaker of the Oklahoma House of Representatives. So, Mr. Shannon, thank you so much for being with us. First, start with where you are. I understand you're in Pennsylvania, but you're on a bus. Is that correct?
I have, David. We've been all over the state of Pennsylvania. I got to tell you, the energy and the enthusiasm is incredible. It's off the charts. I mean, we've got people from all walks of life who are coming to the bus tour. I'm on the bus actually with Dr. Carson, Secretary Carson, and also other great Americans who are out there wanting to serve this president and wanting to see him elected for 4 years, including former Texas Governor and Secretary of Energy Rick Perry. So it's a great time.
So as you say, a lot of enthusiasm. We can see that in the rallies. We see it in the president himself. At the same time, the polls have been pretty stubborn, including one from Monmouth just out today saying there's a 7-point advantage for Vice President Biden. You think those polls are all just plain wrong?
Well, I got to tell you, the polls were wrong in 2016, and they're wrong in 2020. In fact, I got to tell you what has stood out to me more than anything. This campaign, it's not about Democrat or Republican or conservatives or liberals. This campaign is really about right and wrong. I mean, forgotten Americans. That's who's showing up at the president's rallies. That's who's showing up at the bus tour. I mean, you wouldn't believe the number of purple-haired generational X's and Y's who are saying, listen, because of the Democrat shutdowns, I didn't have a job. I wasn't able to support my family. And this idea of having elected officials determine if you're essential or non-essential, that's just ridiculous. I mean, what we know is the shutdowns haven't worked. The first 100 days of a Biden presidency would mean a nationwide shutdown. We all know that, just like what's happening over in England. And Americans don't want that. We want our freedom. We want President Trump for 4 more years. We want to see this country, and they want to see their state of Pennsylvania prosper. That's what this election is about.
So TW, you said it's Democratic shutdowns. There were Republicans that shut down some states as well. But let's be honest, they shut it down because of coronavirus as a practical matter. And that coronavirus has disproportionately affected African Americans across the country. It's a higher infection rate and a higher mortality rate. Does President Trump bear any responsibility for that?
Well, I tell you, no. The person that's responsible for the Wuhan virus are the Chinese, and I think it's disgraceful to try to lay that at the president's feet. Listen, we're facing a pandemic. The president is bringing us out of that. But what we know is when we see shutdowns, the states that have shut down versus the states that haven't or that have reopened, the numbers really aren't that very much different. So we know that we can live with coronavirus until there is a cure. But this idea of going into your home and isolating from every individual, that's just not good science. It's not what the health experts are advising us to do. Certainly, we need to follow CDC guidelines, but Americans have got to work. We can't sit at home and wait for Nancy Pelosi to send us a check. I mean, that's just not the way that this economy is going to move. We've got to be safe. We've got to take precautions, but Americans have got to be working. And that's why President Trump has said, open the schools and open the economy so that Americans can get to work. And in Pennsylvania, that's what the people want. This is a working class state. People here like to work. People need to work. We don't need a nationwide shutdown. What we need is an economy that's working and a president that's leading. And that's what Donald Trump's doing.
No question we need an economy working. At the same time, even as people go to the polls tomorrow, the incidents of coronavirus are back on the uptick. We're going to push toward new records here. Is that the approach of the president basically just get over it?
Absolutely not. The president has done more to fight the coronavirus than I think can imagine. Even Dr. Fauci has said it. But the reality is this, a little over 200,000 Americans have died from corona. But let's put it in context. 400,000 people have died from high blood pressure. 600,000 Americans have died from heart disease. Shutdowns don't work. What we need are people who are willing to work with the president to find a cure, which we know that the president has done more to commit resources there, and we're going to have a cure very shortly. But until we do, we've got to learn how to work with the disease. But really, what I'm hearing people talk about here in Pennsylvania, people that are showing up, the thousands of people that are showing up to the president's rallies, and they're showing up for the Trump bus tour, they're not talking about the coronavirus. They're talking about freedom, because they know freedom is on the ballot. This socialist agenda that's being pushed by Joe Biden and Kamala Harris, that's not what Americans want. We don't want to be Venezuela. We don't want to be Europe. We're Americans. We're America. That's who we want to be, and that's who we're going to continue to be.
So, TW, let me come back to Pennsylvania specifically. Yeah. Where are you going in Pennsylvania? Because we've talked to various people about the difference between Philadelphia on the one hand and the west out by Pittsburgh, or the north up in Erie. I mean, what are you focused on particularly as opportunities for President Trump?
David, we're in oil country. I got to tell you, I'd be lying to you if I told you I've looked at the complete agenda, but we've been all over. We were in Ohio for a couple of days. We're in Pennsylvania, but we're in the heart of fracking country. And, you know, when Joe Biden, told the American people on that stage that he was willing to sacrifice national security by ending fracking in the United States, I think that spoke volumes, and it spoke to Pennsylvanians. In fact, you can probably hear in the background now, I hear the people cheering. They're excited about this president because he knows that the greater the freedom, the greater the wealth. And that's what Pennsylvanians believe in. So we're all over the state. We're in the heart of fracking country. Yeah. And let me tell you, this state believes in energy independence just like Donald Trump does.
Yeah, fair enough. It's great to have you, TB. And I know that you are a stickler for accuracy as much as anybody. What Vice President Biden has said is ending fracking on public lands. He didn't say across the board. In fact, he denied that. But I take the point. It's important to Pennsylvania.
He said it multiple times, David, on other events that he wants to phase out fossil fuels. So
that is true. That is true. He said that. You and I agree on that. TW, it is really a treat to have you on always. Really appreciate it. And good luck in Pennsylvania. That's TW Shannon. He's former Oklahoma Speaker of the House and co-chair of Black Voices for Trump. And a quick programming note now. Make sure to tune into Bloomberg Television and Radio for our election night coverage starting at 7 p.m. Eastern Time tomorrow. Coming up, the view from the Biden campaign. This is Balance of Power on Bloomberg Television and Radio.
There isn't anything about trading that is more central to your success than accepting the risk. So wrote Mark Douglas in Trading in the Zone. But how do traders accept the risk? They apply good risk management. They never lose more than a very small percentage of their capital on a single trade. They protect what they have, concentrate on capital preservation, and don't get hung up on making money. And they never let their ego, emotions, fear or greed get the better of them.
So we'll have the conversations with the Bank of England in the latter part of this year, and then, we will address our policy around returning capital to shareholders at our year-end results coming up shortly at the beginning of 2021.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Now, we've heard from the Trump campaign. It's time for the view from the Biden campaign. And so we welcome now our reporter on that campaign. She is Emily Wilkins. So great to have you. Give us your sense of where the Biden camp is today, physically, I guess, but also emotionally.
Thanks so much, David. The Biden campaign physically is in Ohio and is absolutely in Pennsylvania. They are, quote unquote, barnstorming Pennsylvania today. Biden is there. Harris is there. Jill Biden is there. They're trying to go to all four corners of the state and get out Biden's final message that Americans are to heal the nation, to unify everyone. Trump needs to go. A line that we've heard a lot from the campaign is that they need to be done with, quote, the chaos, the tweets, the anger, the hate. The Biden campaign is also putting a high emphasis right now on making sure that black voters turn out to the polls. As of last week, 75% of black registered voters in Pennsylvania had not turned out to vote. And so Biden is really trying to make sure to target those voters through campaigns, through stops, and focusing on a message of unity.
So, Emily, as you know so well, the former vice president has had a stubborn advantage in the polls, really going back to the conventions and before. It's really hung in there throughout. Is there any concern within the Biden campaign right now that it might be slipping away? There are some reports maybe President Trump's gaining on him in some key states.
I think a lot of people are thinking back to 2016 and the sense going into Election Day that Hillary Clinton had all of these states locked up, that she was ahead in the polls in Pennsylvania, and then ultimately for Trump to take Pennsylvania by no small margin on election night. So I think that the Biden campaign is being very careful right now. They're sort of trying to make sure that they are not making the mistakes of the past. And like I said, a big part of that is making sure that they're getting turnout, not just from all voters, but especially from black voters, Hispanic voters, Latino voters. Those are areas that they really want to make sure they're focusing on in the last days of the campaign.
So, Emily, briefly here at the end, where is his running mate, Kamala Harris?
So Kamala is in Pennsylvania today, along with her husband, Doug. They are also going to be going through the state. Kamala's been all over the map. She's been to Florida. She's been to Texas, really making sure to get out there and sort of get out the message in some of these states where Biden either has a very slight lead or is only behind Trump slightly in the polls.
Okay, Emily, thank you so very much. That's Emily Wilkins of Bloomberg Government. Emily will be part of our election coverage starting tomorrow evening at 7 p.m. Eastern Time. In the meantime, coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we're going to talk to pollster John Zogby about the state of his profession on the eve of the election. This is Balance of Power on Bloomberg Television and on radio. time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
I'm Mark Crumpton with Bloomberg's First Word News. Americans continue to come out in huge numbers to cast their ballots in the presidential election. More than 95 million people in the country have already voted. That's more than two-thirds of the total number of people who voted in 2016. Texas and Hawaii have already surpassed their total 2016 voter turnout, and the battleground states of North Carolina, Georgia, and Florida have topped 90% of their 2016 numbers. President Trump is suggesting he may fire infectious diseases chief Dr. Anthony Fauci after the election. Over the weekend, Dr. Fauci told the Washington Post the United States is, quote, in for a whole lot of hurt from the coronavirus this winter. There were chants of fire Fauci at a Trump rally in Florida last night, and the president hinted he may do that once the election is over. UK Prime Minister Boris Johnson is promising Parliament a vote on restrictions after England's partial coronavirus lockdown expires in December. He's trying to reassure members of his own Conservative Party who say they'll rebel against his latest crackdown. Prime Minister Johnson warned the House of Commons the number of deaths could be twice as high as the first wave in the spring if national action isn't taken. Pubs, gyms, and non-essential shops will close for 4 weeks under the plan, which is subject to parliamentary approval. Hurricane Zeta, which tore through the South last week, may have cost insurers as much as $4.4 billion. New estimates show the damage was mostly from wind and storm surges. The storm affected 9 U.S. states. The biggest losses were in Louisiana, Mississippi, and Georgia. And now Hurricane Zeta has formed in the Caribbean Sea. Forecasters say it's slated to bring heavy rain, wind, and a storm surge to Central America. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
It's 1 p.m. in New York, 6 p.m. in London, and 2 a.m. in Hong Kong. I'm Vonnie Quinn. Welcome to Bloomberg Markets. Here are the top stories on the Bloomberg and from around the world. This U.S. election eve, we're taking a look at how markets are positioning for what could be a drawn-out battle for the White House. Plus, the contest over mail-in ballots, former U.S. Postal Service Chairman David Feynman on the integrity of voting by mail and why it's crucial this election. And an exclusive interview with SAP CEO Christian Klein on the company losing a third of its market value the last 10 sessions, and how a new wave of coronavirus infections will hit the tech sector. Let's take a look at markets now, and we saw a nice bounce this morning come off ever so slightly around 11 o'clock. Right now, we actually have the Nasdaq in the negative, down almost 0.2%. The S&P 500 shaved off more than 1.1% of its gains. It's up about 0.8% now. The dollar index, though, is still above 94. A lot of strength there, and oil coming back as well, up 2.4%, still, though, at 36.65. So speaking of markets, speculative investors boosting bullish bets on U.S. stocks ahead of the election, according to the latest CFTC data. On the Bloomberg, you can see the increase in E-mini futures buying over the last several weeks. So for more on flows now and what they signify, let's bring in Jay Jacobs, head of research at Global X ETFs, with about $15 billion in assets under management. So Jay, we'll get to the significance of where the money is going in a moment. But first of all, give us an idea of where the flows are.
Well, there's just a lot of money in motion right now, even from long-term investors that prefer to stay, put. We're seeing a lot of people don't want to be flat-footed in this environment where so much is riding on this election. So we're seeing hundreds of millions of dollars move within our own funds. In particular, probably the most asset gathering fund right now is in the infrastructure development space. Our PAVE ETF has brought in about 130 million in just the last month or so, as people are really looking at how a Biden victory could lead to a major infrastructure package passing within an early part of his presidency.
Is it possible to know what money is going where? So can you tell the difference between smart money and the other kind of money?
There's less transparency on the ETF side in terms of exactly who's moving into what, but you can see with pretty general trends that I think a lot of people are looking at, what's going to happen if there's a Biden presidency supported by a Democratic Senate. We're seeing beyond just the infrastructure space, a lot of money moving into the clean tech space as another part of Joe Biden's infrastructure plan, and even more niche in the cannabis space as people look at possible deregulation and statewide approval for more recreational use. So there's a lot of very niche areas that are generating pretty broad interest from the broader investment public.
It does seem like many of the investors that are shifting money around are shifting it around in favor of a Biden win. Is that how you would read all of this money movement? And what if the Senate stays red, for example?
Well, it certainly does appear that a lot of the money we're seeing is positioning for a Biden win, but I don't think that's, entirely exclusive. I think what people are looking for is to have a foot in both sides. I mean, I think a lot of people were caught very flat-footed in 2016. We saw, incredible volatility following election night. And this year, I think people want to kind of play both sides and be prepared for any sort of outcome. If the Senate is retained by Republicans, we do see that as a fairly challenging environment for the markets, because that is likely to create gridlock in Washington at a point where fiscal stimulus is really needed by an economy that's still very much on life support. So we think that could be kind of the most challenging environment on both sides, where it's just going to lead to probably inaction with a split government.
Are you seeing trades at all or money movement in the event that Trump keeps the presidency and the Senate stays Republican?
Well, we are seeing some interest in that space. We would call that kind of more of the financials trade, healthcare, industrial policy, where, not having an increase in corporate taxes would probably be one of the biggest beneficiaries. Also, deregulation in places like energy and utilities benefiting as well. So we are seeing some interest in that space as well. But more anecdotally, I would say the majority of the flows are chasing the infrastructure side of the equation, which does lean a little bit more towards the Biden camp.
Talk to us about the amount of money that's flowing and whether this is typical on, election days or election weeks, and when we'll know, how much money is actually shifting around tomorrow.
Well, when we look at the ETF markets, we're seeing, hundreds of millions of dollars within our own funds, tens of billions of dollars within the broader ETF space. And, that is unusual, but we're seeing heightened volatility in the broader markets. When volatility tends to pop, people tend to rethink their portfolios. And on top of that, you have so many different drivers happening right now between the presidential election, COVID-19 crisis, people really trying to understand how the presidential election might impact both fiscal policy and monetary policy. So everything really seems to be coming to a head right now. And it's just really causing a lot of money in motion. Really, I wouldn't say this is quite as extreme as we saw in March and April of this year, but it's probably the second most we've seen all year.
Oh, fascinating. Jay, thanks for joining. Much appreciated. That is Jay Jacobs, Global X ETF's Senior Vice President and Head of Research. And just to point out for our Bloomberg Terminal customers, there will be full around-the-clock market commentary and analysis on MLive all this week as we cover how the election plays out across asset classes. Please do check it out. Coming up, we're going to be speaking with SAP CEO Christian Klein about the company's forecasts as new lockdowns hurt the company's demand outlook and it loses a third of its market value just this month. This is Bloomberg.
Just days away from the most critical election in U.S. history, and it's only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
Just want to point to a breaking news headline. France reporting a record 52,518 new coronavirus cases in the last 24 hours. That's 52,500 cases, more than twice the 22,000 plus cases that Italy reported earlier. And of course, the UK at almost 19,000 new cases. Shares of SAP, meanwhile, suffering their biggest intraday fall in 21 years last week after the software company cut its full-year revenue forecast and said it expects new lockdowns to hurt demand. Let's send it over now to Bloomberg's Emily Chang, who has the SAP CEO Christian Klein on the line.
Hey there, Vani. Thanks so much. And Christian, thank you for joining us from Waldorf, Germany, where you are. As Vani mentioned, your forecast a week ago really rattled markets, especially tech markets. You saying that the pandemic will continue to hurt SAP and its customers. We just heard Vani talking about those rising numbers in France. They've been rising across Europe. Give us some color on the trends you're seeing in terms of how the pandemic will continue to hurt business and for how long.
I mean, first of all, thanks for having me, Emily. And yes, indeed. I mean, COVID-19 is an inflection point for our customers. And when talking to many of the CEOs of our customers, actually, what they were telling me, I mean, they are seeking for more resilience in their business. And actually, they're running their most mission-critical business processes with SAP, serving their production, serving the logistics, serving the supply chain. And actually, they had a big ask. They want to accelerate the move to the cloud. And this is what we are now doing. We are following the needs of our customers, and we couldn't trade the success of our customers versus the old guidance we had out there in the capital market. And actually, what we are seeing is not only the move to the cloud, but our software, especially in the ERP space, is now more relevant than ever, because these customers now need to transform their business models. They need to seek higher automation. They need to infuse more intelligence to enable working remotely from home to drive higher automation. And this is what we are doing. And I guess there was really no opportunity to go against your customers. Actually, what we are doing is now embracing the needs of our customers.
When it comes to the pandemic, you were quite frank, and I'm curious, do you think this is a harbinger for the rest of tech? Should other companies be bracing themselves for just how bad the pandemic will be?
I mean, I guess tech can really help to overcome the pandemic. This is true for the private, but also for the public sector. And this is where we see that, parts of our portfolio are extremely relevant. I mean, think about all the lockdowns which are happening across the world. And again, you just talked about it in Europe. We are actually, going into the second wave of the pandemic. Now, what you need is intelligent supply chain software who can still, enable our customers to produce and deliver. And what you also need is, for example, changing from traditional sales to commerce. And these are all the solutions what tech providers like SAP provide. And we are the number one in many of these markets. And this is very relevant for our customers. And this is why we want to invest now. We want to invest into R&D. We want to invest into the co-innovation with our customers, because they need us now. And tech is a key enabler to really come out stronger of the crisis.
Right. But SAP shares, which had been rising going into this, have now plummeted almost 30%, wiping tens of billions of dollars off your market cap. How can investors have confidence after such a massive blow?
I mean, again, Emily, as I mentioned, we had a guidance out there who has foreseen higher growth in on-prem. And now I don't want to trade the success of our customers, by forcing them to buy more on-premise software while they want to move to the cloud. And SAP can enable the move to the cloud, can shift these very mission-critical ERP workloads to the cloud. So this is why we are now shifting parts of our guidance, less on-prem and more cloud. We will accelerate the growth in the cloud even more. And when you look at our Q3 numbers, many said, why is cloud revenue only 14%? Actually, our cloud revenue was up 26%. And with that, above the level of our competitors, if you exclude our travel and expense solution, Concur. And who can blame Concur in this crisis, for not growing their business? And this is only a matter of time after COVID when also this business will bounce back. So I'm extremely confident that we're going to even accelerate our growth in the cloud in the years to come.
Now, Salesforce CEO Mark Benioff rejected the idea that this was some sort of bad omen for the rest of the tech industry. He said that you are still going through a CEO transition. You've not navigated the transition to the cloud well. How do you respond to that? I'm curious, do you think companies like Salesforce, like Oracle, also need to worry about the forecast ahead?
Mark and I met last time in Davos, and actually we had a very friendly conversation. And, I don't want to talk so much about our competitors today. And what we are focused on is on the success of our customers. And in CRM, actually, we have seen high growth in Q3. We are the market leader for commerce, and the growth is skyrocketing. And now we are also focusing on making, the connection work between the front office and the supply chain. This is what we are focused on. But of course, I wish also Mike all the best.
Do you think this is accelerating a shift away from on-premise permanently?
Absolutely. this is part why we changed the guidance. Our guidance has foreseen, decent performance on our on-premise revenue business. And look, I also talked to many of the investors. While they were disappointed about, the short-term change of our guidance, everyone said, Christian, this is the right thing to do, because the cloud is the way to go. And this is what makes SAP successful, especially on the mid and the long term. So everyone was very happy about that. We have 200,000 customers only in the US. Not one single customer reached out to me and complained. Everyone actually reached out to me and said, Christian, thanks. Thanks for listening to us. Thanks for moving us to the cloud. And thanks for co-innovating. And in the US, we have many R&D labs, and now we are going to hire new engineers. We want to invest. We want to reinvent how businesses run. Emily, there's no other software company provider in the world who can really make this transformation for our customers work.
So speaking of the U.S., you have an interesting outsider's vantage point from Germany. We are heading into a crucial election here. This could be the most volatile week for the markets all year. Beyond that, how does whether it's Biden or Trump in the White House impact your outlook?
Look, I'm a German, so I will be a close observer tomorrow. All what I can say is actually that the United States were always a great partner for Europe and also for SAP. And, all what I can say, I wish the country all the best for tomorrow.
Now, I know you have young kids at home. You've been navigating this remote work situation as a CEO and as a parent. What does a new normal look like to you and globally, given your position in the U.S. and knowing how governments, to be fair, have dealt with this differently in different countries?
Yeah. So, Emily, first of all, it's great to see how SAP runs in this during this crisis. In this pandemic, we put over 28,000 customers live, completely remote, for parts of their most mission-critical business processes. You also can see how important software is, which actually enables you to work remotely from home. And this is also coming back to why we are now changed the guidance. We want to enable our customers to completely work digitally. Private-wise, I have to say, of course, the family likes it, that I'm now more at home. I have indeed 2 kids who see now the dad more often. So if there's one positive about the crisis, it's definitely, being a bit more at home.
So what is the biggest professional challenge then that you're working on going into 2021?
I mean, my biggest challenge is actually to make sure that our customers tomorrow can produce, can deliver, can sell. And SAP is doing that. We are reaching our helping hand, not only, by the way, on helping them to transform their business models. Also, we are helping the customers who are in financial distress in the crisis. We are reaching out. We are, prolonging, the payment terms. So we don't want to leave one single customer, one single partner behind. And this is our mission. This is our focus in this crisis.
All right. Christian Klein, CEO of SAP, joining us from Germany. Vani, thanks for having us. I'll send it back to you.
And thanks to you, Emily Chang, Bloomberg Technology, for a wonderful interview. Do tune in later on for more interviews from Emily at 5 p.m. Eastern on Bloomberg Technology. Still ahead, the fight for Florida. The presidential race is neck and neck in the key swing states. Will Florida decide the next president yet again? This is Bloomberg.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with interactive brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time: is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
The time has come to elect the next president of the United States, and the stakes could not be higher. 2 candidates, 2 very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
This is Bloomberg Markets. I'm Vani Quinn. The presidential race is tightening in Florida, a key swing state that has historically been the key to winning the election. The state has been working hard to efficiently deliver results in order to avoid a repeat of the 2000 election. Joining us now is Bloomberg's Jonathan Levin, who's in Coral Gables in Florida. So, Jonathan, according to the latest polls, the gap is narrowing, actually. We have today the NBC Marist poll saying Trump and Biden are neck and neck in Florida. And the most recent ABC Washington Post poll shows Trump ahead 50% to 48%. Mind you, that was following a New York Times poll which showed Biden ahead. From where you stand, what is the latest?
Yeah, well, of course, we're getting some early tallies of mail-in votes and early voting here in the state. This is a big-time mail-in voting state. They have a very sophisticated apparatus for doing so compared to other parts of the country, and they're really used to this. And the latest numbers that went live this morning show that the Democrats, that's registered Democrats, we don't know how people voted, but we know that Democrats cast about 100,000 more votes thus far in the election. And, these are unprecedented numbers of mail-in and early votes.
Exactly, and as you say, because these are more registered Democrats than Republicans, then it will possibly skew early on towards something that may not be the case when we have the final outcome. Are there any problems being reported? We know, for example, that Miami-Dade had a lot of difficulty with mail-in ballots, just the sheer volume of them.
Sure. I mean, there have been spot reports. We learned of one particular post office that had some undelivered ballots. But, people are looking very closely at these kind of examples because, as you say, according to polls and according to what we've seen in the mail-in tallies, it's going to be very, very close.
Now, if he wins this Sunbelt state, does that mean that he doesn't need to win a couple of the other Sunbelt states that may be in play as well? I mean, could it all rest on Florida for President Trump, John?
Well, I'll tell you one thing. There is this possibility, of course, that Florida reports fairly early because of the numbers of votes that have already been cast, and because it's a state that's used to the mail-in. If Florida goes for Biden, Trump's path is going to look very narrow, looking toward the rest of the evening.
And if that's reversed, if President Trump wins Florida?
Florida is definitely more critical for Trump. If Biden wins Florida, it's a more decisive signal than vice versa.
Now, the administration in Florida is possibly, more sympathetic towards the current president, if I can put it that way. Does that mean that there's going to be more of, sort of a legal aspect to what happens post the Florida count?
That's a good question. This is a state that, of course, has a long history of complications. Everybody talks about 2000 with Bush Gore, but you can just go back 2 years, and 2018 was filled with complexities. Ron DeSantis certainly has a very close relationship with the president. He rode that Trump endorsement to the governorship in 2018, and they've remained close throughout the pandemic with the governor channeling the president.
Well, John, you'll be covering it for us from Florida. Our thanks to Bloomberg's Jonathan Levin, and that's from 7 p.m. tomorrow night.
You can get a warm burger, soba noodles, even a bowl of curry rice. In a city like Tokyo, vending machines seem to be everywhere. There are literally millions in Japan, and it's a big business, selling $44 billion of goods in 2016. With COVID-19, those sales are slowing down, which means getting rid of unprofitable machines. Vending machine sales were already falling even before COVID, with competition from convenience stores that are open 24/7 and have way more options. But there is hope for some of them. About an hour away from central Tokyo is the Retro Vending Machine Park. Here you'll find 50 or so machines side by side selling some quirky items. vending machines into tourist attractions may not be a solution for bigger business, though, since it requires labor and efficient distribution. Saito says it takes 5 people a day to restock his machines, just in time for lunch.
There are unconventional.
Every era presents its own unique set of challenges and opportunities. Trade CME Group futures with interactive brokers at low cost and seize the moment. Start investing today at interactivebrokers.com.hk.
Clear, it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm Mark Crumpton with Bloomberg's First Word News. It's down to the wire for President Trump and Democrat Joe Biden. Both men are making final pitches to voters in key battleground states that likely will determine who wins the election. Today, the president kicked off a run of 5 rallies in 4 states: North Carolina, Pennsylvania, Wisconsin, and Michigan. Mr. Biden plans to spend most of the day campaigning in Pennsylvania. He also stopped in Ohio, a state Mr. Trump easily won in 2016. The president is signaling he will pursue an aggressive legal strategy to try to prevent Pennsylvania from counting mailed ballots that are received in 3 days after the election. After the 3-day extension was ordered by Pennsylvania's top court, the Supreme Court refused to block it. President Trump called that decision, quote, terrible, and added that once the polls close Tuesday, quote, we're going in with our lawyers, end quote. The head of the World Health Organization has gone into self-quarantine. Dr. Tedros Ghebreyesus says he's isolating himself after coming into contact with someone who tested positive for COVID-19. He says he is well, has no symptoms, and will work from home for the coming days. On Sunday, Geneva, where the WHO is based, imposed a partial confinement until late November amid a surge in cases. In Poland, anti-government demonstrators took to the streets for the 11th day in a row. The protests were triggered by the tightening of the country's strict abortion law. Last month, Poland's constitutional court overturned a provision of the law that permitted abortions of fetuses with congenital defects. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Live from Ontario and New York City, I'm Vonnie Quinn. Amanda Lang joins us as well. This is Bloomberg, and we're joined by our BNN Bloomberg audience as well as our Bloomberg audience now. And here are the top stories we're following from around the world. Closing arguments. Trump and Biden make their final pitches to voters ahead of tomorrow's election. One man, though, will be watching very closely, and that is Fed Chair Jerome Powell. We look at what's at stake for Federal Reserve policy. Plus, the battle over mail-in ballots. We'll talk to former U.S. Postal Service Chairman David Feynman about the integrity of voting by mail and why it's absolutely crucial this election. And the politics of the pandemic. We'll get the latest insight on the global fight against COVID-19 and how public health has become more prominent in this election cycle. Now, let's get a check on the majors.
And Vonnie, we are watching markets. They are certainly giving up a bit of ground here as we go along. And you can see it is the tech stocks that are faring the weakest. And that's indicative of what's happening on the internals of these markets on a day, of course, of continued uncertainty about what happens. You're seeing a little bit of a mini rotation out of techs as they get negative. Those stocks that are economically sensitive are doing a little bit better today, but we're certainly off the high of the session right across the board. Interesting to note that energy is leading us higher here. And you can see crude is moving higher today, but it is still at a pretty... This is not a wildly profitable level for a barrel of crude on that basis, neither New York nor West Texas, which we follow so closely in Canada. So overall, we're still seeing a bit of a negative picture, but we're seeing a bit of buying in those groups that might do well from stimulus. How much of that, of course, is betting on the outcome of an election and a blue wave? Bloomberg's U.S. economy managing editor Peggy Collins joins us now. And of course, the outcome of the election will determine many things. Peggy, it may also have a big influence on not just the spending that comes through stimulus, but then therefore on monetary policy as well. What do you think will be the biggest impact of this election on the Federal Reserve?
Well, I think from the Federal Reserve point of view, there's a couple of things that will stay steady and then a couple of things that could change, but not likely immediately. So the Fed has already signaled that it expects to keep interest rates at this ultra low, near zero level for at least 3 years, so into 2023. So either president will have that backstop and support for monetary policy. The other thing will be that the Fed Chair Jerome Powell will likely stay until 2022. That's when his chair seat is up. But at that point, either president would have an opportunity to replace him and also to potentially replace the two other vice chairs on the board. And I think where that comes into play is particularly if we have a Democratic president and Joe Biden, you'll see potentially the Fed double down on banking regulation, potentially in a different way than it has under the Trump presidency, and also pay more attention to the racial wealth gaps. Under a Trump presidency in a second term, he will likely be happier with the near zero rates, which is something that he pushed Powell for the last couple of years, but uncertain if he would actually like someone else when Powell's seat comes up again. That would be in 2022.
Peggy, there's a certain constituency in the market that is looking for higher rates and looking for, potential inflation, especially if Biden were to win and there was more stimulus, more spending, infrastructure spending and so on. If rates go higher, won't the market be putting pressure on the Fed to go back on its word to keep rates ultra low until at least 2023?
Well, that is something that a lot of people in the market, as you said, Bonnie, are looking at, whether or not all this stimulus and the growing deficits will put pressure and cause inflation to rise, which is something that the Fed looks at very closely along with its goal of trying to reach full employment. But in the sense that we are still crawling out of an incredibly, deep hole in terms of where the economy was in February versus where we are today. Economists that we talked to and my colleagues talked to for this story did not expect that to be a change in the very near term. So one of the economists we talked to said that we're talking about a difference between 2023 and 2024 when they might be under very big pressure to raise rates.
Peggy, we have to leave it there, but thank you. And to follow all of the coverage from Peggy's team, she is Managing Director for Bloomberg Economy here and in Washington, D.C. That is Bloomberg's Peggy Collins. And a reminder to tune in to Bloomberg's special coverage of the election beginning tomorrow night at 7 p.m. Eastern Time. U.S. stocks pairing gains now as we approach the 11th hour of voting in the 2020 U.S. elections. Here's Katie Lyons with a look at how the political tension is playing out in a certain corner of the market. Kaylee.
Yeah, Vonnie, well, let's talk first about how much the outcome of this election really matters to the market, because in the longer term, it really might not. Liz Ann Saunders over at Charles Schwab put out some research, and she pointed to the fact that if you put $10,000 into the Dow Jones Industrial Averages all the way back in 1900 and only left it in the market when a Republican was in the White House, you'd have about $100,000 right now. If you only left it in the market when a Democrat was the president, you would have about 4 times that amount. But if you had just left it in regardless of the outcome of any election, you would have about $4.2 million right now. The point of the story being the market really goes up no matter what. Of course, this is a very long-term view. In the shorter term, there could still be some groups of stocks that bounce around. And one of those that could be impacted directly by the result of this election is those with heavy China exposure. If we take a look at a Goldman Sachs basket of stocks with high China exposure relative to the performance of the S&P 500, you'd see that they have been lagging really for most of the past 2 years amid President Trump's escalating trade war with China. That dynamic has shifted just a touch in recent weeks, with those China-exposed stocks outperforming as the market increasingly prices in the odds of a Biden victory. And according to Sean Snyder over at Citi Personal Wealth Management, that's because these stocks could actually benefit from a Biden win, a Trump loss, rather, because if a second Trump administration could mean increased aggression toward China, whereas a change in administration could be there aren't any increases in trade tensions. Now, I should point out Joe Biden has by no means said he'd take it easy on China. He's called President Xi Jinping a thug. He has also said he would use tariffs if necessary. So it may be a change in tactic more so than the removal of any points of contention. And of course, this is a key relationship to watch, Vonnie and Amanda, because these are the two global superpowers. And in fact, China, as a share of global GDP, is starting to gain on the U.S. China's economy now about 16% of the global economy. The U.S. right now at the moment, about 24%, Amanda.
Kaylee, thanks so much for that. Really appreciate it. Our Kaylee Lines. And coming up next, of course, a major factor of this election has been the mail-in ballots. After this, we're talking to a former chair of the USPS. David Feynman is with us. This is Bloomberg.
The African American community in general, we have a history of having to support each other, right? And so there are opportunities that are presented that we don't often qualify for. So oftentimes we have to turn to our neighbor and turn to people within our community to assist us, to help us.
The Oakland African American Resiliency Relief Program was created to support and fund Black-owned businesses in the city of Oakland. The reason we started this fund due to the systemic racism behind the PPP funds, also how our Black-owned businesses have been marginalized for so long.
I'm standing here right now because we did get the resiliency fund. I only had enough to kind of just pay payroll for a couple of more months, but I said no new initiatives. Now that we have some new initiatives, we have other revenue streams coming in, and that's what's helping to keep things up.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Markets. I'm Vonnie Quinn in New York alongside Amanda Lang in Ontario. More than 96 million ballots have already been cast by mail or in early voting, according to the U.S. Elections Project. Vote by mail has long been considered a safe and convenient option, but the record number of ballots cast that way this year may lead to problems counting votes promptly, which then could lead to a legal fight over which ballots will be counted. David Feynman is former chairman of the Postal Service Board of Governors and currently secretary of the Fair Election Centre, and he joins us now. David, you know, hundreds of millions of pieces of election mail have gone through the USPS system already. Last time around, 2016, it was about 200 million. So we're talking about several times that already. A judge has also ordered the USPS to just get it done, however means necessary. Is the USPS capable of ramping up to this extent?
I think that they were capable.
I'm not sure that they were adequately prepared. If, as an example, if I was there, we would have been on this subject early on. It was pretty clear in the beginning of the pandemic that people were going to mail in their ballots. And the Postal Service clearly was not prepared to handle it. 4 federal lawsuits, which resulted in 4 distinct orders from judges indicating that the Postal Service had not taken up the charge as it should. And I quite frankly don't understand that. That is after 3 congressional hearings. But I know that they're going to be working full time. The one accolade that should be given is to the men and women of the United States Postal Service who are risking their lives and risking coming down with this deadly disease. Over 60,000 of them did. Over 60 have died.
Very important to remember that that is a frontline worker when we think of a postal worker. When we consider the importance, to Vani's point, of this service in this election, there was obviously a bit of politicization around defunding, David. If you had been there, what could USPS have done about that, if anything, to push back and make sure that they had the resources?
Who follow this issue understand that the Postal Service has an obligation to pre-fund its pension obligations, which is costing it about $75 million. And they have not pre-funded in the last 5 years, and well, probably the last 10 years. There's a bill in Congress passed bipartisan support in the House of Representatives, sits on Senator McConnell's desk, and he has done nothing with it to move that bill. And it's, quite frankly, you can't understand why. Not one written statement against it. So quite frankly, I think the Postal Service can do what it has to do if it is adequately funded, and we take away the obligations that it might have that are totally unnecessary. There is no private sector company that has to pre-fund pension obligations.
Right, and of course, as we know, the USPS is in deep financial trouble, even as it has record amounts of mail passing through it, right? We also know that some state attorneys general want a USPS audit after this election, given that there have been some, stated problems in places like Miami-Dade, Virginia, and so on. How does the USPS defend itself against such claims? How does it prove that, it's not culpable of some kind of, aiding election fraud?
Well, I'm not there now. I don't know how they defend themselves. They are in a terrible position. You take as an example on Sunday, this Sunday, all men aboard, all women aboard, everybody was going to move what they had to do to get ballots delivered. I listened to a hearing before a federal judge, and he asked, well, why didn't you do it the previous Sunday? There seemed to be no answer. I'm not sure it's a defendable position. It might be indefensible, and it'll be interesting to find out why. And I'm hopeful that it won't make any difference. At the end of the day, I'm hopeful that it won't make any difference in the election.
It is great to have your perspective. Many Americans would be hopeful of that too, David. David Feynman, former chair of the Postal Service's Board of Governors, secretary of the Fair Election Center. Thank you. And coming up after this, of course, the path of the pandemic is a central issue in this election. But should politics play a role in public health? We'll explore after this. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
My understanding is that the government is working on both governments are working on the details in the next couple of weeks. So, we could. I hope that optimistically we can look at, say, December, that we can, start operating that.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We've reduced our winter schedule to just 40% of prior year. We're kind of guiding for about 38 million passengers for the full year up to the end of March. We think we may have to work that number back slightly. We're running pretty much skeleton schedules for the next month or two. Forward bookings into November were already terrible. So we're not sure these lockdowns will have that much effect on it, although the risk would be to the downside.
That was Ryanair CEO Michael O'Leary talking about the effects of the COVID-19 pandemic in general and the UK lockdowns on his business. We do know that the pandemic is one of the central issues for voters in this current U.S. election. Of course, the politics of public health is a whole other story. We're joined now by Shelley Hearn. She's director of the Johns Hopkins Center for Public Health Advocacy at the Johns Hopkins Bloomberg School of Public Health. Thank you very much for being with us, Shelley. It's great to have you with us. And I do want to start there with, on the one hand, obviously public health, more so than during a global pandemic, is top of mind. How much can we depoliticize it? How important is it from your point of view that it not become a football in a political process?
Well, that's just the moment. I think public health, we're having that out of Snoopy, where Lucy's holding the ball and keeps moving it. That's what we've been doing, actually, to public health. It can't be a political issue, but it also can't be a neglected issue, which is in many ways been happening for years and years before the pandemic even hit. And that's why we really need to make a commitment to rebuild it. This is an infrastructure issue, regardless of who wins the election.
Shelley, we've heard from both candidates that they have plans and so on to, deal with coronavirus post the election. I mean, whether they do or don't, it's almost beside the point at this point, because the system is just not working. I mean, obviously it's out of control, but it's also out of control in the UK, where there is free public health care for everybody. So what lessons can you really take away from this in order to make the argument for more funded public health?
Well, there are a few elements that you have to peel back. One is on the emergency response. We are in the midst of a global pandemic. It is going to have wave after wave, and that's the challenge in emergency response. This isn't just a sprinting event. This is a marathon with lots of little sprints involved. And so what's happening in the UK and other parts of the EU, it's likely to happen here as we continue to have surges taking place that we'll have to consider everything from lockdowns, targeted lockdowns, to the issue of mask wearing. This is going to be with us for a while, and we have to learn on how to do those immediate measures in addition to getting better and better down the road for whatever else comes at us, which will happen.
Just give us a sense of where you think, we know infrastructure spending may be something that comes, there's a blue wave. Where in that spending on infrastructure would you put public health?
Well, this is really, again, a critical element of whether you have a new administration or the current administration stays in place. There has got to be further investments in strengthening that public health system, not just for COVID, but actually what's costing our economy the greatest over time, which is our high rates of chronic diseases. And if we rebuild it properly, it is actually going to make us better prepared for the next public health emergency, in addition to really reducing, again, our chronic problems of cancer, of asthma, of heart disease. It's costing our economy right now as the sickest nation in the world, and those kinds of smart fixes can put us to be better prepared for living longer, healthier lives.
Shelley, have you ever figured out why people are reluctant to have other people, if you like, to put it in very layman's terms, other people pay for their health care, even when it's clearly in their interest to do so, and it's a widely accepted way of doing things in other countries?
Well, here's the thing. What we're actually talking about are some of the fixes and protections that are before you even get into the hospital or healthcare business. When we talk public health, it's really about keeping people out of the being sick business. So there's a great report that just came out 2 weeks ago by McKinsey that actually took a look at the fact that the U.S. economy is really getting slammed in the ballpark of $3.2 trillion because of premature deaths and lost productivity. And the fixes that they were seeing, where you could cut the disease burden significantly by a third, it's not health care. It's actually things that we already know to do, such as reducing smoking rates, addressing mental health, the lack of parity there, some of the basic fixes, even with our transportation system. So it's not healthcare. It's actually about how do we keep us all healthy and well and out of the hospital.
Well, Shelley, thank you. And we will speak to you again very, very soon. That is Shelley Hearn, Director of the Johns Hopkins Centre for Public Health Advocacy. And of course, the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. From me in New York and Amanda in Ontario, this is Bloomberg.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I'm Mark Crumpton with Bloomberg's First Word News. Americans continue to come out in huge numbers to cast their ballots in the presidential election. More than 95 million people in the country have already voted. That's more than 2/3 of the total number of people who voted in 2016. Texas and Hawaii have already surpassed their total 2016 turnout, and the battleground states of North Carolina, Georgia, and Florida have topped 90% of their 2016 numbers. President Trump will spend election night at the White House. The president's campaign had planned a traditional party at his Washington, D.C. hotel. But the president said last week he was considering other options because the District of Columbia's coronavirus protocols would restrict the size of the gathering. His press secretary, Kayleigh McEnany, told Fox News today that the president will monitor the election results from the White House. New York City Mayor Bill de Blasio says he's concerned about the number of COVID cases and percentage of positive test results, but that the hospital situation in the city remains under control. He says the 7-day average remains under 2%. A positive rate of 3% citywide would trigger a shutdown of the school system. Italy is taking new steps to try to stem the spread of COVID-19. The measures include closing shopping malls on the weekends, shuttering museums, and limiting movements between regions. Prime Minister Giuseppe Conte also says he will enforce a nighttime curfew. Conte told lawmakers the restrictions will vary by region depending on how severe the outbreak is in each area. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
It is 2 p.m. in New York. It is 7 p.m. in London, live from Bloomberg's world headquarters. This is Bloomberg Markets The Close. I'm Caroline Hyde.
I'm Romaine Bostick.
And I'm Taylor Riggs.
And the U.S. stocks held back by tech today. The S&P 500 still in the green, but losing ground as big tech bellwethers Apple, Amazon extend losses. Havens, they catch a bid with the U.S. Treasuries and dollar rallying as volatility ticks up ahead of the U.S. election. Talking of which, one day more, President Trump and Vice President sprinting towards Election Day with competing rallies across must-win swing states where things stand in the race on the final day of the campaign. We get the latest. And the UK braces for lockdown. Prime Minister Boris Johnson saying there is no alternative as non-essential businesses prepare to close for a month. That's amid concerns of a greater economic blow. The pound declining to its weakest level in a month. All that, well, so much more coming up, Romaine.
Yeah, so much more might be the understatement of the day and perhaps of the week. Of course, it's going to be a busy week for us, and I'm sure for most of our viewers out there, the event risk, the event horizon that we've all had our eyes on now for months, finally here. Not only a big week for elections, a big week for economic data, of course, also a big week for monetary policy. You can see the S&P 500 off the highs of the day. We did get a little bit of a rally earlier in the day, but seeing a little bit of a pullback here. It's interesting to see the types of stuff that has been rallying today, because it's been primarily a lot of the energy names, materials names, industrial names. Remember, we got that IHS data out of Asia, out of several Asian countries, that showed pretty significant rebounds in manufacturing activity. And that gave people a little bit of hope here that there is an economic rebound, a global economic rebound afoot. But of course, the concerns about the outcome of tomorrow's election day and sort of what it means for policy going forward for the U.S. and for the world, Taylor, remains to be seen. And that might keep us a little bit of range bound here on risk assets.
Well, how do you price that, right? Going into tomorrow, we certainly know that strategists over at JPM are switching up a few allocations. Take a look at this, you guys. They're downgrading tech to neutral from an overweight and upgrading financials to a neutral from an underperformed. Tech, of course, being downgraded due to yields bottoming out. If they start to rise, that rotation starts to happen. Valuations and financials are just so cheap. So we'll see if this trend that you're looking at on the screen can start to reverse. Let's flip up the board and take a look at what's underpinning some of those calls. That is, of course, the 10-year yield. We are creeping down a little bit in yield, about 4 basis points. But I want to point out the trend since July and August, the bottoming out of 50 basis points, Caroline. That is a slow creep higher just a little bit.
Creep higher. We'll see what else is creeping today. Let's get the inside track with Tracy McMillan, is, of course, head of global asset allocation strategy at Wells Fargo Investment Institute, who joins us from Winston-Salem, North Carolina. Give us your take, Tracy. Wells, you've been talking about pre-election jitters, about market indigestion. Today, is it jitters upon us? Do we hold on to these gains in the S&P 500?
Yes, thank you, Vani. So our view is that the S&P 500 is likely to be volatile around the election period. And that election period could extend, obviously, beyond just tomorrow and Wednesday. So we would anticipate that additional volatility. And we're suggesting that investors take some of the sideline cash that they may have built up over the last month, as we've seen assets drain out of really across the board, across different asset classes. Take some of that cash and invest it as the volatility picks up.
So what ultimately, though, Tracy, are we trying to seek out here? Because there's a lot of concern about potential shifts in policy based on the outcome of the election. But there also seems to be some broader fears here that are really sort of disconnected from the two candidates. They have to do with the economic rebound and, of course, the resurgence in COVID cases. What are folks really focused on right now?
So we think they're really focused on three things. The COVID cases rising is certainly in the background here. With the elections this week, eyes are trained on what's going to happen over the course of the next few days and what that ultimate outcome will be. And more recently, we've also seen concerns about when and how much we'll get in terms of stimulus. So it's really all of those things, and the markets being a discounting mechanism and weighing the possible positives against the possible negatives. And last week, the possible negatives got the upper hand.
Tracy, big calls from JP Morgan this morning, downgrading tech and now starting to look at financials. Where are you in the rotation from growth to value?
Yeah, so we've maintained our overweight allocation to invest to technology, and we also have an overweight to communication services and consumer discretionary. So all of those continuation of the stay-at-home play, and in acknowledgement of the possibility or potential for higher cases going forward, and also for some volatility here. Low growth in our scenario going forward, relatively slower growth, I would call it, certainly down from the 33% last quarter. All have us tilting towards those more consumer and stay-at-home type stocks. But we also like healthcare, and we like healthcare because we think that there are going to be additional investments going into healthcare regardless of who wins tomorrow.
Tracy, just looking at the longer term horizon here, when you're looking at analysts, if you're using the Bloomberg terminal, you can see that analysts actually think in 12 months' time, look, the S&P 500 is going to be about 17% higher than where it is currently. What do you see? Get through all this noise of an election, get through all this noise of further Federal Reserve policy as soon as Thursday, which is doubtful, of course. But where do you see next year? Is it growth? Is there more money? Is there richness to be had from the S&P 500?
We think so. We're just about at that same level as consensus at this point. We see 3850 as a midpoint on the S&P 500 by the end of next year. So from here, that's roughly 16% higher. So we do see an opportunity, especially as we see these pullbacks in large caps. We also like mid caps and would take advantage of any opportunities in mid caps as well.
And just real quickly here about the direction of the dollar, Tracy. I'm curious because a lot of folks have sort of pointed to the recent bouts of dollar strength that we've seen, which seem to be less a bet on the U.S. and more concern about the rest of the world. Do you think that the general trajectory here is going to be one where we go back to that dollar softness, that dollar weakness on a relative basis?
We do think so. We think that as we go forward, we get additional stimulus, we have additional borrowing, that is going to cause the dollar to continue to soften. And also, as we see, some emerging markets in particular starting to pick up steam here, that also could represent another rotation out of the dollar.
Tracy, the bond markets and the equity markets seemingly tell two different stories. What story's right?
So you're right. Last week we saw the yield on the 10-year moving up. As of today, that was moving up about 25 to 28%. So a big increase in yield last week. At the same time, the equity markets were falling. We don't typically see that. But if you'll recall, one of the big supports for equities was those very low rates. So some rationalization going on there. And it makes sense that as rates move higher, in anticipation potentially of growth, that equities would start to reprice based on those higher levels. We still don't think that rates are going to move that much higher, so we still see greater opportunity in the equity markets.
All right, yeah, looking at 83 basis points right now on that 10-year. Tracy McMillan, always great to get your thoughts. She's head of global asset allocation strategy at the Wells Fargo Investment Institute. Now, a lot more coming up here on this program. We're going to start off with Prime Minister Boris Johnson defending his decision on that month-long lockdown as critics warn of a painful economic blow. Plus, brace for every scenario. The U.S. election tomorrow. Uncertainty still looming. Both candidates ready to fight for the presidency even after the results are in. And oil all over the map today. A 9 percentage point swing on NYMEX crude futures. We're going to talk about what the news is coming out of OPEC+. That's coming up next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
All right, time now for top calls to look at some of the movers on the back of analyst recommendations. First up, Wynn Resorts getting an upgrade today to equal weight over at Morgan Stanley with a $95 price target. The analyst seeing the upcoming operating inflection holding more room for gains amid COVID-19 and overblown concerns, in their words, about weakness over in Macau. Shares here up about 3% on the day. Next up, let's turn to Roku. The price target getting raised to $220 from $160 over at Wedbush. The analyst saying market conditions are driving driving accelerated adoption with the potential to substantially grow revenue and profits over the long term. Shares here up 1.5%. And finally, let's take a look at insurance company Lemonade, which went public back in July. Started with an overweight rating and a $63 target over at Piper. This is following that mandated quiet period. The analysts seeing a digital and technology forward competitive advantage for Lemonade over its insurance peers. Shares today up almost 3%, and those are some of your top calls. Taylor?
Well, Romain, we bring it all back down to the pound, some of the coronavirus cases, that renewed lockdown, of course, that we're continuing to see. Take a look at pound volatility. Caroline, I did this just for you. It's not just volatility in the next few weeks, but really in the next few months for pound sterling. This is, of course, some of it was Brexit. More and more, though, it is these big declines and the rising volatility, of course, on these renewed lockdowns. For more on this, let's bring in Therese Raphael, our Bloomberg opinion editor for our London bureau. Is the fear here that this isn't a 4-week lockdown? This could be a 4-month lockdown.
Well, Boris Johnson tried to reassure Parliament, and particularly the Conservative Party benches, that it would be strictly limited to 4 weeks. We would lock down from this Thursday until December 2nd. But it's hard for the government to actually make those kinds of pledges because a lot depends on things that are outside government control, such as whether people really comply with the new restrictions. And what we've seen since, say, March, when the first lockdown happened and there was a great deal of solidarity and quite high levels of compliance, we've seen those sort of drop. There's a lot of skepticism about these measures, and and of course schools are kept open and universities open. So much depends on how quickly the rates of infection decline, and Boris Johnson may have to go back to Parliament and ask for an extension. He hasn't ruled that out.
I mean, I'm just looking on the ever-favoured social media outlets and looking at tweets saying that at the moment in the north of England, ambulance services are declaring a state of emergency, that they're overwhelmed. What I felt when talking with friends over the weekend was that if you looked at the press conference, yes, they're all frustrated with perhaps the flip-flopping coming from the government, but the sheer scale of what would happen if they didn't U-turn as they have was quite unfathomable. The fact that you could see 4,000 a day dying alone in the UK and NHS completely overwhelmed. Therese, how gloomy a picture does this paint of the UK right now? What is it like, in particular, what is it like for businesses?
Well, if you accept the figures that were presented to the government and that Boris Johnson presented to Parliament, they're quite alarming, and it absolutely justifies the government changing its tack quite dramatically. Now, it turned down the recommendation of a national lockdown 5 weeks ago. The Labour Party had urged it to lock down. And so the new figures have convinced Boris Johnson that he has no time to lose if he's going to keep the NHS from getting overwhelmed. I mean, for business, it's absolutely dire because the Christmas season for the hospitality sector especially is so important. The government has extended the very generous British furlough policy, which is 80% of wages. There's going to be more help for the self-employed. But for a lot of businesses that have just scraped through this lockdown, put in measures to be COVID safe, are now told to shut down. We heard MPs saying, well, what about golf courses? What about driving ranges? Why do they have to shut? We heard the bishops of England and Wales complaining that church services are now being closed down for the month. So there's a lot of questioning about individual measures, but I think a general acceptance that if the figures are as Boris Johnson presented it, there really wasn't much choice.
Therese Raphael, we thank you. The U-turns continue, and of course, we see over in Europe, it continued to look ever bleaker. Therese Raphael of Bloomberg Opinion there. Now, coming up, bracing for every scenario. With the election tomorrow and uncertainty looming, both candidates are ready to fight for the presidency, even after the results are in. We're going to bring you the latest in the markets, the latest in terms of the polling, and the latest on the ground from around the United States. From New York, this is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
What is happening today in India is actually a determination to rebuild our economy.
India has an opportunity not only competing in the space of the factory of the world, but a very big opportunity to compete in being the office of the world.
Everybody knows the COVID epidemic is certainly a major thing in the whole world, also certainly in China. And so this has served as an accelerator for our business.
Happy election eve, as I guess we call it, and markets certainly looking at some of the risk and the pricing of that risk ahead of election day tomorrow. Take a look at this, you guys. The VIX curve is actually flattening as traders are moving up the timeline for election uncertainty. So you're actually looking at lower volatility in November, the December VIX contracts. Spot VIX, more uncertainty now, more fear now relative to later out in the dates. For more on this and the election, let's bring in our Bloomberg Chief Washington correspondent and birthday boy, Kevin Cirilli. Kevin, do we buy the polls this time? Are swing states really swing states?
Well, we'll find out soon enough. Look, it's a marathon, not a sprint, but we're sprinting up until the polls open on Election Day tomorrow. This despite upwards of 80 to 90 million people already casting their ballots ahead of time, record-shattering. Now, just within the last hour, Taylor, a new NBC Marist poll came out from battleground states of Pennsylvania and Arizona. We've got them up on our chart right now. However, this new NBC Marist poll shows that the president is closing the gap with Joe Biden in Arizona as well as Pennsylvania, striking well within the poll's margin of error. He has now brought that to below 5 percentage points. So it all comes down to, one, who voted when they voted early, and two, the get out the vote effort for both campaigns. I checked in with the DNC and the RNC throughout the day today. They both spun me both ways and said that they have the best get out the vote effort that is possible. But no doubt President Trump going to be barnstorming across the country today as Joe Biden continues to set his sights on Pennsylvania and now Ohio.
Kevin, of course, we focus a lot on people getting out to vote and obviously who they vote for. There's obviously a lot of talk here about challenges to some of those votes. We've seen already in Texas several cases actually make their way through the courts, including one that's actually attempting to throw out tens of thousands of ballots already.
Harris County, where two Republican local officials have brought there to be a case that would get rid of 100,000 of drive-through votes in the early ballots, as they're called, where folks were dropping off their early vote through a drive-in measure. Now, prominent Republicans and prominent Republican staffers here in Washington, D.C. have come out against that. Brendan Buck, who is a former senior advisor to former House Speaker Paul Ryan, has come out against that, as have other lawmakers. Now, the Texas State Supreme Court, Republican-backed, mind you, has also pushed back against that. No doubt what we are seeing, however, Romaine, is something that you touched up upon, which is that this is going to likely be the most litigated election, not just at the presidential level, but also across the country, really, this season.
Kevin, it makes people nervous. We're outside Bloomingdale's here in New York, and I'm watching them board up all the windows. Realistically, is it something that people should be worrying about? Is it media hype?
Well, there's a palpable sense of political anxiety, call it what you want. I mean, what's playing out in New York City is also happening in the nation's capital here in Washington, D.C., as well as other cities. We should note in the battleground state of Pennsylvania, Philadelphia has been dealing with unrest and large mass-scale protests and in some case riots. And the Democratic governor there sent in, Caroline, the National Guard to impose a 9 p.m. curfew over the last couple of days. So a lot of unknown variables for this election. We talk frequently about Philadelphia. We've talked frequently, obviously, about mail-in ballots, but weather on variables as well. So many different variables that are going to really be coming to a head. Now Taylor, what would we call it? I mean, if this was a marathon, I guess this would be mile 26.
26.2, right at the end.
Yeah, but we have 0.2 to go. We have point. That's what I'm saying. So
look at this. Two marathon runners bonding here on air. I'm not sure Caroline and I can compete with you.
Go
two.
eat cake for your birthday. Go eat cake,
Kevin. Happy birthday.
I always want cake.
I'm sure you're going to spend most of your birthday working. Presumably hardest working man.
Nowhere else I'd rather be. Nowhere else I'd rather be. I'm a political junkie.
All right, Bloomberg Chief Washington Correspondent Kevin Cirilli there. All right, let's get over to Taylor with the Business Flash headlines.
Thank you, Romaine. A coronavirus vaccine is being developed by Germany's CureVac. It showed a good immune response in early trials. CureVac says advanced clinical trials are on track to start by year-end. Earlier this year, there were reports that the U.S. government had tried to buy CureVac or persuade it to move its research work to America. The National Football League has been rejected by the Supreme Court. Justices refused to stop an antitrust suit against the NFL and AT&T's DirecTV. The suit has to do with the cost of Sunday ticket package and out-of-market games. And it is a double blow to America's ailing shopping mall industry over the weekend. You guys, this is the story that really caught my eye. Two major operators, it's CBL and Associates Properties and Pennsylvania Real Estate Investment Trust, both filed for bankruptcy protection. They've been dragged into this situation because many of their tenants have also filed for Chapter 11. Some of the ones we know, JCPenney, J.Crew, the two of them combined make up 87 million square feet of real estate across the country. More pressure.
Yeah, and even before the pandemic, we were talking about the fact there was just way too much physical retail out there. And then you talk about malls and the whole business model. I mean, just a week ago, I was out at the American Dream Mall, the big mega mall similar to Mall of America, but here in the New Jersey area. And I was actually surprised how many people were there, but they were there more for the rides and the sort of entertainment rather than the actual stores.
The indoor skiing.
Indoor skiing
was
very popular. There was a line out the door.
We need indoor marathons.
No, we don't. Let's have a look at the market. We're lower on tech. This is Bloomberg.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
I'm Mark Crumpton with Bloomberg's First Word News. The Justice Department plans to send monitors to voting locations in 18 states on Tuesday to make sure federal voting rights laws are enforced. They include 6 counties in the battleground state of Florida and 3 in Pennsylvania. Officials say the monitors will make sure voters can cast their ballots without discrimination, intimidation, or harassment. British Prime Minister Boris Johnson says there is, quote, no alternative to imposing a coronavirus lockdown across England to stop the health service from being overwhelmed. The Prime Minister is rejecting criticism he was too slow to act, telling lawmakers he makes, quote, no apology for doing what was needed to avoid national measures that are set to come into force on Thursday. Pubs, gyms, and non-essential shops will close for 4 weeks under the plan, which is subject to parliamentary approval. Hurricane Zeta, which tore through the South last month, may have cost insurers as much as $4.4 billion. New estimates show the damage was mostly from wind and storm surges. The storm affected 9 U.S. states. The biggest losses were in Louisiana, Mississippi, and Georgia. And now Hurricane Eta has formed in the Caribbean Sea. Forecasters say it's slated to bring heavy rain, wind, and storm surges to Central America. The Vatican is breaking its silence on Pope Francis's controversial comments on gay civil unions. The Vatican says the remarks were taken out of context in a documentary that spliced together parts of an old interview. But the Vatican does confirm the Pope believes that same-sex couples should have legal protections. While Francis was known to have taken that position privately, he had never articulated his support as Pope. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
This is Bloomberg Markets to Close. I'm Romaine Boston.
I'm Caroline Hyde.
And I'm Taylor Riggs.
A little after 2:30 here in New York, getting settlement of NYMEX crude futures. Your settlement number 3681 on NYMEX crude. The numbers you're seeing on your screen, of course, that's the start of the new session. We also had settlement on gold a little bit earlier, about an hour ago at 1892. So you're seeing a little bit of a bid here for oil and for gold as well. Also for copper right now around 307 a pound. The interesting moves on oil today, though. Remember, we opened up lower. We were down about 1%, fell as much as 6%, but managed to squeak out a 3% gain here on the day, but nevertheless still well below the range that we had been in for the last 2 months.
And Romaine, let's talk about that range. Pull up a long-term chart here that we're showing on the terminal. Long-term, the story doesn't look good. You're still well below $40 a barrel, but an improvement today, managing to close almost at 37. So you're well above the dip below 35 that we got earlier this morning. And then, of course, in blue, it is energy stocks relative to the S&P 500. They are at a record low. So for more on this oil story, let's bring in Bloomberg's Jessica Summers. Jessica, today, not so much of a demand story, but much more a supply side story. Am I right?
That's right, Taylor. Oil made quite the turnaround today, moving from negative to positive territory after Russian oil companies met with Energy Minister Alexander Novak to discuss the possibility of delaying and easing of OPEC Plus production curbs by 3 months. Now, this is extremely significant to me, especially for the oil market, if producers do delay the tapering of those output cuts. Essentially, the oil market has been under so much pressure given the demand destruction because of the pandemic. And if OPEC starts pumping more crude, sending more oil back into the market in January, as they had planned, it would really be quite bearish for prices. So the plan was originally for them to add almost 2 million barrels a day to oil markets. And keep in mind that Russian companies are contributing the biggest portion of production cuts after Saudi Arabia. So if Russia does get on board with delaying the easing of these cuts, it would make quite a difference in the oil market.
Yeah, it would definitely make quite a difference. Of course, you still have that sort of Damocles with Libya hanging out there. Talk to me about the demand side here, Jessica. We had some relatively positive data coming out of Asia that seemed to suggest oil demand, at least in certain parts of the world, might be bouncing back.
Very true, Romain, especially like you mentioned in pockets of Asia there. But still, I have to point out that crude has been really struggling, and any rallies we've been seeing are very limited because of that outlook for overall lower demand because of COVID-19. So we're seeing virus cases raging around the world, the U.S., Europe, the renewed travel and movement restrictions in Europe. So it's very clear that demand for crude will likely remain weak for the rest of the year. In fact, Rystad Energy, for example, came out today and said European lockdowns may cut more than 1 million barrels a day of oil demand. And some of these lockdowns going on in Europe may last for a month. They may last even more. So we're really waiting to see how long the lockdowns will last so we can get a better grip on oil demand moving forward.
What do you say, though, to those that are talking about how basically the world is, as it stands, in a stock drawing mode rather than perhaps awash with supply, as many might fear?
That's right. I mean, there's a lot of different forecasts and a lot of different scenarios. And, you know, while we do see some tightening, we did see a little bit of a bounce back in product demand, product supply drawdown in the U.S. about a week or so ago, which was initially a bit of a bullish indicator that people are driving here in the U.S. But globally, it seems to be a little bit of a different picture. The fact that OPEC may step in and help support the market when they had planned to sort of flood the market with oil in January, if they change that decision, that will be a huge factor, and that will help sort of balance out supply and demand and maybe see more of a drawdown in overall global inventories.
Jessica Summers, we want to thank you. All things oil markets for us there. Now coming up, Lowe's Corporation on a tear. Shares of the Tisch family's holding company up over 5% on track for its biggest gain since June. What the street liked about its third quarter results. It's our stock of the hour next. This is Bloomberg.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
Retail, I think, is strong. We see a lot of people ordering online or going to the grocery store and buying and eating at home. We just don't know what restaurants are going to do this year in the state of Florida, which is the largest consumer of the crab.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact,
women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time: is a U.S.-China space race good for humanity? We'll hear from both sides.
The competition, if you look at the past, led to innovation.
A whole new arms race could start.
And we'll get your perspective too, with help from the artificial intelligence of IBM Watson. I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday on Bloomberg Television.
As a pandemic sweeps the globe and wildfires ravage the West, well, the only thing that seems to spread faster are conspiracy theories. Pizzagate, the Great Awakening, and mass pedophilia rings. These are just some of the themes associated with what's been known as QAnon. It's a belief that's been, well, piercing its way through politics since 2017, and the idea has amassed a rather large following, ranging politicians, celebrities, and beliefs that there is some sort of deep state working against Donald Trump. So what's being done about these groups, and how are they impacting this year's election? Bloomberg's Emily Chang reports.
About 1 year after President Trump's 2016 victory, a hint was dropped on the pseudo-anonymous discussion board known as 4chan that Hillary Clinton's arrest was imminent. Following this unfounded claim, more and more posts appeared by a user named Q Clearance Anonymous that continued to push cryptic content across the platform, ultimately promising to deliver the next big revelation that would bring down the Democratic Party. Since those posts back in 2017, QAnon has continued to evolve into a widespread belief that there are actors in the so-called deep state trying to take down President Trump. The president has repeatedly retweeted QAnon supporters, but has denied knowing much about them.
I don't know really anything about it other than they do supposedly like me.
I just don't know about QAnon.
You do know.
I don't know. No, I don't know. What I do hear about it is they are very strongly against pedophilia, and I agree with that.
Conspiracy theories, a term that became common in the 19th century, have run rampant in the digital age, like fire meeting fuel. But what's so bad about a theory? Well, Facebook, Twitter, and YouTube have all banded together to try and limit QAnon content and other baseless theories that could end up inciting real-world violence. In 2019, the FBI warned conspiracy theories by domestic extremists very likely will emerge, spread, and evolve in the modern information marketplace, occasionally driving both groups and individual extremists to carry out criminal or violent acts. QAnon is just one of the extreme ideologies that have driven some to take the beliefs a step further.
This message right in the truck's window reading, "Release the OIG report," a possible reference to the Hillary Clinton email investigation.
Prosecutors allege that the train engineer admitted to police that he intentionally derailed and crashed it, saying that he was suspicious of the Mercy, believing it had an alternate purpose related to COVID-19 or a government takeover.
Multiple casualties were being told, and police again asking people to stay away from this area.
In an effort to combat misinformation ahead of the election, online platforms continue to remove posts associated with QAnon. But when the lines are blurred between social media and news media, the question remains, when is it moderation and when is it censorship? Emily Chang, Bloomberg, San Francisco.
All right, our thanks, Emily Chang, for that report. Now let's get a quick check of the latest business flash headlines with Taylor.
Thank you, Romaine. More resignations at SoftBank's Vision Fund, the $100 billion vehicle that invests in startups like Uber and WeWork. Well, the fund's chief operating officer and 4 partners, they have left. Vision Fund employees have told Bloomberg Businessweek the company culture rewards aggression and recklessness. Citigroup will serve as a financial advisor to a group seeking to distribute coronavirus vaccines globally. The bank says it was selected by Gavi, the Vaccine Alliance. The group's goal is to deliver 2 billion doses of a vaccine to its more than 180 member countries. And there's one more sign of high demand for that record-setting Ant Group IPO later this week. Bloomberg has learned that institutional investors are buying Ant's Hong Kong shares on the gray market at a 50% premium to the list price. Retail buyers will be able to trade through a similar channel a day before Ant's debut on Thursday. Romaine, big day Wednesday and Thursday.
Yeah, I can't wait, Taylor. All right, time now for our stock of the hour. We're talking about Lowe's Corp, the big conglomerate headed for its best day since June after profit at its insurance unit helped the company these gains here. I don't know what I'm saying. Dave Wilson, step in here for a little bit more as to why Lowe's is rallying.
Okay, let's be clear. We're talking about the Tisch Family's holding company, LOEWS, not the home improvement retailer. And it's a bit of a grab bag of businesses. You mentioned insurance. They have a 90% stake in CNA Financial, which is also publicly traded. They own hotels. They have gas pipeline or energy pipeline partnership, Boardwalk Pipeline Partners. And they had a majority stake in Diamond Offshore Drilling, which filed for Chapter 11 bankruptcy in April. It's a real grab bag of businesses. There's absolutely no analyst coverage of this company, and there hasn't been since February. It's the only stock in the S&P 500 with no analysts following it, reflecting, no doubt, this grab bag of businesses they have. So in terms of their latest quarter, it's all about insurance at Lowe's. CNA Financial, their earnings doubled from a year ago. And what it came down to is that they had higher net investment income. Their premium rates went up. They had plenty of new business, and they didn't spend as much once you take out the effects of, catastrophes and adjustments from a year ago as they did in the third quarter of last year. It's what they call the combined ratio. It's a pretty key gauge for insurers. They certainly had catastrophe losses tied to storms, as they did, say, in the second quarter, but it didn't overwhelm the business the way it did last time. And really, the other units didn't do so well. Boardwalk's earnings down, no surprise, with energy prices being what they are. The hotels have a loss. So it really does come down to insurance for this company. And, they managed to do okay. Even with, the things we're dealing with in energy, and certainly with the hotels, notably the Regency right there in Manhattan, not all that far from Bloomberg World headquarters. So, put it all together, and Lowe's is headed for its biggest gain since April.
One to watch. Dave, always with the context. We thank you, Dave Wilson. Now, let's focus on what's coming up, because voter participation is surging, with more than 80 million Americans already casting their ballots, if not more. We'll discuss the push to get U.S. employers to allow workers time off and indeed flexibility to get to the polls with Vote.org CEO Andrea Haley. Stay tuned. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen.
And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
So we'll have the conversations with the Bank of England in the latter part of this year. And then, we will address our policy around returning capital to shareholders at our year-end results coming up shortly at the beginning of 2021.
It's time now for Bloomberg Equality, where we examine the bottom line impact of diversity. Our focus this week on how corporate America is playing an active role in boosting voter turnout. We bring in Bloomberg's Scarlett Fu for more now. Scarlett.
Thank you so much, Caroline. The 2020 election is like every other election in that it hinges on voter turnout. But this time around, companies are playing an unusually active role, often by giving employees paid time off to vote. One nonprofit helping to drive this effort is vote.org, and its CEO, Andrea Haley, joins me now from Indianapolis. Andrea, great to speak with you. You are partnering with companies including Airbnb, Sweetgreen, Lowe's to enact voter-friendly policies. What does that mean in practice?
Yes. Well, wonderful to be here. Thank you for having me on. This year, we're seeing lots of companies show up and wonder how they can be part of building a healthy and thriving democracy. And so we've had 900 companies that have joined vote.org for paid election time off. But it also means things like allowing people that time off to not be time bound. So if somebody wants to volunteer on election day, we advocate for that. And if companies will disseminate information on how people can vote by mail and what the polling hours are and what the rules and regulations in your state are, we also advocate that companies join us in doing that work, because we know that employees trust hearing that kind of information from their employer.
And how long have you been pushing this initiative? I mean, 2020 is different. We keep hearing from everyone, but was this in practice in 2016, and how did the numbers compare?
Yes, we started this initiative in 2016 with about 100 companies that joined on, and the rest of the companies joined on this year. So this year we've seen, of course, outsized enthusiasm and engagement in what it means to kind of be a vote-friendly company and what it means to really support workers. And I think that part of this was born out of the events of this summer and the protests this summer, too. A lot of corporations started looking at corporate social responsibility and racial equity, and then connected the dots between access to the ballot box and creating racial equity. And so that's been really exciting for us to see. And we estimate that over 1 million people will be affected by our vote.org paid time off program.
So that's interesting that the protests over racial justice back in the spring led to a spike in interest, certainly in traffic on your website as well. Were the protests a motivating factor in registrations for both blue areas and red areas?
Yes, all across the country. I think what we really saw was that it was a motivating factor for younger people. About 60% of the people who use vote.org are 35 and under. And so we saw, 293,000 people register the first week of the protests this summer. But we've seen increased interest really since January. This has been a really unique year in the amount of enthusiasm and interest the younger generation has.
What is your confidence that these voter-friendly policies at companies will outlive this particular election cycle?
Confidence is high. I think everybody is looking now at these elections and saying, 100 million people did not show up to vote in 2016. What role does a company have in making sure that people can vote and have access to the ballot box? We know among non-voters, over 30% say that scheduling conflicts with work or school hold them back from voting. And so I think that a lot of companies, now that this is on their radar, are making these changes. And some companies, it takes a tiered effort to make them. They start with vote-friendly policies and then work their way up to paid time off, and other companies just go out right ahead and start to give the paid time off. But I think that there's been a re-examination of what is the role of corporate America in making sure that we have a healthy and thriving democracy. And I think that they realize it's good for business as well.
Now, surveys show that Democrats tend to vote early while Republicans tend to vote on election day itself. What does your data, what does your experience show so far?
Yeah, I mean, we're having huge turnout in the country right now. It does seem to be that both Republicans and Democrats are turning out in high numbers. Young people are really making a big difference this year and showing up, which is exciting because we know that when a younger person shows up, that if they participate in 2 elections, that we're likely to have a lifelong voter on our hands. And so that is really great because voting is a habit. And we're seeing a lot of infrequent voters that are showing up. So people who may miss an election cycle or 2 are really paying attention right now and making their way to the polls. And really, it depends when you're talking about the breakdowns of Republicans or Democrats, it depends on the state. Early voting in one state may look different demographically than early voting in a different state.
Sure.
So this year is a pretty unique year. And right now what we're seeing is that, I think that the big takeaways are that young people and infrequent voters are showing up.
Now, taking a step back, Andrea, you began your career as a Democratic campaign fundraiser / organizer. I'm sure you get pushback on Vote.org's stated identity as being a nonpartisan organization. How do you respond to that?
I think we don't really care at Vote.org. We can't pay attention to who you're voting for. We really care about the democracy building work of how do you make sure that everyone who wants to participate has the ability to do so. Like in our country, we have 50 different sets of rules and because every state is administering its own election. And so at Vote.org, what we focus on is making sure that there's really transparent information on the site that just speaks to those rules. So a voter can go on, know how to register, know what kind of ID they need to show up, know, any other information they need to participate. I think that the reason why we're so trusted is because we don't have any partisan leaning. We don't do any partisan messaging, and we make sure that that whether it's a conservative voter who wants to register or a Democrat who wants to register, everyone has access to their democracy.
Very quickly, Andrea, what happens on November 4th for Vote.org? How do you prepare for the next election?
Ooh, that's a great question. I mean, we're in a really unusual year. So I think what we'll do, hopefully our team has been working around the clock. So hopefully they'll get a little bit of R&R. But I think we'll dig in deep because the work of building a healthy democracy is year-round work. I think that what everybody's woken up to in the last few years is that you can't come in and out around election cycles. You really have to make sure you're staying engaged year round and on-ramping a new generation of voters. We had 4 million people turn 18 before this election. We're going to have a whole bunch of people to on-ramp for the next election cycle. And I think civic education and making sure that everyone has access to going ahead and registering as soon as they're eligible is something we'll focus on.
Andrea Haley, great to speak with you. Andrea Haley is Vote.org CEO. From New York, this is Bloomberg.
it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
I'm Mark Crumpton with Bloomberg's First Word News. It's down to the wire for President Trump and Democrat Joe Biden. Both men are making final pitches to voters in key battleground states that likely will determine who wins tomorrow's election. Today, the president kicked off a run of 5 rallies in 4 states: North Carolina, Pennsylvania, Wisconsin, and Michigan. Mr. Biden plans to spend most of the day campaigning in Pennsylvania. The Democrat also stopped in Ohio, a state Mr. Trump easily won in 2016. The president is signaling he will pursue an aggressive legal strategy to try to prevent Pennsylvania from counting mailed ballots that are received in the 3 days after the election. The 3-day extension was ordered by Pennsylvania's top court. The U.S. Supreme Court refused to block it. President Trump called that decision, quote, terrible, and added that once the polls close Tuesday, quote, we're going in with our lawyers. Italy is taking new steps to try to stem the spread of COVID-19. The measures include closing shopping malls on the weekends, shuttering museums, and limiting movements between regions. Prime Minister Giuseppe Conte also says he will enforce a nighttime curfew. Conte told lawmakers the restrictions will vary by region depending on how severe the outbreak is in each area. Former National Security Agency whistleblower Edward Snowden is applying for Russian citizenship. Snowden and his wife are expecting a baby. He cited the child as motivation to become dual U.S.-Russian citizens. Russian President Vladimir Putin granted Snowden asylum in 2013 after he revealed highly classified NSA surveillance programs. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
We are counting you down to the close. Just 1 more hour left in trading. I'm Caroline Hyde.
Stocks are up, but they are pulling back from their highs on the day. I'm Romaine Bostic.
And I'm Taylor Riggs. Election jitters, they're upon us on this election eve. And as we said, you guys, 58 minutes left until the trading day on this election eve. I want to flip up the board because, Romaine, it is these IMAP, these different sectors that have caught my attention. This is what JP Morgan strategists were talking about when they talked about the rotation out of tech on the bottom of your screen into financials on the top of the screen. That story is playing out today. I want to flip up the board because another story that's playing out, it is all about the election. Take a look at this. Spot VIX, according to Stuart Kaiser at UBS, 12 points above fair value. So you're seeing rising VIX now, lower VIX in the November and the December contracts. Election risk, Romaine, happening now.
Yeah, obviously, election risk on everyone's mind. Zach Griffiths, of course, rate strategist over at Wells Fargo, said this is going to be the most consequential week for markets in years. And one place where it's going to be playing out is in the Treasury market. Take a look here at some of the bets that we've been seeing. The open interest white line here on Treasury futures, 30-year particularly, has been going higher. A lot of those primarily puts. You see that blue line, that's your 30-year yield. There's already been a bet that's taken place basically since the end of July going forward here that we were going to see a sell-off in Treasuries. We were going to see yields rise. The general bet here is that's going to be the scenario post-election. But whoa, Nelly, if we don't get the outcome that the traders are looking for, that so-called blue wave, you're going to see a major reversal here in some of those bets, Caroline.
Perhaps a major reversal in the bond market. I love that we've gone cross-asset. But I'm going to go back to what Taylor was saying at the beginning in the rotation in sectors in equities, because this is what JP Morgan was putting out its note, really talking about, hey, it doesn't really matter about the election. We believe the markets are primed for a broadening in leadership. The sector and the style rotation is likely to get underway irrespective of U.S. elections winner. So they say, hey, it's time to dial back on technology. They go neutral after 2 years of being overweight. Instead, they're saying, look, now it's potentially to get into financials, into insurers. This is one I'm really watching on. And in fact, Brian Chapada was talking, of course, our own Bloomberg opinion writer, saying that PIMCO was kind of calling this in the bond market a little bit ago, Romaine.
Yeah, a major week here. We all wore good shoes today just for this. Let's bring into this conversation Kevin Nicholson. He's Global Fixed Income co-CIO over at Riverfront Investment Group, which has $7 billion in assets under management. Kevin joining us today from Richmond, Virginia. Kevin, a lot to parse this week. What's on your mind most of all?
I think the big thing that's on my mind is whether or not we do get that blue wave, whether we're going to see interest rates go up or if we're going to see them go back into the range that they've been in over the last 6 months, which has been that 60 to 80 basis points range.
Will we, if we don't, let's talk through the first scenario. If you get a complete upheaval, a complete surprise, no blue wave, Kevin, what are you doing on the night of the election outcome and the Wednesday?
Well, we're a long-only shop, so we've already positioned our portfolios where we believe things are going to go. Our portfolios are positioned so that we are looking at post-COVID world, things that are going to do well in the post-COVID world. And so that's where we are positioned on the equity side. And in the fixed income side, it's been pretty much the same story for the last 9 months. And that's where we're long in the front end. That's where we're taking our credit bets. And then on the back end of the curve, we're long some treasuries, and that is to act as a shock absorber in the portfolios for when we get the risk off moments.
Long on the long end of the portfolio, how much of that as well is driven by Jay Powell, whom we will also hear from later this week?
Well, I think that when you say how much is driven by Jay Powell, I'm assuming you mean like how the long end will react?
Yeah, just general lower for longer.
Yeah, I mean, well, you know, Jay Powell is really focused on the front end. He has the ability to keep those rates there lower for longer. I think the back end of the curve is really going to be dependent on whether or not you get stimulus. If you get a huge blue wave, if you get a huge fiscal stimulus, then you'll see the back end of the curve rise. However, the Fed is not going to want the back end of the curve to rise too high because it also wants to control the mortgage market. And that, if you think about what housing has done over the last 6 or 7 months, housing has been a boom for the investor because it has also created consumer net wealth. And that's also been able to fuel consumption during this period of time. And so that's where a lot of wealth is stored right now. And the Fed doesn't want to mess that up.
So, but do you think that the Fed then it has enough tools, I guess, at this stage to facilitate not necessarily keeping rates low? We know they can do that, but to actually facilitate additional lending, because there did appear to be a little bit of a slowdown in some of the lending in the mortgage market, either from the demand side and what we've learned so far to a certain extent from the banks on the supply side as well.
Well, I think you hit the nail on the head when you said on the demand side, the Fed is willing to lend. You know, their job is to lend, not spend. And so they are willing to continue lending. However, the demand has to be there. And one of the things that you've seen recently from the Fed is that they have, in the Main Street lending program, they've actually lowered the minimum loan. So in order to try to facilitate more loans. And so I think the Fed has plenty of tools at its disposal. It's unfortunate, however, that the Fed has to meet this week when you're probably not going to get a definitive winner either tomorrow or in the next few days, because, you know, some states don't begin to even count their votes until after tomorrow.
Kevin, we see plenty of confusion as the run up to this, and we see plenty of, well, correlations seemingly very much not quite working the way they usually would. We've got stock markets higher today, but we've also got bond markets, US Treasuries trading higher, yields coming down. On Friday, we saw that 60-40 portfolio really not working for you either. What are you making of these correlations at the moment?
Well, I think on the fixed income side, I think that you are starting to see the bond market kind of hedge its bets a little bit. Last week when it broke out to that, you know, up to I think it was 87 basis points. It's done that twice in the last couple of weeks, and it has been yet to go higher. And I think that from a fixed income standpoint, investors are starting to hedge their bets and say, well, what if we don't get a blue wave? And so that's what you're seeing the rally come from today. On the equity side, I think that the pullback has just been it was kind of a quick pullback. I don't feel that it's going to be a deep pullback, because my belief is that as we get past this election and get rid of this uncertainty, we will start to move higher. We have three things that really has been the focus on investors' minds. It's been the elections, it's been COVID, and it has been stimulus. So we get one of those things out of the way, at least in the next week, and then we'll see how the COVID plays out. And then the outcome of the election will help facilitate what the stimulus outlook will be.
Clarity, hopefully building. Kevin Nicholson, Global Fixed Income Co-CIO, always great to have you with us from Riverfront. We thank you. Now, coming up, China bracing for a Biden win, how the country's preparing for a world without Trump after being whipsawed by geopolitics. Plus a burst of energy, why renewable energy firms have surged during the final stretch towards the election. And it's a shift in global currency power, why Ray Dalio sees the yuan will be the reserve currency faster than expected. All that and so much more coming up for you. Stay tuned. This is Bloomberg.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
All right, this is Bloomberg, the countdown to the close. We are counting you down to the close, 47 minutes to go here towards the end of the trading day here. Let's get a quick check on where we stand in the markets right now. The S&P 500 a little bit off the highs of the day. 7-11 sectors are in the green on the day. If you're looking for tech leadership, not there today. That's been the decliner on the day. You're getting bids, though, in energy, in materials, and in some of those industrial names. Also seeing bids come in here to the dollar up for a fourth straight day, though we are seeing a little bit of a sell-off in the Treasury market today. Definitely off those highs on the day with regards to prices. And you see down there at the bottom of your screen what's been going on in the emerging market space. A little bit of strength there. Remember, we got that data overnight out of Asia. A lot of those IHS market manufacturing numbers providing a little bit of a boost of confidence about the global economic recovery. All right, let's turn now to what's going on with Ray Dalio and Bridgewater Associates, the founder and co-CIO over there, saying that the yuan is going to become the reserve currency faster than current expectations. He spoke exclusively with Bloomberg's David Ingalls at the Hong Kong FinTech Week.
If you look back throughout history, that move puts money into the system, devalues the currency, and causes stocks, gold, and other reflation assets to go up. So that's what we're seeing. And so when you look at history of those, there were three major currency empires. The Dutch and the Dutch guilder followed by the British and the British pound, and the U.S. and the U.S. dollar. And they have to do with which are the largest trading countries, because they bring their money around the world. And there's that cycle. And that cycle now is having China is now the largest trading country. And you're starting to see the development of capital markets in China that are open to foreign investors. You're starting to see, you will see the internationalization of the renminbi. You will see opening capital markets. You'll see the development of the financial center. That is all part of that pattern that's happened over and over again. I don't believe the renminbi will be a viable reserve currency quickly, but I do believe it'll happen much faster than anybody expects. So if we were to take the next 5 years, the question is, what is the storehold of wealth in the meantime? And that's why you're seeing the movement into other financial assets.
One thing that constantly comes up, with the world looking to start increasing their exposure to China. I mean, it's an issue with some, it's not an issue with everybody, is the debt issue. And obviously part of that progress, there has been, a decent amount of debt that's been built up. Do you think, Ray, China has a debt problem?
The basic rule of a debt problem is it in your own currency or not? If it's in your own currency, there are lots of ways of dealing with it. You can restructure it, you can monetize it. If you take a debt, typical write-down of debt is something like 30 or 40%. If you take that debt, you put it on the government's balance sheet, and you write it down at 2% a year, it's not a problem. You renegotiate the interest rate. If you can control it in your own currency, it's all manageable. Japan is a good example of that. So, no, I don't believe that it has an unmanageable debt situation.
David Ingles there with Bridgewater Associates founder Ray Dalio. Now, let's go to check on the rest of the company news. Moving as we head towards this close. Taylor, latest business flash headlines with just 45 minutes to go.
Yeah, we're going to start with Clorox. They had a big fiscal first quarter. Profit more than doubled from a year ago thanks to rise in sales of wipes, disinfectants, and personal care items during the pandemic. Clorox says it expects sales growth to slow down, though, in the second half of the fiscal year. And the world's largest movie theater chain has filed to sell as many as 20 million shares of stock to help stave off bankruptcy. That's 5 million more than AMC Entertainment had proposed just a few weeks ago. AMC warned that if it can't raise enough money to meet its obligations, it would file for bankruptcy or seek an out-of-court restructuring. Caroline, back to you.
Now it is time for our Options Insight, Taylor. Abigail Doolittle's right here. And look, you've got to be looking at volatility as we all head towards this election.
How can we resist, Caroline, on this, the election eve? Christian Fromhertz of Tribeca Trade Group, thanks so much for joining us on this important day. And what are you seeing relative to the VIX and other indicators in terms of the election? Might we know who wins by Wednesday, or do you think it could take a few more days? Some of our guests, Christian, are telling us it might not be until December when we know who the next president is.
Yeah. Hey, Abigail. I think we're seeing a couple some mixed signs in the market. Starting with the VIX, it has gotten a little bit heightened. We are looking at, a decently higher VIX than where we were back last election. We're looking at a 37 right now. So that is heightened. It hasn't really moved too much the last couple days. We're looking at 3 inside days. So it does kind of seem like it is waiting for this type event to get through. And then we may see some clarification on that. So, I think inside days are really, you can't make too much of them. They're kind of, a move so far, right? We have to look into the prevailing trend, which has been higher in the VIX. So we have to be mindful of that. But then if you look at the fixed income market and if you look at credit spreads, I think they're telling us a different story.
Yeah, so what story are they telling us? Because it seems as though they're really not moving all that much. So if it was a real risk-off scenario that market investors overall were positioning for, you think that you would see those blow a little bit wider?
Right, exactly, and we're not seeing that right now. If you look at, comparable, 10-year U.S. Treasury 10-year to what high yield is doing, usually that'll give us a good sign that something is not right in the market, and there's a little bit of it's unstable. And right now we're not seeing that. So I view that as a good sign, and I view that, while there is a lot of attention, that's going to be on the next couple days, but the fixed income market, I think, is telling us that, we could possibly get through this and then on to the next greatest event, possibly the Fed meeting on Wednesday.
Well, putting aside who actually wins the election, something interesting in 2016 into the 2 weeks of the election, those were both down weeks and then up and away the election week. And some were making the case that last Friday could be a similar election cycle low. If that's the case, you like small cap value.
Yeah, I mean, just kind of sticking with, what we're kind of seeing on the tape right now and what we saw last week with earnings, even though some of the big tech names and consumer discretionary names put in pretty good quarters, it didn't look like, investors wanted any part of those names and they were being sold off. So for now, I think the short term right now is just kind of a little bit of a rotation into some of those under-owned areas that are in value right now. So, I think IWN, which is small cap value, is a nice way to play the theme if you don't have a lot of exposure currently to that group.
Christian Fromhertz of Tribeca Trade Group, love your commentary as always and the IWN call idea. Thanks for joining us for Options Insight. And from New York, this is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The time has come to elect the next president of the United States, and the stakes could not be higher. Two candidates, two very different paths for the future of the country. I'm David Weston. We will bring you the results as they unfold live on election night. Join us Tuesday, November 3rd at 7 p.m. Eastern Time on Bloomberg Television and Radio.
Mostly, I'm confident because we have so many shots on goal, really an unprecedented number so quickly. So I think science will win in the end. It's just hard to pick the winner at this point in the horse race.
We're, of course, keeping our eyes on how the election impacts the U.S. and then, of course, emerging markets. The big theme after 2016 was the big reflation trade, massive strengthening of the Bloomberg dollar index. Now, recently, you've had some big dollar weakness, which, of course, has been a boost to emerging market assets. What happens, though, if that reverses and you start to get some more dollar strength? Well, here to answer that question, Sherry On, the host of Bloomberg Daybreak Australia and Daybreak Asia, and more of our emerging market action. Sherry, what are you hearing about what may happen